It has come off considerably from what it was, now about 65 odd points. So bobbing between 40 to 80, if I can use that term. Stay tuned. We'll be right back with a very important conversation.
Some moments in life are lifelong. Some memories are lifelong. Just like Tata Power Solar Roof, best quality solutions, lifelong service guarantee and unmatched expertise. Ye on the quality lifelong.
हाथ, ये जो हाथ है ना, सिर्फ लकड़ी ही नहीं, हमारा कल भी तराशते हैं। बंद हो या हो कोई स्ट्राइक, इनका शटर हमेशा खुल जाता है। इन हाथों का यही तो आपसे नाता है और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
In a month that moved markets, shifted diplomacy,
the entire world,
and stirred political battlegrounds, India chose its news carefully. NDTV India and NDTV 24/7, #1 on YouTube. NDTV Network, streaming India's trust, leading India's conversations.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come. First India tour.
Welcome back. You're watching India Market Open. We might open with an uptick. We'll have to wait and see if that uptick lasts by the time we get to 9:15. And we'll have to see if it's sold into immediately, because the news right now is quite mixed coming out of the Iran war. But focusing on what's happening with listed companies back home, DLF has sold properties worth around 5,000 crores to NRIs. That's non-resident Indians during the April to December period of the current fiscal, accounting for nearly 1/3 of its total sales and bookings. With uncertain geopolitics, how is the company looking at the current scenario? Before we speak with DLF, Puneet breaking it all down for us.
Well, thank you for that. It's definitely been a strong sales definitely to the NRI community in terms of DLF, and that benefit is visible in the numbers as well. So, as you rightly mentioned, 5,250 crores of worth of properties sold between April and December, and largely NRI is contributing to almost 32% of that number. DLF's total sales bookings stood at almost 16,000 crores for in the 9 months of FY26 as well. So, largely as part of this conversation, as one of the key factors of how DLF has benefited if this is system-wide, and also one key factor on what's happening currently between the Jan to March quarter as well, because we've seen the geopolitical uncertainty and led by NRIs as well. If that trend has continued in these last couple of months, will be something to watch from this conversation. But a very interesting fact nonetheless of the growth of a newer segment essentially, which is now reflected majorly in the numbers as well.
Okay, thanks for that, Puneet. Akash Ori, Managing Director and Chief Business Officer, DLF Home Developers, joining us exclusively this morning. Mr. Ori, thank you so much for speaking with us and joining in. So this was for April to December, when it was a very different world. I'm wondering what's been happening in the last 2 or 3 weeks, especially from clientele in Gulf countries. Do you think this trend that you saw from April to December of NRIs coming in and buying will reverse, or will you see even more of a flow?
Well, thank you for having me on the show. Good morning. Well, I see this, the geopolitical issues around the world have been happening, and the NRI business of DLF has been growing year on year. And I feel that what's happening today, the NRIs today have chosen to invest in good properties back home, which are commensurate to what their lifestyles are wherever they are in the world. And that has been a trend that I'm seeing for over the last 5 years at least. DLF itself, I've seen year-on-year growth of about between 14 to almost about 17-18% on the NRI sales year-on-year.
Okay. Mr. Ori, good morning, and this is Alex here. I just want to double down on that question that Tamanna asked, which is, have you seen increased inquiries just particularly over the last couple of weeks?
You know, what's happened is I was right there when the war broke out. In fact, I was in Dubai, and I can tell you the day it happened, on the 27th of February, is when we were there for meetings. And I still recall very, very clearly the last meeting we had, and the customer said that irrespective of what happens, I'm going to be investing in India. So I see it's too early to say what's happening there right now, but I am seeing inquiries, I am seeing calls, and I'm seeing business happen from the GCC.
Okay, and if you were to quantify that, you're saying that, so for example, if a third of your business over the course of the first 9 months of the year has come from non-resident Indians, do you anticipate in the fourth quarter that that number could be higher?
I see that's at this point in time, it's too early to say, but I see this happening for sure. I mean, obviously, what is happening there is of concern to everybody. But I see a lot of investments coming in from the GCC back home in India, especially in the real estate this quarter and quarter after.
Yeah. Akash, good morning. Neeraj here. In fact, my question was going to be slightly longer term. Do you reckon that this will be a trend independent of how and when the conflict eases off? It's a large NRI population in that region, and without the war constraints, even in general, with the Indian infrastructure showing signs of pickup, do you reckon that this will be a longer term trend wherein the sales month on month, year on year, quarter on quarter will show an uptrend for the foreseeable future?
Yes, Neeraj, I see that happening. I mentioned that I've seen that happening over the past 3 years as well. And I see this uptrend with the outreach that the government is doing with the Indian diaspora. I definitely see a lot of a movement. I see the Indian diaspora investing heavily in the real estate sector, also because of good regulation and strong regulation. I feel that that has instilled a lot of trust in the Indian system. So I see that happening for sure.
Akash, the second question is what about the pricing? And one is the demand-led pricing. Okay, yeah, I think we got that frame slightly wrong. Okay,
Yeah.
But let me get that question going. One is the demand-led pricing that naturally would come in, and I'm not talking about marquee projects or one-off projects, but in general, is pricing moving up, average selling price, and by how much? And two, because of this whole cost rise that has happened and could happen because of the conflict, could there be a forced price hike in order to maintain margins?
See, DLF has always maintained margins, and that has been our primary focus. We are not on the treadmill otherwise. But I see, yes, as I say to you, there will definitely be some price rise. But as our contracts stand in businesses, especially ours, there is nothing much that we can pass on beyond some percentage that is agreed on. So that will be on us. I see that definitely price in the near future. I see that rising. But with certain margins that in the initial future, I think it's all covered. Going forward, I hope this doesn't last long. But as far as the business is concerned, I feel that the war is topical right now. But I have seen this outreach of the NRIs that we built over the last couple of years and more. I see that business continuously growing. There is this fondness, I won't call it newfound, but fondness of the country in the country's real estate that is now driving this growth, especially in our business in DLF.
Okay. Mr. Ori, I just want to check on the pipeline as things stand right now and whether you've changed any plans. Because one would assume that with an influx of more NRIs coming in to buy property, and if you're talking about your own fixtures, the fixtures that they might be looking for would be the larger fixtures, right? And I'm wondering about the land bank that you currently have, about the development plans that you have. Can you give us a sense of where things stand right now?
See, we've given our annual guidance. We work on a 3-year plan. We've given our annual guidance. Our launches are slated to be as they are. I see, and our let's say Gurgaon or Mumbai launches are $1 million and above. So that doesn't change. Business plans are made for the year. So I think that plan is as is right now. We are getting response not only from the GCC, from elsewhere as well. And I think that will continue. So as far as the margins are concerned, they're reasonably intact.
So I assume that there has been no change in your inquiries from the GCC in last 2 weeks from that region?
There is an uptick. There is definitely an uptick, and there are inquiries. But at this point in time, I think let's be honest, people are concerned. They're busy in what they're doing. They're trying to figure out their lives. I don't think they're going to jump into business immediately. But if you're asking about inquiries, yes, there've been quite a few.
Okay, we'll have to see if they convert. Thank you so much, Akash, for joining in, and I'm glad you've gotten back home safely from Dubai.
Thank you so much. Thank you. Thank you for having me on the show.
Sure. Kunal Rambia joining in this morning. He's fund manager and trading strategist at the Streets, and of course Parag Thakkar with us, head fund manager at Fort Capital in the studios. Parag bhai, very good morning.
Good one.
You think that 3 weeks in, this is the 3rd week of the war, it's time to look at markets more favorably or wait and watch?
See, basically for me, nothing has changed because crude oil Brent remains above 104. So up till now, nothing has changed. So I would just go with that staggered purchases on every dip, that kind of strategy, not being overexcited about it. At the same time, raising cash when market gives you opportunity. Of course, market is not giving opportunity right now from last 10 days. But I would say that that has to be we have to go by every day. That is the thing. Of course, my structural themes are same. ICICI Bank, HDFC Bank, as I told you, these are the stocks which I would, or HCL Tech kind of stocks which I would like to buy on every dip. That strategy continues. And sometimes, defensives protect you. For example, pharma stocks, right? They have not fallen in this. So when they protect you too much and they give you too much alpha, you can sell that as a dynamic fund manager to and buy something which you like, which has fallen significantly, like ICICI Banks of the world. That is the strategy.
You've said, Parag bhai, in the past that you don't like silver and gold, but assume that people have held on to silver and gold all this time and they've gained substantially. Would you book some of that out and deploy right now, asset allocation?
So I have never seen that. I have never said that I don't like gold.
Okay.
Gold, I would say, is a mega cap. It has to be a part of your portfolio. It has to be a 10% of your portfolio at any point of time. Silver was something which was going more on speculative things and more on FOMO. And so that today I just wanted to caution people not to go in that FOMO.
But what about gold?
So
would you sell gold right now?
Which you can hold on. Gold is something I'm not suggesting to buy of course somebody has to buy for marriage and all, that is okay.
Yeah.
I'm not suggesting as an investment option as of now today. Because right now, see, everything is fearful, right? If you give a little bit of longer time, this time will prove as the best time to buy equities.
That's what I'm asking. So would you sell a gold ETF right now and buy equities? My question.
Very tough question right now because we don't know what is going to unfold in the war. If I tell somebody to sell gold and tomorrow if this thing escalates,
gold prices go up.
This thing escalates. If this war escalates, then there is a problem.
I think gold has anyway underperformed considering all things considered, and that too artificially because of the dollar index. Otherwise, gold should be much higher right now.
Gold and silver both have not performed because dollar index has gone.
And because they've run up so much till this point.
Yeah. So absolutely. Absolutely.
So sell pharma if you want to and buy some of the fallen
This
down
is
names,
from a
not
fund
for
manager
gold.
perspective, not from a, I would say,
No,
a
but even
retail-
for a retail guy, Parag bhai, if by chance they have held on to something which hasn't fallen, and some of the other blue chips where the valuations have come off,
Yeah,
are
because
worth buying
of the
into.
war, because in this war fear, people fear that asset quality will be an issue. So we met Bakshiji in a conference of ICICI Bank, and he said that we are just 7% of the total loan book in the system, right? And even during COVID, we did not have any asset quality issue. When everything was shut for 1.5 years. This is a temporary problem. People have to realize that this is not going to cause some very big asset quality issue at least in large cap banks where they have lended prudently.
Yeah. No, frankly, even some of the smaller banks that we've spoken to have kind of cited similar things as well, except for one or two odd instances that might be there. So, valid point, Parag bhai. Thank you so much for that. Let me get in Kunal Rambia, fund manager and trading strategist at the Streets, on the conversation as well. Kunal, thanks so much for joining in. There's a brief uptick that we are likely to see in the morning. Since the market seems to be a sell on rise market, would you use this opportunity to create a fresh short at all, or no activity for the near term? In the first 20-25 minutes.
Good morning, Neeraj bhai. Thanks for having me on the show. So as far as Nifty is concerned, yes, certainly this bounce can continue for, I think, 300 to 400 points more on the upside. The levels to watch out will be 23,500 to 23,600. Near that level, one can think of shorting index. But as far as the stocks are concerned, again, I'll go very stock specific rather than just, bombarding on the short side. I will also find out some good opportunities like in fertilizer sector or say pharma sector where good buying opportunities are available, and consider this correction as a buying opportunity for those counters.
Did I hear the sector fertilizers, Kunal? Are you looking out for an opportunity there? If so, why, and what are those stocks?
Absolutely, Neeraj bhai, fertilizer and chemical sector. So the first counter which I like the most is the Archean Chemicals. Now look at this counter consolidating really well and near the low itself. This counter can do really well even in the time to come. So with the stop loss of around 580, I think one can go long on this counter, and the targets can be 630. And this, if at all, turns out to be the perfect target. Keep trailing the stop loss because a broader consolidation breakout is likely to be seen. The second is RCF. We saw good volume activity on the counter, and the counter is already near to the extreme low levels, right? So extremely favorable risk reward ratio is available on RCF with the stop of 115. I think one can buy, and the targets can be 135. Keep trailing the stop loss here also. I think these two counters can do good in the time to come.
Got it. Okay, several other counters are set to do well as well, and this is on account of fundamental updates. Let's take a look at this stock watch list at the start of trade today, and hopefully the texture of the market is supportive so that some of these positive developments get bought into. But Adani Power LOA to expand capacity, and this is from the government of Maharashtra, positive development. Indigo or Interglobe Aviation as well as SpiceJet, both of those listed companies, airlines have started to add fuel surcharge, and so this should be beneficial, at least to the extent that it's going to cap off or reduce the impact of the higher fuel charges that they will have to take on. Ramki Infra and ARM has bagged a significant project or order, 3,000 crore rupees or thereabouts. Fact, as well as the other fertilizer companies, the government has said that fertilizer stocks are adequate ahead of the next season, which is the Kharif season. HEG, IRB Infra, Senco Gold, all of these counters are seeing promoter buying, and quite a few over the course of the last couple of weeks as well beyond these stocks. Omni Engineering, strong Q3 has been reported. Hindalco has clarified that there's no halt in its extrusions business. Zydus Life has gotten a nod for a renal drug as well. Couple of more stocks to watch out for. Vatek Wabag, a joint venture the company is part of, has bagged a significant order. Bajal Projects has also bagged a significant order. A few stocks that could react negatively, and that includes MRPL as well as Chennai Petro. The OMCs are likely to pay lower price to refineries. And the IDBI bank update, and we'll get you more details on this as well. The government has called off the divestment, but there are significant updates in this specific stock that we will tell you about in just a bit. Kunal, I want to come to you on some of these names, and they've reacted both positively as well as negatively respectively, right? So in the past, you've seen MRPL, you've seen Chennai Petro, you've seen Interglobe Aviation react very sharply on one side or the other. Would you trade any of these or would you stay away?
So, Alex, I just heard you mentioning these counters. Out of which 3 or 4 counters I like the most. The first is, of course, MRPL. The only reason being there was a volume breakout seen in the past near 170, and with this negative announcement which you just mentioned, if at all that turns out to be near to 170, it can be a good buying opportunity. The second is Indigo. The risk reward ratio is extremely favorable. The only reason being May 2024 and November 2024, and somewhere in Jan 25 the counter was near to 4,000, and right now it's come back to those levels again, which is offering again good risk reward ratio. If the sideways consolidation continues, this can be a good buying opportunity. And the third is Ramki Infra, which I like the most. Counter is just holding on to its strong support level of 450 mark. Yesterday's session it was up by around 4.5%. So I think with the stop of 450, that can also be bought with the target of 600.
In fact, so Interglobe, Ramki, Infra, I'm going to actually get Parag Thakur's view on both. Interglobe maybe will be running into a bit of rough weather, though they have increased fuel surcharges over the weekend, as we had reported they would. Ramki Infra, is that something you track?
Yeah, so basically Ramki Infra, I've just had a look. It seems to be a good company. Generally in construction companies, the biggest problem is working capital. So if the working capital is in control, if there is new order of 3,000 crore which they have got, if they have got it from a good state government which has good capability to pay on time, then it's a good, because I saw they can do a EPS of around 40-45 rupees. Stock is at 480. I think the 52-week low is 375. It offers good risk reward in my view. But we have to ask management about how they are going to be paid on time.
So this company, by the way, was on KYC, Know Your Company, on NDTV Profit recently, just last week actually. Please do go back on our YouTube page and look at that very detailed interview, because on that show we do a full deep dive on one company and of course speak to the management as well. But let me go across to Soumya Sarkar that time in the morning when we talk about all the chatter from the dealing room. What are you hearing, Soumya?
Well, not much likely, given the fact that there is still a lot of volatility in the market, and though GIFT Nifty is suggesting a positive start, but from what GIFT Nifty was trading an hour back, we have come off. So it remains to be seen how the market goes throughout the day. Even if we open in a positive note, whether the gains will sustain or not is the big question that we need to watch out for. Few stocks or few sectors that dealers have highlighted. Firstly is the FMCG. Amid the current market fall, investors are moving towards this defensives. Dealers say that valuations are relatively cheaper, and FMCG as a basket has underperformed market overall in the past as well. So these are the two reasons. For Syngene, the stock was gaining on Friday despite the fact that market had crashed nearly 500 points on intraday basis, and the buzz on the street is that there could be some approval that could come in for one of the plants or one of the products of Syngene. So keep an eye out for that counter. And then lastly, it was delivery and couple of mid-cap IT names, Coforge and Persistent, that were seeing limited buy flows on institutional desk. Both foreign and domestic institutions have started to nibble around these stocks, and they have started to accumulate these counters at the lower levels in trade. So keep an eye out for these counters as well.
No, that's interesting. Thanks a lot for that, Soumya. But just thinking of a Syngene, for example, and in the EBITDA for the company in FY23 was about 940 crores. The trailing 12 months EBITDA even now is about 940 crores. The stock has come off from the highs, still trades at about 40 times trailing 12 months PE. So it's not a cheap stock, despite the fact that the high was 760 odd and it's currently trading at what, 421 odd. So just keep that in mind. But there could be a trading play out here, is what Soumya hears, because of some approvals that could come in. Kunal, any thoughts on Syngene?
Neeraj, in fact, this counter has come down from 960 levels to 420. And interestingly, on the Friday, we saw the highest volume which is recorded since last 1 year. So yes, if there is a follow-through buying, we can certainly look at this counter. The stop loss for this can be 400 and the first target can be 465, 470 and followed by 485. So yes, it's a clear thumbs up for the trading bet. For positioner, we'll have to wait for the higher top, higher bottom formation, which might take some time.
View chartically on Syngene. We mentioned briefly that the aviation companies have increased their fuel surcharges, and this is or rather imposed fuel surcharges, and this is on ticket fare, of course, because ATF prices have jumped quite significantly. Let's bring in Soumit Sarkar to tell you about the impact on the financials of some of these companies, or both of these companies actually. Soumit?
Well, definitely the surcharge that Indigo has imposed, which is being effective from March 14th, is positive for the company. Now, the surcharge ranges between 425 to 2300 rupees, depending on which route you're traveling. European routes have the highest surcharge of 2300, while on the domestic route, the surcharge is just around 425 rupees. Now, why this surcharge has been imposed? Because jet fuel or aviation turbine fuel, which is the fuel which is required by an airline, has risen to nearly $193.5 per barrel, as against $88 per barrel that we had seen before the war started. That is a jump of nearly 2.2 times. Now, aviation turbine fuel usually trades at a premium compared to what the Brent crude is, but because there's a lot of refining work that goes on to produce an ATF, and hence the price of ATF has always been expensive. But in the last 15 odd days, it has jumped nearly 2.2 times. Now, what will be the impact of this surcharge on Indigo? Now, the surcharge suggests that the revenue or the unit revenue could increase by around 6 to 7 odd %. Unit revenue or the revenue per available seat kilometer could increase by around 0.3 rupees per kilometer. And but if you look at the fuel cost, now pre-war the fuel cost for Indigo was close to 1.5 rupees. Now, given the sudden surge in ATF prices, this must have increased to around 3 rupees per kilometer. So this increase of just 0.3 rupees that we are seeing on the revenue side will offset just 20% of the total cost increase that Indigo could see going forward. So this clearly means that if fuel oil prices or ATF prices continue to remain at a higher level, there could be more such fuel charge that could come in going forward to offset the increase of higher crude oil prices. So that is one thing that we need to watch out for. Current surcharge just offsets around 20% of the total increase in cost for Indigo at this moment.
You know, so that's the question. At some point, do these fuel surcharges start impacting, flight volumes and other metrics beyond a point? Parag, I think we're some time away from that. People will pay these fuel surcharges because they have to.
Yeah, that is sure, but right now again there is some disruption in UAE, right? Again,
so yeah. So the latest is that all flights have been suspended temporarily.
Yeah, so that is the thing. So you will have to wait. So for example, so Indigo is a good company, great company, passing through some turbulence. So it's a good time to buy for person who likes this industry. I think good time to buy on every dips stagger. Like I like private sector banks, so I'm buying ICICI Bank kind of banks. Somebody who likes in the aviation industry, this is the time to buy slowly.
If you are that convinced about the aviation industry, well, it is one industry in the eye of every geopolitical storm. All right. Meanwhile, talking about banks, and because we've had so much conversation about banks, the fact is that the Bank Nifty has logged its worst weekly fall since May 2020, pressured by sharp sell-offs across both private and PSU lenders. What's adding to investor nerves is a warning that the ongoing Middle East conflict is introducing a fresh layer of macro financial risks for global markets. Sharad Dubey joining in with more details.
Well, interestingly, Nifty Bank has suffered its worst weekly loss since May 2020. And if you look at the important numbers, larger players also have given a big gains, given actually big losses. The Nifty Bank fell 7% last week, and Axis Bank, IDFC First Bank and IndusInd Bank, all of them falling between 9 to 11%. That's a big fall. And ICICI and HDFC Bank, they're having a good constituents support. That also fell between 4 to 5%, but nevertheless holding as compared to Nifty Bank, that fell 7%. But let's see the weekly performance, how Nifty Bank has performed. Last week was 7%. Before that, the March 1st week, it was down 5% and 1%. That means you can say cumulatively, you could say roughly 12 to 13% of downtick coming in the last 3 weeks itself. Since the war began, the biggest losers have been IndusInd Bank, IDFC First Bank, and also some PSU banks making it to the list, which includes Canara Bank, Union Bank, and PNB as well. Now, there was an interesting report by Citi also on the view on the bank, and they've stated that a new layer of a micro financial risk has come in, and this sustained conflict could actually trigger some of the pressure across multiple transmission channels. However, they've stated that they're entering into a juncture where there is a decade low GNPAs which are already there, and a robust capital ratio is something CET1 which we call, that's there, but impact is likely to be uneven with sector specific stress rather than a system wide issue coming in. Now, what's the preference from Citi? That's important. Private banks are demonstrating a superior defense characteristics, followed by PSUs and NBFCs, and these are the important picks which is coming in from Citi. But there was an interesting analysis also where we have taken the exposure to the sectors which are sensitive to the energy prices and the trade disruption. This is what we are seeing. This is fund-based and non-fund-based differences happening. Of course, SBI is having on the higher side 17.7%, and also Bank of Baroda makes it to the list. ICICI Bank, 21% of this exposure is coming in. But if you get into more details, HDFC Bank is roughly 5.1% for the fund-based, and RBL Bank is also on the higher side, almost 16.1%, and Yes Bank also 14.1%. So this is the sensitivity analysis of the banks which are exposed to the energy related exposures, and that's where some kind of stress might come in.
Sharad, thank you for that. To top it all off, so you've had that pain in private sector banks, in public sector banks also. Expect some pain in IDBI Bank. What we are learning is that the government has called off a long-awaited strategic sale because they got bids below their reserve price. Financial bids fail to meet the government's reserve price expectations, and they may cancel the current disinvestment process and bids. The move could also hit the FY27 disinvestment asset monetization target of 80,000 crore rupees. I want to actually come to you, Parag Bhai, on the analysis that Sharad just did. And on paper, everything about private banks and financials, everyone we speak to says if markets turn, we'll come back into financials. So that's everyone's common theme. But this part, do you think is not entirely accounted for? For example, an ICICI Bank's non-fund exposure to price sensitives at 21%. This could spoil the party.
I don't think so. Now, this is my clear view that ICICI Bank under Mr. Bakshi or even HDFC Bank, they have not taken any such very high, lumpy or risky exposures in the energy sector. And even if they have taken, they must have taken with a full, I would say, foolproof calculation, and it must be a calculated risk, and it will not, and with enough collateral security in their hand. So I don't subscribe to that view that that thing. Of course, banking is a leverage business, right? You earn 2.2, ICICI earns highest ROA, which is 2.3%. So by taking a risk of 100 rupees, they earn 2.3 rupees only. So you have to recognize that it's a risky business. That is why it is available at 10 PE on FY28 earnings, right? And
my point being that the management can be great, the bank can be great, everything can be stellar. But sometimes external factors are beyond control.
Yeah. But the point is that the amount of security which they will be having in these projects, because it's a asset-backed loan, right? So it will be very good. It will be taken care of. In my view, that is at least in ICICI, HDFC, I'm not worried about it, and also SBI also I would worry less.
Okay. On the charts though, Kunal, I want to come to you on some of these names, right? Because an HDFC Bank, for example, 20% of the 52-week high at this moment, and the bank index itself having come off quite dramatically from the 52-week high. So if there were, on a slightly longer term basis, if you were to buy into any of these, which would they be?
So Alex, honestly speaking, if you look at HDFC Bank from Feb 2021 till around September 2024, this counter was not really decisively breaking 830, 850 mark. Once it broke that level, it went up to as high as 1000, but it's back to that level again. So risk reward ratio is favorable for the counters like HDFC. If you look at SBI, the counter has actually started falling now. So I'll stay away from this counter until it comes near 950, 960 marks. And as as you discussed about ICICI Bank, this counter is now again reaching its very important support level, which is 1200. So I'll look at more of private banks rather than PSU banks, because PSU banks have run up too much. And the correction is not being as devastating as, which is seen in the other counters. So I'll stick to private banks for now and avoid PSUs for buying.
Okay, first rates beginning to come in on the pre-open session, and we'll wait for those actually to sort of settle. I want to pull up IDBI and see what's happening there. Because IDBI, we know now that the disinvestment has been called off, about 1.5% down, not half bad. On the winning side, Sumitomo Chemicals again looking interesting. So is Adani Power, Adani Total. I want to look at some of the city gas distributors. Gujarat Gas, let's look at Mahanagar Gas, let's look at GAIL, some of these which now have the kind of push you require from the government for wider adoption, and you might see some interesting move there, at least GAIL about 3.5% up. What else is going to be in focus and sectors which we should watch is something that we need to look at very carefully. But just wondering if Sumitomo Chemicals is something that is on your radar, Kunal?
So I have not really seen the chart of this counter, but if I open and look at it right now, I think, yeah, this is also coming out of good consolidation. So one can look at it. The support level to watch out for this will be around 360 to 365, and the targets can be 425, 430. But I'll still stick to those Archean Chemicals and RCF because that's where I find more comfort.
Stocks would be moving around. Keep an eye out for Reliance as well as Chennai Petro and MRPL. Now, MRPL and Chennai Petro could actually have a bit of a downtick. Watch out for Reliance as well. That one is down, but bring up MRPL is actually not reacting that negatively. Reliance is interesting. By the way, the government has notified the 2.5% stake on the large IPOs. Maybe that at the margin could be positive for NSE and Reliance Industries both. So keep an eye out for those two as well. And keep an eye out for Interglobe Aviation. Keep an eye out for some of those other crude sensitives too. Ruchit Jain is with us, Vice President Equity Research, Technical Research at Motilal Oswal. Ruchit, if we start flattish today or maybe marginally higher, is there a trade on the indices that you would do? Or would you trade specific stocks?
Yeah, very good morning, Neeraj. Very good morning to everyone. Neeraj, no doubt about the trend for the markets that the trend still remains on the negative side. We could see some pullback move based on certain data which are pointing at oversold setups. For example, if you look at the Nifty PCR, it's hovering around 0.75, and generally 0.6, 0.67 is the range where we usually get signs of oversold zone. If you look at the market breadth, out of 100 stocks, 93 stocks ended on a negative note on Friday. Similar case for the mid-cap space, and similar case was for the small-cap space as well, where out of 250 stocks, 225 ended on a negative note. So things are a bit oversold on stock-specific moves where we have seen some sharp corrections. But frankly, if we look at the index, then I would rather trading the pullback move. I would wait for the entire data to change. Because if you look at the recent entire correction, all the data which we directly correlate with the equity markets, for example, if you look at the FIS figures, last 15 days they have sold equities in the cash segment worth over 57,000 crores. The long short ratio is around 10%, means 90% of the positions are on the short side. And forget about short covering data. At current 88-90% long short ratio also, they are forming new short positions if you look at last 3 trading sessions. So even though the ratio is 90% on the short side, still fresh short formations are being there. Then we can see that the crude oil prices still around the $103 index, still at higher levels above it has surpassed 100 mark. Even India VIX at 22 levels. So I think that until this data changes, I would prefer not going aggressive long in the markets. There could be some in-between pullback moves, but it's a sell-on-rise market. Any pullback move towards 23,300, 23,250 should be used as a shorting opportunity.
Okay, sell-on-rise market. In fact, shorting opportunities exist. But Ruchit, on the individual stock spaces, what are the stocks that you're paying attention to this morning?
So a couple of recommendations, if you look at the stock specific moves, NTPC is one stock which we are recommending to on the long side. In fact, if you look at the sectoral indices as well, then energy is the only sector which has managed to show some relative outperformance in this recent fall which we have seen. Stocks like Coal India, NTPC, Tata Power, they have seen good price volume action. So I think this relative outperformance could continue. NTPC on the charts look very good. If you look at the positional charts, that high top, high bottom structure, corrections towards 20-day MA are getting bought into. So this is one stock which in such market conditions one can look to buy with stop loss below 375 for potential near-term targets around 400 and beyond. And Hero Motoko is another stock, but this is more on the short side. In fact, if you look at the entire Nifty auto index itself, I think after 10 to 11 months of uptrend, the Nifty auto index has given a breakdown below its 200 EMA on Thursday or Friday. And corrections are so sharp that even the stocks have breached their important supports. Hero Motoko has breached its consolidation swing low support. So we expect this relative downtrend to continue in the short term in the auto space. Hero Motoko one can look for shorting opportunity in the future segment with stop loss above 53.88 for this March series itself for potential targets around 48.70, 48.50.
Okay. All right. By the way, IDBI Bank now looking at like it's taking a little bit of an impact on account of that update, down about 7.8%. But remember, this is the pre-open session, just about a couple of minutes to go. Pull up LIC as well, just to see if there's an impact there, because there is an allied impact, as you would imagine, but it's not doing too much. LIC just about flat. It is time now to go to the big brokerage call of the day, and we've got Somit joining in, I believe Sharad joining in, sorry, to talk about HSBC, which is downgraded both IOCL, BPCL, as well as HPCL. What are they saying, Sharad?
Well, interestingly, Alex, they have stated that there is a crude squeeze. Of course, their higher prices are pressuring the margins. There's a downgrade for all the three OMC companies, and it's the whole rating is something which is coming on your screen. The higher crude oil prices has led to sharp cut in the earnings for these companies, and they're expecting marketing losses. The number, even at $75 per barrel, is something which we are seeing it's still negative for these companies. Now, ONGC is of course a beneficiary of this higher crude prices, but nevertheless, all the three companies in the OMC stocks are seeing a downgrade coming in from HSBC.
Well, thanks for that, Sharad. So oil marketing companies, there is, if this report turns out to be true, it's a bit of a relief for BPHP IOC for sure, that refiners will kind of restrict the passing on of the transfer pricing, and that could be positive for them, negative for, of course, the standalone refiners. So keep them in mind. As the pre-open rates settle down, we are almost at 908. Suffice to say that we are not doing anything rara on the indices either. The Nifty 50, I mean, that green may have been a bit deceptive because for now it looks like we are starting off in the red. 35 points, no surprise there. IDBI is the big loser. I wonder if LIC is coming off a little bit as well or no. Post that, no, not really, but IDBI is that big loser. And then there are some small losses, but some of the OMCs too are correcting, Hind Copper, etc. are correcting as well. So none of that bucket is looking very good. You know, Adani Total Gas is on a roll really. 588 or 589 now, yet again amongst the top gainers on the BSE 500. Ruchit, I'm tempted to ask this to you. What about Adani Total Gas? It's had it's saying what bear market at the current time, right? So how is it looking on the charts from a trade perspective?
So, Neeraj, I think there are a few stocks which are not related to the markets itself. Irrespective of where the market moves, they have their own momentum. So I think Adani Total Gas also recently, last week, we saw that the stock had rallied by about 16-17% if you see week-on-week basis. So certainly some sort of buying interest has been there in the stock at lower levels. But technically 650 is a hurdle which needs to be taken out for any kind of positional up move. So this could be taken as a pullback move, but 650 is the level that I would watch out for in case of turning the view on a positive on a positional basis.
Okay, as the pre-open session ends and we're just waiting for markets to open, a few other stocks and sectors that you could watch out for. Aviation companies, of course, will be in focus. Let's look at what an Interglobe is doing, a SpiceJet is doing, because fuel surcharge has been taken. Interglobe taking a bit of a knock. SpiceJet actually doing okay this morning. State-owned oil marketing companies, of course, are considering paying refineries a lower price. That's bad news for standalone refineries. MRPL and Chennai Petroleum seeing that pain, at least in the pre-open session. There's been some promoter buying, HEG, IRB Infra, Senco Gold in all three. And you might see a bit of a pop there. IRB Infra already showing signs. Government has barred piped cooking gas users from holding LPG connections. Plus, they're really pushing the LPG connection move. Sorry, the PNG connection, piped natural gas connection move. Gujarat Gas, IGL, MGL is something you should look at. Fertilizers, government sources saying we are well stocked ahead of Kharif season, nothing to worry. RCF still showing a down tick, and IDBI is going to be the big hit this morning, really, after government has called off disinvestment, about 10% down right now, at least 11% down, and that's going to get even more painful. News also coming in on paint sector hikes. This is Nuvama saying channel checks are showing that there have been hikes. So I want to look at Kansai Nerolac, Berger Paints, etc., and you might see some moves here this morning, but remember, whatever hikes they take will not really make up for the huge move in crude prices as of now. But to be fair, these crude prices will start affecting these companies also with a lag. There's an inventory lag that comes in, right?
Absolutely. Yeah. So it is going to affect everyone. See, in between, I heard that some people were bullish on standalone refiners, right? That day only I told, right, that if crude moves so fast, you cannot have anything which will benefit from this. Ultimately, everybody will lose in the short term till the crude is above $100. So you cannot be finding winners here. It's like, who will lose minimum, and you have to buy what you like in that particular sector, and you buy on dips.
So speaking of blue chips that have taken a knock, right? And we spoke about this at the start of the conflict when there was an impact for Larsen & Toubro in the Middle East, right? For its revenue business. And you were talking about, if I remember correctly, 3,700.
Yeah. But
right?
I have not bought yet.
You've not bought. It's currently at 34.53.
It's getting to interesting levels. And if somebody has a view, I don't have a view, unfortunately, that when this is going to end. If somebody, I was seeing on your channel, somebody said that it might end in 2 weeks. If that is a view, you should buy L&T today.
But Parag bhai, whoever you saw saying that will also have a very, very qualified view.
So
right now, the US president doesn't know when it's ending.
Yeah, so that's what. So I am not ready to take that view. That, okay, no, it is going to end tomorrow, so I'll buy the stocks accordingly.
Yeah, I think also a fundamentally negative development in context of the war is that so many nations are refusing to come and help the US to open the Strait of Hormuz. Trump is telling NATO, you better help me, otherwise it will get bad for you. They're not complying. Japan is saying, I'm not part of this. Australia is saying, I'm not part of this. So who is this coalition who's going to open the Strait of Hormuz? Meanwhile, people are making their side deals with Iran.
And therefore goes back to that point, right, that oil prices themselves are such a deep insider of when this is happening. If indeed the Strait of Hormuz was going to open, you would have seen that reaction first in oil prices. Somehow oil behaves always like the deep insider, no matter how much you think about it otherwise. And currently oil prices staying above 100 is not great news, by the way. I wonder though if oil upstream is that hiding spot. So Parag, you spoke about hiding pockets, right? Would oil upstream companies be those safe ports of call right now?
It will save you till the war lasts.
Exactly.
So that is the only thing. After that,
so therefore you're saying it's a punt.
It's a punt.
Okay, fine.
If you want to make that, if you want to just protect your capital, be a compulsive investor in market and protect your capital till war lasts, then upstream oil is the bucket. But that's okay. It can move up by 5-7% from here on. But once the conflict ends, it will come down.
Yeah, okay. Ruchit Jain, just about a minute to go for the start of trade. 30-second answer. What individual stocks from the pre-open session are you looking at that could be interesting trades?
So I think as we spoke earlier about the energy-related theme which can outperform, Tata Power is one stock which is looking interesting on the daily charts, where last week we did saw some good price volume action, and the stock has already gone through a decent time-wise correction over the last few months. I think one can look at Tata Power to trade with a positive bias.
Got it. Okay, Ruchit, stay on. We'll take in opening thoughts from you post the market open. There might be individual ports of call which might do well, like Tata Power, Adani Total Gas. Seemingly, some of these energy providers, etc., are actually faring okay. But the larger point is that we are not looking at a green on the screen. We are looking at a flat star. Now, can that change post-open? I think remains to be seen. Let the market speak for itself. These days, it's become almost fatal to try and predict what the markets will do in the first 5, 10, 15 minutes of trade. For now, in the red, with stable breadth, and now bobbing into the green as well. Like I said, it's become extremely difficult to predict what the markets will do in the first 5-10 minutes of trade. So let it stabilize. But this is, well, maybe not bad. Banks are okay. Maybe IT is giving that bit of a supporting hand, if you will. No, not it isn't. I think maybe the energy space. I think we'll get there in a moment. Just bring up the mid cap and the small cap indices. Mid caps are flat, as you can see. Small cap index will come up on your screen. Not bad. I think it came up from the advanced decline ratio that it's largely flattish. Let's get the heat map up on the screen and show you what is actually helping the index today. Wow, commodities in some fashion, and cement and steel out there. So Ultratech up 2%, JSW Steel, Grasim Those are the top three. There is some bit of strength in ITC and Trent and HUL. So consumption is up there. Commodities and consumption, you could argue those are the two. Adani Enterprises, Eternal are amongst the others which are doing well, and a bit more green than red. You know, even if this is temporary, this is pleasing to the eyes because frankly, आंखें तरस गई थी ये देखने के लिए. For now, it seems okay. Shriram Finance takes a hit again. ONGC, surprise, in the red. BEL in the red. Tech Mahindra, ICICI Bank, Maruti and Bharti Airtel. Well, no patterns here on the losers per se, but for the fact that some of the crude sensitives are down, more on the gaining side, that commodities and consumption are holding out for now.
You know, if I had to perforce look for a pattern, I would say companies that will benefit from rebuilding all the damage maybe in the Middle East could be on board there. And you're going to see a bit of that. It's the construction side, which is looking good. Of course, supply, ITC in there as well. Let's pull up the Nifty contributors and just look at what's moving the markets this morning. This Monday morning is actually, even with a completely flat tick, better than what we've seen. Unfortunately, we've dipped back into the red. This is not going to be long lasting in any case. Ultratech, ITC showing some strength there. Bharti Airtel, the biggest drag. Infosys and RIL as well. One would have thought that the SEBI norms, which remove some hurdles to the Geo IPO, would have seen an uptick on RIL, but it's not really happening at this point. Want to pull up the small cap and mid cap indices as well, if we can, and just get a sense there. The Nifty mid cap showing how and why the market breadth is so negative. Small cap the same, nearly 0.75% down. I mean, we can hope against hope that things are getting better, but the fact is that the news flow in the last 24 hours has shown no indications of any side backing down. Banks are doing relatively okay, one would say. I think let's pull up the sectoral heat map just to get a clearer picture of what's going on here this morning. Largely negative. Oil and gas the worst, 104 crude. I mean, that's something which is a clear pain point. India Defence also paring down. FMCG, maybe a protective or a protectionist kind of move there, seeing some uptick. These are safe bets, contra bets, so FMCG is doing okay. Metals to some extent, but very, very flimsy green on the screen is what I would say. If we can pull up the constituents of the Nifty FMCG, that would be interesting. Good to see what's moving it. My guess is it's ITC, and that's pretty much most of what's happening over there. Okay, Varun Beverages, and of course ITC higher in weightage. So Varun Beverages about 1.5% at this point. I think let's also look at the India VIX before we get to specific stocks. And that's a good gauge of it's the fear indicator as called. A big dump down in the last few minutes. I don't know if you have the intraday chart, but when the markets open, I saw this much more benign than it is right now at 3% down. So there's possibly been a bit of a uptick there on the India VIX, and it's seeming like that as well. Let's come to individual stocks in the story there. So some stock specific news that we can look at. So for example, there's been an acquisition by Jubilant Ingravia. Is that helping the counter? Let's look at that. Not really. 2% down. IDBI, negative news because disinvestment has been pushed. LIC has some stake. IDBI Bank is the biggest loser of the morning, 13% down. There's a push for pipe natural gas adoption. What does it mean for MGL, Adani, Total? Everything down in the red with gas prices and frankly crude prices overtaking entire mood of the market. GAIL about 0.5% up. Order wins have come in for CMAC, Bajal, Ramkey. Okay, so Bajal actually about 11% up. CMAC and Ramkey also doing okay. Power stocks and focus, Adani Power, NTPC Green Energy. Adani Power doing okay, 2.5% up. NTPC Green Energy not so much. So I would say it's a very flimsy green on the screen at this point, Alex.
Very flimsy. You said it, Tamanna. A few more stocks from the broader markets that are moving, and we've told you why these might be actually reacting. So Chennai Petro, for example, those individual refineries losing ground at this moment. So it's down about 5% at this point. Very clear reason why the stock is taking a bit of a battering. But the oil marketing company is also under quite a considerable amount of pressure because oil above 100 is certainly negative for them. HPCL, IOC, BPCL, all over 3%. Couple of notes coming through as well. And it's not looking like a pretty picture for these companies. Reliance Industries having clawed back a little bit of ground, now trading just about flat at this point. IDBI Bank remains the biggest loser, but we were talking about fertilizer companies and the government making a statement saying that stocks are adequate ahead of the all-important Kharif season, but it remains that these counters are affected because gas is such an important component for the production of fertilizers. The whole raft of these stocks are losing ground. So RCF is among the top losers on the 500 stock index at this moment, down about 5% or thereabouts. I'm looking at Autumn, which is also losing ground at this moment. It's 7.5% at this moment. AIIL should be how you look at that stock. It is down as much as 7.6% and one of the biggest losers in trade at this moment, at least from the broader index. L&T Tech is losing about 4.5% or so. IFCI also about 3.8%. There are just about 100 gainers on the 500, so it's actually not terrible, not as bad a breath as you've seen last week. Tejas is once again among the gainers, 7% up. ITI, Timken India, Ultratech Cement, top gainer on the Nifty 50 and one of the top gainers in the broader markets as well, 2.7% at this moment. Pfizer, CCL Products, JSW Steel, a few stocks that are doing well. All right, so on that note, I'd like to thank both Ruchit Jain as well as Parag Thakkar for joining us this morning. Pleasure speaking to both of you as always and look forward to our chat again in the near future. All right, let's on that note introduce Manishi Roy Chaudhary, the Chief Executive Officer of Emmer Capital Partners, joining us this morning. And good morning from where we're at, Manishi. Just a sense from you on whether you anticipated this conflict would last as long as it has already, because there were some calls that it would be quick, but it's not. And would you be able to stick your neck out to say that it would get over in the next 10 to 12 days? And how is your treatment of risk assets at this moment?
Well, thank you very much for having me here, Alex. And honestly, I think the question you asked me can possibly be answered by 2 or 3 individuals in this world today. Maybe President Trump, maybe Prime Minister Netanyahu, and a few others in the Middle Eastern region. So I'm absolutely in no position to take a call on how long this conflict is going to last. It has come as a rude shock, honestly. Because we had seen Israel bombing Iran in June last year. That was resolved pretty much within a couple of weeks or so without major retaliations, and most importantly, without the closure of the Strait of Hormuz. Now, the closure of the Strait of Hormuz has, basically put in jeopardy energy supplies not only from Iran but from the entire Middle East. And if one looks at Asia, look at India, China, Korea, Japan, and a few of the other countries, they are disproportionately dependent on energy supply from the Middle East, both crude oil and gas. And it's no wonder that emerging markets led by Asia are possibly the most volatile over the past couple of weeks. Until and unless the conflict situation is sorted out, and there's a caveat here, until and unless major energy infrastructure, if so that it doesn't suffer major damage. I mean, these 2 conditions need to be fulfilled so that we have some kind of a recovery. Whether it's going to pan out that way, I have absolutely no idea. So for the time being, the risk aversion could translate into focus on a few sectors. I would say the energy explorers. I would also talk about the defense companies. There are quite a few of them in India and quite a few of the large defense exporters in Asia, in Korea in particular. Right, so those have done well. And, I would think some of the clean energy companies in Greater China would also fit that bill. So, for now, unfortunately, there's no other way where investors would have to brace for what's happening.
Manishi, if you're not forced into not sitting on cash, which means you could sit on cash or you could invest only part of your money, would you do that currently and wait for clarity to emerge, or does the valuation bomb down give you an opportunity in those pockets in India that you mentioned, which is defense, maybe some commodity names and upstream?
I mean, if I had the luxury, if I had the option, I would definitely sit on cash to a significant degree. Yes.
I hear you.
And cash proxies, which generate, treasury kind of return.
Agreed. Now let's assume that you don't, and because you are investing right now, or you want to take advantage of this fall, is defense the good port of call in India? Or would you look at some of the ones in which there has been a valuation destruction, which means banks, right? Blue chips like ICICI, HDFC, etc. have corrected quite a bit. Would you do that?
I mean, if I well and truly have a long time horizon, maybe next 3 years, 5 years, I would definitely buy some of those sectors that you mentioned. Private banks remain, one of my favorite ports of call here. They're likely to gain market share. They're likely to be the drivers of the long-term India growth story. Whatever be the impending and the short-term volatility scenario that we see there. I would also, focus on industrials and defense. After all this, there would be a time when rebuilding of the Middle Eastern region would have to come into focus. And there, the companies which have a long history in the Middle East, Larsen & Toubro, for example, those companies would again be called upon. So right now there's obviously a lot of uncertainty and these stocks have been hammered. But, ultimately, if one's time horizon is not 3 months, but 3 years or 5 years, some of these companies would also come into focus.
Manishi, you said you'd rather sit on cash if there's an opportunity. Would you look at commodities? Would you look at non-equity investments right now?
So when I said cash, I mean, one can certainly invest in, say, US dollar proxies. The US bond yields are, for the time being, they're going to rise. The US dollar is possibly likely to be on a strengthening path as long as this, this military conflict continues. These are the classic safe haven options. I would also, when you talk about commodities, I would, possibly focus on a few in North Asia. The problem with the Indian large commodity manufacturers, and that's not just India, but worldwide, is that they're also hugely energy dependent. And energy security is not something that Asia has. Greater China has it to some extent because of the large energy reserves that they have. So it's slightly difficult and nuanced call to take.
Manishi, on that note, thanks so much for taking the time. Pleasure speaking with you as always. Now, a very important part of India's diplomatic efforts over the course of the last couple of weeks in particular has been to try and negotiate passage through that all-important Hormuz Strait. And therefore, shipping is such an important conversation to have, even as two large containers are currently making their way to India, one to dock today and another tomorrow, that has actually passed through that Strait of Hormuz. We've got Gopal Krishna, former shipping secretary, to speak about the current dynamics and to get some insights. Sir, thanks so much for taking the time. Just help us understand. Good morning, sir. Help us understand how these conversations would normally take place, and from the perspective of the shipping ministry, to facilitate this transfer of goods, all important, right? Particularly with regard to crude products. How does this normally take place, and can you explain the current scenario to us?
So, as the representative of Ministry of Shipping has already mentioned, there are close to 30 Indian flagged ships which are resting west of Hormuz. Normally, release of such ships to be allowed to cross the Strait of Hormuz. It is essential that diplomatically it is taken up with Iran. But it's just more than that. Because there is a warlike situation, there is, besides allowing these ships to travel back to India, there are 6 LNG ships, there are 1 LPG ships. So the first effort is to see that all those ships which are west of Hormuz cross. Now, then the next question is that in such a situation, insurance is a big issue. It's not just, it's pretty easy to say that, another country allows a passage of ships, or we also deploy our own navy to see that the passage is safe. But it goes beyond that. For any private shipping line, if there is no insurance, and presently the Joint War Committee of the Lloyd Insurance, which decides on the insurance issues for both P&I clubs and the hull and machinery insurance, there is no insurance available. So no prudent shipping line would like to travel back to the Strait of Hormuz, in spite of the fact that any kind of protection is provided by militaries, navies, or diplomatically, So that's the challenge. But having said that, the first issue is that we must see that the 6 or 7 ships which are already stuck there are brought out. This would mean 6-7 days of LPG, which is a huge thing in such a situation. It will really ease out our. You already mentioned 2 are already on way. If 6-7 also come, it will ease out some situation. We'll get some leeway to then start thinking of. Already you're also aware that it's very well reported that India is sourcing LPG from various other sources. US is the largest supplier of LPG in the world, and our shipments from USA, Canada, Australia, also Russia are already on way.
I just want to point out to our viewers that the visuals that you were seeing on the screen just now, and while Mr. Krishna is explaining this entire dynamic situation, are live trackers of the vessels that are in and around that very important shipping route, and that channel that you're seeing effectively is the Strait of Hormuz. Mr. Krishna, just on the global stage, right? So you're seeing President Trump's latest comments about the importance of managing and controlling that strait. And he is talking about the importance of there being a coalition. But the messaging that has come through from various large nations over the course of the weekend as well is that a lot of people seem to be putting their hands up and saying that we don't want to be involved in this. So therefore, from that perspective, does it become even more important for the Indian government to open up these diplomatic channels and for the Indian Navy to be involved to protect our vessels and our interests?
As I again mentioned, that is only one part of it. Protection at this stage can only bring out our stuck vessels, 6 or 7 of them, LPG, LNG, or 20 in all. We must take that step. There is no doubt about it, both diplomatically and try to see how our Navy can be deployed there to bring all those ships back. That will ease the crude oil supply and the LPG and to some extent LNG supply for a week above. But what about in a slightly shorter term? Their insurance will play a major part. And unless there is a war or warlike situation or a conflict, it will be very difficult for tankers, shipping lines to travel in that conflict area without an insurance. Unless governments, shipping lines which belong to government. So in this case, if we have tankers or LNG carriers belonging to Shipping Corporation of India, and if the government takes the risk that, okay, we will ask Shipping Corporation of India, tankers and LNG carriers to travel with our Navy, only that is possible. No private shipping line will try to be escorted by navies. I don't think so. And that's the hesitation for the entire world. Just as it is true for India, it is also true for shipping lines, private shipping lines throughout the world. So for the present, in spite of whatever has been said, our main effort should be to see that we bring out our stuck ships from that Hormuz.
So one part of it is stuck ships. Mr. Krishna, good morning. Tamanna here.
Morning.
Just
Yeah,
trying
Tamanna.
to understand where this will go next. From the current rhetoric, two things have happened in the last 24 hours. One is President Trump telling everyone, please come and help me and join this coalition to open up the Strait of Hormuz. And meanwhile, Iran saying they're having bilateral conversations with nations to allow their ships through. Does it seem likely that whatever happens after this war, we don't go back to status quo? One of the two sides will start overseeing what kind of ships pass through the Strait of Hormuz. Is that really the big challenge we need to prepare for?
I see it. So long as there is a warlike situation or a conflict going on, there will be very little shipping activity. Only shipping lines or, as I said, tankers, which are government controlled. Now, maybe China has a lot of, tonnage which is government controlled. Also, China flag, it is possible. In India's case, certainly it is not possible. We do not have enough tonnage, which can be protected by our Navy and which can take the risk of not having comprehensive war risk insurance. So we have to, there is no other alternative to look for alternate sources. And that we are doing. And therefore, one sees that there is some ease of the whole situation in India also, because we have to immediately start sourcing from other alternative sources. And there are other sources available. In fact, this whole talk of buying LNG from US had started 3-4 months back, and that's the right thing to do because USA is the largest supplier of LPG in the world. We are a huge consumer of LPG. Our whole domestic sector is dependent. So we have to look for alternate supplies, not really go by this whole rhetoric of, Navy providing coverage to our ships. No, I don't think so. That's a solution to this problem. Things should return normally. The war should end. The conflict should end. Every side should recognize that there is total end to hostilities. Only then tanker shipping lines will make efforts to restart LPG, LNG, and crude oil export-import from the Strait of Hormuz.
Got it. So this is Neeraj here. Good morning. But since that is uncertain, would you reckon that freight rates, therefore, could stay elevated for a really long time until that complete solution is reached? Do they stay elevated or in fact move up higher? You would have a great sense of how the freight rates normally behave in times like these, right? They rise, but can they stay longer for a lot? Can it stay higher for a lot longer?
Yeah. So the freight rates will stay longer also, say, because in case of India, it's all about demand supply. International shipping costs are not dictated by costs. They are morely dictated by demand and supply. So long as demand is higher than the supply, it is not stabilized, the freight rates will remain high. And there is pretty great demand of, LPG carriers and tankers, and therefore they are bound to stay high in the medium term. There's no doubt about it.
I'm just wondering, you were talking about alternatives, sir. Is there any alternative route now that India needs to start looking at, apart from Strait of Hormuz? I mean, maybe a silly question, but can we actually look at alternatives to how we get our crucial supplies in? Because this is just very, very easy to manipulate if there is a conflict.
We cannot really change the geography. It will remain pretty much the same for long times to come. So if Strait of Hormuz is affected, let us also recognize that in some way the Red Sea is also affected, because of the Houthi issues. And in fact, before the Strait of Hormuz issue, the Strait of Eden and Red Sea were equally affected. Not equally, it was not a war-like situation, but there was a lot of shipping lines had already decided to follow the alternate Cape of Good Hope route, which is costlier. The freight rates are much higher on that route. But that's the only way for goods to reach India from Europe and from the Americas. That route is available. It's a costly route. It is available. But in such a situation, costs do not matter, because here interest of 35, in fact 30, if you have 30 or 35 lakh consumer connections, which means practically the entire, with a family size of 4, practically the entire country, So costs are
what
not
is the
important.
cost differential, sir? What is the cost differential, just to understand if liability, any light that you can throw on this?
It will be at least 30 to 35% on freight charges, at least. Okay. I mean, again, I say it depends upon the situation, and it depends upon demand supply at a particular moment. But the cost would be at least 35%, 35%.
Okay.
But at least that is available. So again and again, I'm saying we have to source our LPG from Australia, from Canada, from America. Also start talking. Russia is a huge supplier of crude oil. We must, and I'm sure, the government diplomatically must be taking up with Russia to also source LPG supply from Russia, because that route is still very, very secure. The Russian route is pretty secure. So we must start sourcing from LPG from Russia as well, besides our crude oil. Crude oil is now freely flowing, and therefore we are not feeling any pinch about diesel, petrol, also aviation fuel to a certain extent, So similarly, if we start sourcing LPG from other sources, I am sure in the next 2 weeks, 3 weeks, the effects would be visible.
So the good thing is that all options are open for India. Thank you so much, sir, for speaking with us.
Thank you very
Gopal
much.
Krishna there, former shipping secretary, explaining beautifully really where the situation stands right now and what are the alternatives that India has as well to the Strait of Hormuz. There are alternatives, they're more expensive, but at least they exist. Now, a surge in crude oil prices is likely to push up costs for several FMCG companies, particularly in packaging and home care products that rely heavily on crude derivatives. Will this translate to price hikes? Will this be passed on? We're going to be speaking with Amnish Agarwal, Director Institutional Research at PL Capital. But before that, Mahima joining in with more details. Mahima, also news this morning that maybe paint companies have started passing on some prices.
Yes, Tamanna, absolutely. So different segments of consumption are going to get impacted because of rising crude prices. Paint companies like Berger Paints and Kansai Nerolac have already started taking price hikes. And they've said that if crude remains at that $100 per barrel, then further price hikes in Q1 will take place. And, that could overall see an impact in a couple of quarters going forward as well. For FMCG as a whole also, a lot of crude oil derivatives are used as raw materials, which make up to 20 to 25% of the total raw material, and that could impact pricing as a whole, and FMCG companies will have to go ahead and take price hikes, and because of that volumes will get impacted. So it's a whole cycle. If crude stays at that $100 per barrel mark, for FMCG companies the price hikes can be anywhere between that 2 to almost 16%. The other aspect, of this whole LPG that's happening right now has led to an overall increase in induction cookstoves. That is also one talking point, which has been the case in the past 1 week, because a lot of counters that make these induction cookstoves have seen an uptick. So, all of this combined together, both LPG as well as crude have a huge impact on the entire consumption space.
Got it. Mahima, thanks so much for getting us those details. And Amnish Agarwal, Director, Institutional Research at PL Capital, joining us to put this into context and to talk about impact. Amnish, thanks as always for taking the time. Before the conflict started, there was buzz, and I will perhaps talk about the HUL post Q3 press conference, where they were talking about a likely improvement in volume, a likely improvement in certain other trajectories as well, heading into the new financial year. Does that get impacted because of the likely increase in prices that they will have to take? And it's not just HUL, it's across the board.
I think the situation at the current moment is slightly uncertain, because we need to look at, first of all, there's an issue of availability of certain, you can say, for example, LPG and some of the other gas-related feedstock. And so some of the companies which are operating with those kinds of, you can say, feedstocks, so there could be some impact on the production. That is on the one side of it. On the other hand, we might also see that due to this very fact, the companies will have to take price increase. And when we talk about the FMCG companies in particular, the price increase in FMCG products is not the only issue. The overall inflation in the economy also matters, because the inflation already has started inching up, and now once, for example, as of now, there is no change in the crude price, in the petrol or diesel prices, but with the prices having moved up from $65 to close to $100 now, it is only a matter of time before eventually it gets passed on to the consumers, which will provide a big push to the inflation. So, for example, LPG, even if I believe over the next 30 to 45 days, the supply chain issues will get sorted out, because India and some of the other countries, they will find the new sources of supply. So the supply should normalize over the next, say, a month and a half to two at max. But having said that, during that time, your inflation is going to shoot up, and all these consumer products, they are very much sensitive to the increase in the inflation. So yes, I agree that there will be price-led growth. There will be increase in the product prices, because earlier the pricing was on the negative side. But having said that, how much impact it will have on the demand is something which we will have to wait and watch.
So, Amnish, if that is indeed the case, what is the implication for an investor at the current juncture with the current knowledge that we have and the current hypothesis that you may have about how long does this pain last?
You see, how long does this pain last? As I said,
sorry, Amnish. What I mean is, Amnish, I'm not asking you how long it will last. I'm saying you may have a hypothesis about it, about how long this pain will last. You would have some bit of information. So combine the two and then try and tell us, with that hypothesis, what is the investing implication of the same?
Investing implications, as of now, is that there is a lot of uncertainty. Say, for example, I don't know how the positive numbers.
Sorry, Amnish, I can't. Sorry. I don't think I can hear Amnish Agarwal correctly. Amnish, could you please repeat the answer for me, because I think your audio was a bit garbled when you just last spoke. Can you just repeat your answer, please? Okay, I think we have lost him.
We'll try and get him back, but I think a valid point about the extent of impact that you're going to see and how soon those prices will be taken.
Yeah.
And fairly quickly is what it seems like.
Yeah, wouldn't be surprised if it's anything otherwise, but yeah.
But also the point on, sorry, go ahead.
No.
He's back.
Since Amnish is back, Amnish, I hope you got my answer. I was not asking you to preempt how long this will last, but based on that hypothesis, what is the investing implication?
Okay, see, what I'm saying is that there is a very high probability of earnings cut coming in the 4Q numbers for FY26, and the impact of that will be visible significantly in 1Q FY27, due to which the numbers are going to get cut. So in terms of investing implications, I would say that at this point of time, one needs to be very cautious. As of now, the companies which are less crude sensitive and which are more on the food side of it, because at least the coming crop is likely to be good, they seems to be in a reasonably good situation. But companies which are, say, for example, when you look at paint segment, detergents, or any other products where the usage of crude relative is higher in the form of raw materials, there the impact could be slightly more. So the impact could be on the two sides. One is on the demand side and second is on the margins, because for the next 1 or 2 quarters, the margins are also likely to take a knock despite the price increases being undertaken. So I think at this point of time, there is no big change in the hypothesis. Some of the food-oriented companies where the raw materials are actually not imported or they are less crude sensitive, they seem to be doing better over the next couple of quarters in terms of margins and profitability. And some of the crude sensitive companies, there could be margin pressure which can result in the stocks being range bound for the near to medium term.
Nish, hi. Just wondering if you have sort of filter right now and a list that you've sifted through on companies that are going to become good buys right now despite the kind of crude influx coming in, best position to withstand and first to rebound. Are there any favorites which are appearing on your screens?
You see, when you look at, say, consumer stocks, say, for example, whether you look at stocks like Lever or Asian Paints, whether you look at QSR companies, pretty much every stock is at Say, I don't know, some of them might be at 52-week low, some of them might be 2, 3, 4-year low kind of a number also. So once the situation stabilizes and things starts to normalize, all these stocks are going to bounce back. But the extent of damage, first of all, that is something which is uncertain at this point of time. So anyone who is looking at bottom fishing, one will tempted to buy any of these stocks, but where the actual pain is going to end is something which we are not sure at this point of time.
Amnish, thank you so much for joining in today and speaking with us. I mean, that's the view coming in on the FMCG pack. Clearly, price hikes are not the only issue right now because there's a limitation to how much of those price hikes can be moved out. Happy to say that markets are close to its day's highs. So at least there is some recovery mood there. But I would say this is nothing to really celebrate because the overall outlook remains fairly bearish. Just want to point out this Nomura India strategy note by Sayan Mukherjee, which has come in, that says unprecedented crisis is causing macro concerns. A further correction in market is a possibility. Now here's the important part. They've lowered their Nifty target to 24,900 from 29,300. I mean, that's a sharp cut. They expect utilities, coal, oil producers, healthcare, pharma staples, and telecom to outperform more than anything else. So that really is that view coming in on the market. So I would say happy to see any green on the screen, but tread with caution and tread with care. Banks are recovering, which is good. Metals are recovering. I would see metals as one of the clear winners this morning in trade. And most hit might be the best to recover logically, but you know, Hindalco, etc., JSW Steel, Tata Steel were also doing fairly okay through the last week relative to others. The recovery in banks actually is what is most heartening right now, almost 0.75% up on the bank Nifty right now, and you have some of those sharp moves.
Even the Nifty IT, because I would invite them to pull that up on the screen. The Nifty IT index is gone through quite a bit of chop and churn today, but it's at the high point of the day.
Yeah, back in the green, flat over there. I mean, you're going to see the market breadth continuing to be fairly bearish. It's not just the Nifty. I think banks would be moving the Nifty more than anything else, but the market breadth still fairly bearish. We'll take a very short break. It's going to be a volatile day, but good to understand what companies are doing. And on the other side, we'll be speaking to Gopal, Snacks Management, and more.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी Some moments in life are lifelong. Some memories are lifelong. Just like Tata Power Solar Roof, best quality solutions, lifelong service guarantee and unmatched expertise. ये on the quality lifelong.
हाथ, ये जो हाथ है ना, सिर्फ लकड़ी ही नहीं, हमारा कल भी तराशते हैं। बंद हो या हो कोई स्ट्राइक, इनका शटर हमेशा खुल जाता है। इन हाथों का यही तो आपसे नाता है और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
In a month that moved markets, shifted diplomacy,
the entire world,
and stirred political battlegrounds, India chose its news carefully. NDTV India and NDTV 24/7, #1 on YouTube. NDTV Network, streaming India's trust, leading India's conversations.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
First India tour in your city.
Ragon with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
Right, back with India Market Open and some bit of green on the screen. Not that it's very, very strong, but it is there, and which is actually a good thing. I must point out though, some of the losers, and last week's key gainer Happiest Minds, for example, is in the red. So that one is down about 5%. The fertilizer stocks continue to grind lower. RCF, FACT, etc. are all in the red. There is weakness in Gujarat Gas and GE Shipping, and IDBI Bank, of course, tops the list of losers. But there are gainers. MRPL is now up 6%. Tejas 4%. There is strength in Adani Power. There is strength in Vodafone Idea, interestingly, one of the highest traded counters. And well, Aditya Birla Sun Life is up about 5% as well. So some green on the screen for sure. But more news and updates, and the government has eased IPO rules in a move aimed at strengthening capital markets and making it easier for large companies, especially technology and digital firms, to list on domestic exchanges. So what are the changes? Nimit is here with that. Nimit.
Absolutely huge change for larger companies in India, which found it really tough to go to public markets so far because they had to dilute a large chunk of their shares, which were worth a lot more money than the market was willing to give them. Now, the Ministry of Finance has updated that rule to say that large companies can list with as much as 1% rather than the 10% and 25% limits that were earlier imposed. Now, this comes as a pipeline of large IPOs looks to list this year, with Reliance Jio, the NSE IPO, and also Flipkart in the works, which is looking to flip back into India to do its listing here. Now, this was a long-standing demand from the market. Bankers say that in fact that the Securities Market Code consultation process, a lot of comments actually came in for this purpose. Now, why this was demanded so heavily by the market is both a supply and a demand problem. From the supply side, companies did not want to give up so much of their control so fast. If a 10 lakh crore worth company would have to list 10%, that's 1 lakh crore. They would not find buyers for that, because when you put out so much into the market, automatically your price reduces, right? And from the supply side, the SEBI and other regulators said that, hey, you can't list so many shares on the market, because then if people buy it, there's no liquidity in the market for everyone else. So this solves a problem at both ends, from the buyer and the seller. What's also important to note here is that this will also help other companies that have mandatory listing proceedings. For example, NBFCs that are supposed to list within 3 years, they were finding it very difficult to do so. But now, if they can list at low as 1% or 5% based on the gradation that is available, they'll find it much easier to go to market. The move is largely planned to create a runway as more money is expected to come into India from the fallout of the volatility in global markets, and with sources saying that Dubai no longer being considered the safe haven for investments that it once was. Money is going to come into India, and this helps that moving forward.
Thank you so much for that, Nimit. Now, amongst other things, on your screen right now, focus on oil marketing companies, RIL, MRPL and Chennai Petro. Singapore gross refining margins have fallen to negative territory. Singapore GRMs are trading negative $1 per barrel versus $44 per barrel seen earlier, and that's on March 9th. So that's clearly a negative for all of these companies and adding a bit of drag. But nevertheless, this being to some extent, I would say, countered by strength coming in banks, which is a space which has quite a bit of weightage across the board. All right. At 10 every morning, we speak with an expert in the field of geopolitics to help us understand what's happening in the world. Anil Trigunaya joining us today. He's a distinguished fellow at Vivekanand International Foundation, of course, former ambassador. Ambassador Trigunaya, thank you so much for speaking with us this morning. Pleasure to have you on the channel as always. We also wanted to speak with you in context of the deft diplomacy we've seen from the Indian side over the last few days. Clearly, that's what's led to at least 3 to 4 of our vessels coming out through the Strait of Hormuz. Does it get trickier from here as far as India is concerned? Because we're also a nation which was engaged with Israel. We have good relations. We have good relations with the United States. And clearly, we have better than others relationship with Iran as well. How do we move ahead in what is looking like a very delicate balancing act?
Well, as you know, Tamanna, that India, at least since 2014, has followed a policy of dialogue, diplomacy, and dehyphenation. And dehyphenation means clearly that our relationship with Israel has no consequence on our relationship with Iran or Saudi Arabia or any other country. Both the relationships stand on their own. And that is precisely what has today kept us in this kind of a situation where we are able to talk to Iran, to Saudi Arabia, to Israel, and to everybody else in the region. Moreover, our strategic partnership fulcrum has really been sustained by various problems in this very highly volatile region. You have seen that Dr. Jaishankar has spoken to his counterpart, Foreign Minister Araqchi, 4 times. Prime Minister Modi has spoken to Prime Minister Netanyahu and President Pezeshkian, among other leaders. So they understand what. Plus, India, the action that we have taken. For example, one of the things that is like sending the bodies of the salt sailors who unfortunately died, or the foreign secretary going and signing the condolence book and the embassy. All those are very good signs which the Iranians appreciate. Besides, the Iranians know that India is the only country which has that kind of a heft with nearly every major power in the world, where they can go and talk frankly. We can speak to the Russians, the Chinese, the Americans, everybody else. So therefore, you must have seen a lot of commentary coming out from the West that India is in a good position to talk to them. As far as the geoeconomics of the whole thing is concerned, or security is concerned, energy security is the most important thing for us. And more important than that is the safety and security of our 10 million people in the region who are nearly remitting $70 billion, which is about 10% of our foreign exchange reserves. So the oil prices or the restriction in the oil or the gas happening would have a very serious repercussion on our domestic situation as well and our growth trajectory. So precisely because of that, India is very actively involved and is continuing to work on it.
No, so we are, but coming back to the point, this is going to get trickier going ahead, isn't it? Because clearly now both sides are digging their heels in. Let's talk about passage through the Strait of Hormuz. 2 things are happening right now. The United States is calling on everyone saying, please come and form a coalition with us and ensure safe passage through the Strait of Hormuz. Iran is having its own conversations with nations, including India. At some point, will we face a situation where we need to pick a side?
No, I don't think we'll pick any side. One thing I want to tell you is that the moment we pick a side, we will be in greater trouble. So that will not happen in the first place. Plus, civilizations don't change their stance overnight, and I don't think so. India is a resident power in the Indian Ocean. And you know that our Navy is there. And that is, we have been one of the first responders in the region. And even today, this is precisely what we are doing. Our Navy is there escorting ships from there. It's good that we have, on the issue of passage of Indian ships, which are carrying various oil and gas, has been successful. So that is a good thing for us in that. But the effort today India is trying to make is that how to have the cessation of hostilities. That is the most important thing. And I think we are talking to all the members and also directly with these people that it is not going to serve anybody's purpose. But I also feel that President Trump is also looking for an off-ramp now. And we all are looking at it. I mean, it is going to be disastrous not only for us, but it is disastrous for the region as well as for the United States and the rest of the world. So I think that everybody wants this war to end as soon as possible, despite certain radical ideas that all sides possess.
So I think that India's real option today is to try to work for cessation of hostilities and try to find some kind of an off-ramp for that.
Mr. Srikanayat, how do you think that that will emerge? Because at this juncture, the kind of rhetoric that has come through from both sides has been pretty alarming. Because you have a situation where both Israel as well as the US have their own proclivities or reasons for doing what they are doing, and Iran is, from their perspective, an injured party. There's a significant amount of damage that has already taken place. They're even calling for reparations. So what will that off-ramp look like from your perspective as somebody who understands how these dialogues take place?
You see, one thing I would like to tell you is President Trump is a very unconventional person, is a very difficult man. And one always thought that he will threaten, but he might not go to the war. He has been forced into this war, and there is no doubt about it. At the same time, now he has begun to realize, I mean, if you see the kind of incoherent statements coming from the US State Department and from the White House, that it is very clear that they're not very happy about the way things are going. And they never thought that Iran will not fold up immediately after their strikes like what happened in June. But June was a very different kind of thing. Since June last year to now, the Iranians are well embedded. And killing one leader or a couple of people does not affect the country. So what they're doing now, they also understood their limitations, to what extent they can go. The rest of the world is not going to escalate beyond a certain point at this stage. And Americans are not ready to go with the boots on ground. That's going to be more difficult for them. So I think that in this kind of a situation, there are backroom talks. So America can declare they have killed taken out Khamenei. They can always say that, okay, we have won the war. We have the victorious, which he's very used to saying very often. So we might see that very much happening soon. I mean, I don't think that it's going to, in my view, not more than 1 or 2 weeks. And even the Iranians have put up some conditions. And since President Trump said they are not good enough.
Yeah.
So what is good enough for him is basically declaring his victory and saying that, okay, now we have achieved our objective. So it can happen.
Okay, just a couple of points. I want to understand, you made the statement that Trump was forced into the war. So I'm just trying to understand why that is. And the second point is that it's all well and good for Trump to announce that the war is over and that America has won. But there is a certain repercussion of that, including the fact that there are mines being operated in the Strait of Hormuz, and the Iranians are very clearly stating that no US or Israeli vessels or any of their allies will be allowed to pass. So how does that emerge then? It does not end till both sides agree that it is ended.
You see, the war is not going to end in the classical sense of the term. You know, like, okay, now we are all good friends and things like working like that. That'll take a long time to happen because there is a tremendous trust deficit, and it's not from now. It has been happening from 1979 onwards for 47 years from all sides. But at the same time, they also understand their limitations. Each one has its limitation. Israel is not a very big country. It might be technologically, militarily superior country, but it also has problems around its own places. America also is not in a very good shape today. I mean, at the end of the day, you need arms, ammunition to be able to survive and to be able to fight long wars. We are not living in an era of long wars. And every time America knows that in all major wars, they've been defeated. None of the superpowers has won a single war today in the 21st century and 20th century. That's history. You look at China, lost in Vietnam, United States lost in Vietnam, United States lost in Afghanistan, British lost in Afghanistan, Soviet Union lost in Afghanistan, got disintegrated. Russia has not been able to win this war for 4 years. Israel has not been able to win Gaza in the last so many 2.5 years. So they all know their limitations. It is not that easy to win a war today. You may destroy, but destruction does not lead to victory.
That's such an important point. The destruction may not lead to victory, though, I mean, the US may still declare a victory on its own terms. Ambassador Srikanayat, this is Neeraj here. Good morning. I wonder, how do you foresee India's role, if any, in being a mediator? There's a lot of talk around how India could play that role simply because of the relationships that PM Modi carries with all parties in this conflict, and the allies. Could that happen? And what could be the longer term relationship implication of India-Israel, India-Iran and India-US ties because of that?
You see, as far as India's relationship with all these individually, with these countries are concerned, I think they are on a pretty sound footing bilaterally. Now, the question comes whether India will become a mediator. I don't think we are looking to be a mediator. India can act as a very good, trusted partner. And I can tell you from personal experience that most of these countries don't mind India playing that role. It's only that we have not, in the past, for whatever reasons, been very proactive. And many of my colleagues in the establishment may not agree with me, but I think we have to have an agile diplomacy. Frankly, this time we are showing that. Prime Minister Modi has spoken to both. He has spoken to Prime Minister of Netanyahu as well as President Pezeshkian. Dr. Jaishankar, as I said, has already spoken to 4 times. PM Modi has spoken to all the leaders in the Gulf also. So these talks are not only for looking after the interests of our people there or our energy security, but also to end the war, because this war is of existential character for India as well going forward. So that's precisely the reason that India is pretty active now. Secondly, India is also the BRICS chair this year. And as the BRICS chair, all the major powers in the South are involved in that. Iran is expecting. India is working and talking to all the other countries exactly what kind of a statement can come out. So you have heard the Iranian ambassador here. You have heard the foreign minister. You have, you're listening to all kinds of statements. But those people have far deep-seated problems among themselves.
Sure.
And that is something that will not be bridged by this. The idea is to stop the war first and talk later.
Okay. The other question is, I heard you say that India has existential implications from this conflict. Is it because of oil prices or some other reason?
There are 4 reasons, as I call them as 4 E's. Not only Iran war, but this was the war which can destabilize the whole region. It has always been feared by everybody who is observing the region. And that's simply the case that any war between Iran and Israel, with the help of Americans, is going to be devastating for the region. Means what? Number one is energy supply, as you know, 60-70%. It's already more than $100 is playing out. So it'll have an impact, direct impact. Supplies will be disrupted. That means sea lanes of communication. 80-85% of our trade is coming through these sea lanes. And we have 10 million people, in Indians there, whose safety security is of paramount importance for us. So that is something extremely important. Then you have your own population in India to be taken care of. So I think that an economic engagement, we have $80-90 billion invested there. In UAE alone, we have 14,000 Indian companies which are there. So I think what more is existential than this? I often say that West Asia is more important to us than even our neighborhood.
Very well put. Ambassador Trigunayan, this has been an absolute pleasure. Thank you so much for joining in and giving us that kind of perspective, which comes, I would say, from decades of working inside the foreign policy establishment as well. So thank you for that conversation. We're getting to the big market conversation this morning, even as we see some extent of recovery. Ashwini Agarwal, founder of Demeter Advisors, joining in. Mr. Agarwal, great to have you on the show. Thank you so much for coming in. 3 weeks in, and I would say we still don't have that fatigue factor. Because if I compare with what happened with Ukraine and Russia, by the 3rd week, maybe because of the distance as well, markets were going about their business. We clearly are not in a position to do so this time.
Morning, Tamanna. Thank you for having me here. Middle East is far more important to us than the Ukraine-Russia crisis was. In the Ukraine-Russia crisis, we had 2 feedback mechanisms from an economic standpoint. One was fertilizer availability, and second was potential shock to wheat prices. Wheat is not a huge traded commodity in the Indian context. So, only the fertilizer was a real worry. In the case of the Middle East, as your previous guest, the ambassador, was saying, it has far deeper linkages for India. We have energy, we have remittances, we have UAE as, or rather the entire Middle East as a big destination for Indian exports. And then you have the investment flows. So you have very large economic impact from a destabilization of the Middle East. So I mean, if the war were to continue for much longer, then I don't think all the negatives are priced in yet. I think if you ask me, the market is reflecting the hope, as the previous guest was saying, that the hostilities will probably cease in the next week or two, followed by negotiations and conversations, and where that goes, we'll have to see. An alternative view might be that even if the hostilities don't cease entirely, there will be a safe passage carved out for friendly countries, hopefully including India. So that's what the market is pricing in. So I don't think we can compare the two with the context of economic impact on India arising from this disturbance.
Ashwini, good morning and great to have you today.
Morning, Neeraj.
You were not the most constructive investor before the conflict started. So in some sense, what the conflict has done to the markets ties in very well with your basic assumption that markets could be headed lower. It could have been a bonus for you, but be that as it may, it has been that way. When do you believe you would turn constructive? I mean, the simple answer would be the end of the conflict, but because that's difficult to preempt, does the valuation level at a certain point of time lead to that? And are valuations themselves easy to picture in simply because we do not know the extent of the earnings cuts that will follow?
Great question, Neeraj. I've been struggling with this myself. So whatever cash I had, and I did have some cash in the portfolio because of the view that I held that markets were expensive. So I've been kind of putting in a little bit every week. So literally broken it up into pieces and hope to put in a small piece to work every week. Obviously not looking smart with what I've done over the last couple of weeks, but I'll continue with that. And the reason is exactly what you said. I can't predict when the war will end. I can't predict how long this will take, and the economic impact could be much deeper than what I think. Having said this, the gradual approach to putting some cash to work hopefully will give me a sort of a systematic investment plan into this crisis. And 1 to 2 years from now, or maybe 2 to 3 years from now, I'll probably be doing quite well on these investments. I do recognize that this is not a fail-safe investment strategy, and one could see much lower levels before one goes higher. But crises are all about that. You have to hold your breath and invest and look at the medium term. And that's what happened in COVID. That's what happened in the 2008 crisis. That's what happened in the pigs crisis and the 2013 browbeating that India took. In all those occasions, it was very scary, and you went through 6-9 months of a very tough period. But if you invested or put cash to work during those times, you came out doing quite well with a 2 to 3 year perspective. So that's what I'm trying to do.
So when you look at that opportunity cost, Ashwini, and I think the sense is that can this kind of a protracted stalemate and squeeze of the Strait of Hormuz continue in an unending fashion? Clearly not. So when you look at that kind of deployment from a 3 to 5 year horizon, what is the direction that you seek? Do you go in for tried and tested, blue chips? Where do you look?
So, Tamanna, I follow a very bottom-up investment strategy where individual stocks is what catches my attention. So they are a mix of, a few large companies and several mid-cap and small companies. If I find the valuations attractive enough, I buy them. That's what I've always done. And I'm just adding to what I own. I'm not really adding to many new names, maybe a couple here or there. But as things look interesting, I'm putting cash to work. So let me give you an example. Let's say I identified something which had the potential to double over a 3 year period, which is an IRR of 25%. If that stock is down 30%, that IRR has moved to early 30s or maybe mid 30s. So that's attractive. So, I'll buy it. Yes, it's possible that the opportunity cost is painful in the sense that, I may buy something at 100 and see it go down to 60. But that's always been the case, right? I mean, that one could have argued in 2008, one could have argued in the middle of 2013, one could have argued in the middle of, the COVID crisis. And that's what crisis investing is all about. You have to hold your breath and have enough liquidity for yourself to survive a 3-year period or a 4-year period. I mean, it's not the stock prices that kill you, it's the mental makeup that kills you, a lack of liquidity that kills you. So long as you have mental makeup to bear the pain and you have liquidity to tide over the period, you're fine.
Got it. Okay. Actually, the other question therefore would be that would you go for safety of the large caps which are blue chips and also have been beaten down, or would you, but relatively lesser than the small caps, but there are a clutch of quality small caps out there which have been beaten on a lot more and whose businesses would be as resilient as maybe some of the large caps might be too once this conflict is over. I mean, the bottom line is the conflict needs to get over for anything to move up, right? So what do you go in for?
So, Neeraj, as I explained, I'm very bottom-up in my approach. If you look at my portfolio construct, I mean, I have a very small exposure to large caps. A lot of it is mid-caps and small caps. And that's where I'm continuing to deploy my money. The small caps have been beaten down a lot over the last 17, 18 months. I mean, several stocks are down 50, 60, 70% from their previous peaks. I'll grant you that in September 2024, valuations were stupidly expensive for several of them, but now they appear to be very attractively priced. So again, I'm making the assumption, and it's a brave assumption, I must say, that the war will end at some point in time. And by some point, it could be anywhere from 10 days to 6 months. And 3 years out, these stocks will make money. Now, for some reason, if this conflict extends to 4 years, just like the Ukraine-Russia crisis has, and Strait of Hormuz remains closed for that period, then all bets are off. Then I think I'm making a huge mistake. And that's the price I have to be willing to bear in trying to buy the companies that I'm buying. Now, in the worst case scenario, you would be right that the large caps would give me less pain compared to the small caps. But, for the moment, that's not the assumption I'm making.
Ashwini, thank you so much for speaking with us today and joining in. A very focused long-term view is what will get you through. When everything around you is moving so quickly, maybe stick to the tried and tested plan. That's the best idea. Thank you so much for speaking with us today. Now, power stocks in focus in the markets on the back of a surge in demand and supply issues. Adani Green, NTPC, Jindal Power seeing high traction in trading as well. Varsha is joining in with more details.
Well, the spot power prices are surging according to Bernstein, and hence Jindal Power, Adani Green and Adani Power are into focus. If you see, India has 20 gigawatt gas-based capacity and the plants are running only at 12% utilization. The power demand bid, if you see, stand at around 35 gigawatt, against which the supply is only at 3 gigawatt, and hence there's a huge demand-supply gap which we have seen, and hence the spot prices are surging. And Adani Green, NTPC, Adani Power and Jindal Power will benefit from these very high spot prices. Talking about individual names, Adani Green Energy, if you see, one of the largest sellers when it comes to short-term power market. Majority sales happens through the power exchange, and they are taking advantage of high power prices. Onto NTPC, emerged as a major seller in short-term market, and the most sales were through power exchanges. So this company is benefiting when power demand spikes and prices rises. Adani Power, among the largest sellers, and significant portion sold through bilateral deal and exchanges, and the thermal plants, if you see, can quickly supply power when demand supply gap widens. Onto the Jindal Power, sold almost 1,172 MUs in short-term power market, and also benefit from tight power supply and higher spot tariffs. So overall, because of the higher spot power prices, all these power stocks are in focus as of today.
Thank you so much for that, Varsha. Power stocks in focus, but the overall mood of the market is what is really going to determine the rest of the day. You've seen the Nifty back about 90 points down in the red, so that rise was sold into fairly quickly. Well, that's pretty much all the time we have on the show this morning, but before we wrap out India Market Open, birthday boy is with us, so a little birthday special before we close. Alex, wish you a very happy birthday once again.
Thank you so much.
and have a great one today and the year ahead.
Absolutely.
You
And
should work extra hard on your birthday for good luck.
I intend to. I have for the last 15 years and nothing has changed. But I
You
hope
loser.
All right. That's all the time we have. Stay tuned. Ask Profit up next.
Hey. Oh, whoa. Let's do it fat. That's all we have for you on this edition. It's been a pleasure bringing it to you.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी Some moments in life are lifelong. Some memories are lifelong. Just like Tata Power Solar Roof, best quality solutions, lifelong service guarantee and unmatched expertise. ये on the quality lifelong.
हाथ, ये हाथ केवल हल नहीं चलाते, मिट्टी से सोना उगाते हैं। ये हाथ केवल सिलाई नहीं करते, देश को नया रूप देते हैं। ये हाथ लोगों को उनकी मंजिल तक पहुंचाते हैं और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
In a month that moved markets, shifted diplomacy,
the entire world,
and stirred political battlegrounds, India chose its news carefully. NDTV India and NDTV 24/7. #1 on YouTube. NDTV Network, streaming India's trust, leading India's conversations.
First India tour in your city. Ragon with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decision. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, The investor don't have to. Get the management to answer questions relevant to you.
Welcome, you're watching NDTV Profit. This is Ask Profit. I'm Mahima Vashajani, and with me as always is Puneet Zaveri. A very happy Monday to all of you, although it doesn't sound the same for the markets unfortunately. I'm waiting for that happy Monday though very soon. But with regards to where the Nifty 50 stands right now, the expectations at the start was that, at least today we were chartering somewhere in the green, but all those gains were kind of sold in, and right now we're trading with a cuts of about 0.4% on the benchmarks. If you can quickly try to pull up the Nifty 50 heat map to see as to what are the counters that are putting pressure. You've counters like BEL losing the most ground, down by about 2.3%. Max Health also down by about 2%. Tata Motors, the pressure still continues, down 2% as well. Power Grid, Wipro, Shriram Finance, TCS, Infosys, some IT names under pressure as well. But on the flip side, you've Tech leading that pack up 2.6%, followed by Grasim 2.2% as well. Hindalco, JSWC, some metal is back in focus. Bajaj Finance also now today doing fairly well after seeing that continuous pressure in the last week. Some consumption names like ITC also doing fairly well. Interglobe Aviation so slightly in the red on the back of that fuel surcharge that they're going to charge. But the Bank Nifty also trading in that similar territory, down by about 0.3% in that range of 53,600 odd levels. Let's quickly try to pull up the sectoral heat map to see as to how sectors are looking like right now. And what is that heat map indicating in terms of where the sectors go? You have only FMCG trading in the red, probably playing its defensive part, but just up about 0.3%. But realty losing the most ground. We've been talking about this, Puneet, as to how the entire war crisis in Dubai might have a positive impact, but it's certainly not kind of being seen in the stocks at all. It's down 2.5% as we speak, followed by oil and gas, defense, pharma, energy, all of these counters which are down in that range. So that's with regards to where the sectors go, but quickly the advanced decline ratio, because that will give us a picture as to how the broader end of spectrum is looking like, and even more pressure, Puneet, as compared to where the benchmarks go, and that crisscross chart again in that 3-digit ratio is indicating that.
Well, most certainly, and while the implied open was in the green, the volatility and fluctuations seen with roughly around just 20 to 60 points on the implied open indicated that it's going to be a volatile day. Just the sheer downtrend that the market has been, it's been a very quick reversal in that sense. Just in the first hour that you've seen almost 2,000 stocks declining in trade today. So hopefully we will be penciling in some gains in the second half of the day. But when you look at the mid cap and the small cap index as well, that has largely been a very interesting trend, because on some days it has been in a complete opposite trend to the markets and the benchmarks. Today though, it's very hand in hand, because we've not got any kind of positive news right over the weekend. It's been continuation of the volatility in the Middle East, and news flows, updates coming in from President Trump's Truth Social also has largely been on the downtrend. So you're seeing almost depression. The BSE 500 also shows you those individual movers today in today's trading session, where IDBI Bank, of course, down 15%, where media reports, and we've also reported that the stake sale might be held up because of valuations not being met on either end. And TTA Prestige also, after a very good run up, is down today almost 7.5%. IT Pack, led by Happiest Mind, is also giving up some gains. Bandhan Bank, the RCF, and Finolex Industries are some other ones as well. But at this point of the show, let me also welcome in a guest, Saurabh Jain. He's the equity research head at SMC Global Securities. On the fundamental side, Sachin Janardhan, AVP Derivatives at IDBI Capital, also joining in. Gentlemen, both of you, thanks so much for joining in today. Let me go across, take the first query itself. It's on a pack that's doing well today, the cement one. And Mohit from Ludhiana is actually holding shares of JSW Cement, bought at 137 rupees. His time horizon is almost 5 years for his 600 shares. Saurabh, reports from analysts indicating that even with a fuel price impact, the current correction that we've seen in the cement stocks could be an interesting opportunity right now. Would you also concur with that view and your view on JSW Cement?
Good morning. Thank you for having me on the show. See, we have a positive view on the cement sector. JSW Cement is particular small company. I mean, relatively a small company. We have also some bigger names, and it is a recent listing. And even after the listing, we have seen only the stock has underperformed the broader markets. We like the space, but we like the major company in the cement sector space, that is Ultratech Cement. I would recommend to convert from JSW Cement to Ultratech Cement for next 5-year horizon.
Okay, all right, so that's the view on the cement space. But moving on to the next query, and this is for TBO-Tech or Info Edge, which one is a better investment for the next 18 months point of view? Saurabh, a very good morning to you. I'll stick with you for this one. Any of these counters that you're liking? TBO-Tech, of course, might have ripple effects of what's happening right now with regards to the war.
See, both. I would not recommend both of these stocks because they have own set of problems. Rather, I would suggest him to venture into maybe pharma stocks, utilities, or for that matter, maybe PSU stocks, PSU banking stocks.
Got that view, Saurabh. But the next question, that's coming in, it's from our regular viewer Arvind. He's holding shares of Cupid, bought at almost 77 rupees. Sachin, welcome to the show. This counter has been very volatile, right? In that sense, do you have a view on Cupid and what should Arvind do with this counter?
So overall trend for the stock is positive only on all the time frames. I think he can hold with a strict stop loss of around 65 level.
Okay, all right. So that's the view coming in on Cupid with regards to where the technicals go. But viewers who are tuning in, you can give us a call on the number that's flashing on your screen up there. And go ahead and talk to us and ask all your stock related queries. Moving on to the next question, Rohit Jain from Bengaluru is holding 500 shares of Gravita India, and he says that he wishes to hold this for the next 5 years. Do you think that's a good idea? He's got it at the price of 1500. Let's say, yeah. So he's got it at the price of 1500, and he is already holding 50 shares. He wants to know if he can add 500 more shares. Saurabh, would you recommend that? And if yes, would that be in staggered manner?
See, we are bullish on the metal space, but I would like to suggest the bigger names like Jindal Steel or JSW Steel, or else you can venture into the metal I ETF. That is from the ICICI Prudential. It is a metal index ETF.
Got that view, Saurabh. But given the volatility, the next question makes a lot of sense in that sense from Shiv Kumar. His question is largely a little broad-based. Given the current geopolitical concerns, is there any sector that's immune in that sense at this point of time and at reasonable valuations as well? Saurabh, let me stick with you. We've actually seen over the last couple of weeks a lot of companies come out with updates that the LNG impact is having impact on its production. So you're not seeing too many of those immune. Is there any that you see maybe in the defensives, maybe in the banking pack? Is there something that's on your radar that you feel it's a good time to buy now?
We like utilities, pharmaceutical, PSU banking space. In the utility space, you can venture into the companies like NTPC or maybe in the renewable side, NHPC or SJVN. In the pharmaceutical space, we like company like in the hospital like Apollo Hospital, in the pharmaceutical company like Lupin or maybe Ipca Lab. In the PSU banking space, we like SBI, Canara Bank and Indian Bank.
Okay, all right. So the next question that we have is from Sandeep, who is writing us from Hyderabad, asking about TeamLease services. Wants to know if you can go ahead and buy this at the current level. Sachin, a very good morning to you. I'll come to you on this one. Your view on the charts for TeamLease? If you can try to pull up the TeamLease chart and see as to how it's done over a period of time.
The stock is actually into a serious downtrend, continuously making lower high and lower low pattern on all the major time frames basically. So I think one should exit the stock. Currently it is into a very oversold territory. So but continuous basis we can see it is making a lower high, lower low and not taking bounces as well. The bounces are relatively very shallow. And the stock is not able to hold its at least the 20-day moving average as well. So the recommendation will be to exit from such stocks, and he can actually like Saurav has told to go into the PSU banks. Even I second that, can go to the PSU banking space. I like Union Bank basically.
Got that view, Sachin. But the next query that's coming in is on Kaynes Technologies. Now, our viewer actually Srinivas actually bought roughly 3,600 rupees per share on holding 30 shares of Kaynes Tech. He's asking a 3 to 6 month view on this one, Sachin. What would be your view?
Kaynes Technology also comparatively, we can see it is continuously making lower high, lower low pattern. And even this stock is the maximum bounce what we have recently witnessed is till the 50-day moving average only. The recent low which it has made of 32.94, if that is holding, only then we can see a relative bounce till 3900. But still, if 32.94 is not holding, then we can see a lower low pattern to be continued. And in that case, the lower levels which we can witness in the stock is 3,200 and 3,000 as well. So if he wants to hold, so it will be a very strict stop loss of 32.94.
Okay, that's the view coming in on Kaynes. We've got our first caller for the day. Arvind is calling us from Bareilly. Arvind, very good morning to you. कैसे मदद करें आपकी?
गुड मॉर्निंग मैम ये तो मार्केट में सूर्यास्त होने का नाम ही नहीं ले रहा।
I know.
मेरा क्वेरी था आरईसी और पीएफसी जो ये दोनों मर्ज हो रहे हैं, इनमें से कौन सा परफेक्ट बेट रहेगा 3 साल के लिए जिसमें मुझे अच्छी वैल्यू मिल सके, वैल्यू बाइंग हो सके?
ठीक है, समझ गई. डू यू ऑलरेडी होल्ड अरविंद एनी ऑफ दीज काउंटर्स?
मेरे पास आरईसी है, उसके करीबन मेरे पास 150 शेयर्स हैं 380 पे.
ओके, ऑलराइट, समझ गए अरविंद आपकी क्वेरी. सौरभ, ये क्वेरी मैं आपसे लूंगी. उनका क्वेश्चन वैलिड है, ऑफ कोर्स व्हाट ही मेंशन्ड अबाउट मार्केट्स नॉट सीइंग द डे ऑफ लाइट, बट योर व्यू ऑन बोथ पीएफसी एंड आरईसी.
देखिए, जो करंट मार्केट में तनाव चल रहा है इसमें बैंकिंग एनबीएफसी स्पेस अच्छा लग रहा है. अगर पीएफसी आरईसी की बात करें तो कम वैल्यूएशन पे ट्रेड हो रहे हैं और पीएफसी में तकरीबन 4% का डिविडेंड यील्ड भी है. मर्जर होने के बाद पीएफसी ज्यादा अच्छा लगता है. पीएफसी मुझे लगता है कि आपको अपने पोर्टफोलियो में आप डाल सकते हैं, वो भी धीरे धीरे करके, क्योंकि मार्केट में गिरावट है तो अपॉर्चुनिटी आपको बार बार मिलेगा. तो आपका व्यू सही है. अगर आप इस स्पेस पे पैसा डालना चाहते हैं तो बिल्कुल 3 से 5 साल के लिए आप जरूर डाल सकते हैं.
3 to 5 year view coming in on PFC at this point in time from Sora. But the next counter very topical today is IDBI Bank. Now stocks down 15%. Vivek from Chennai is actually holding shares at 110 rupees per share, and he's asking if it would make sense to exit this counter right now at this price point, or should he continue to hold? Saurabh, it's a tough pill to swallow, right? Because yet again, as media reports indicating that the stake sale could be yet again hung in that sense. Would you recommend Vivek to exit this counter right now?
Maybe he maybe probably can wait for a bounce back or something like that. See, people have been waiting for the IDBI disinvestment for years, and they have been chipping in the hope that maybe the fortune will change after the disinvestment, and that has not happened yet. And it is not the best of the lot. If you look at the PSU banking space, they are more good players in the basket. For example, SBI, Indian Bank, Canara Bank. We have just talked about it. So maybe he can shift his money in any of the pullbacks to some of the other PSU banks that I have talked about in a staggered manner.
Okay, all right. So that's the view on IDBI Bank. The next one is on Voltamp. Amit Agrawal from Agra is asking this question. He wants to know as to from a 6 to 8 months perspective, what are the charts indicating his holdings since the levels of 8780. Sachin, what's the view on the charts?
Overall, the stock is into a sideways to negative on a daily time frame, but on a weekly time frame, we have seen a good bounce basically. So if he wants to hold, he can hold with a stop loss of 8,000 round figure, and we can see a bounce till 9,000 and 9,200 levels.
Got the view, Sachin. But the next counter, and yet again, given the current correction, Manohar is asking us this question: if it's a better pick, which stock is a better pick at the current price? Is it L&T or Mahindra and Mahindra? Saurabh, for the long term, what would you recommend? Is it either or both of them that you like at the current price?
Out of the two, I like Mahindra. Why I do not like L&T is because the market have concerns because of their 35% business, hydrocarbon business coming from the Middle East, and the tensions are real for there, and it may linger on with the current war scenario, which is engulfing whole of the Middle East, and many of the countries have stopped or slowed down their crude oil products. So in that sense, I think Mahindra offers a better value.
Okay, all right. We've got Ranjit calling us from Chennai. Ranjit, a very good morning to you. What's your query about?
Hi, good morning. I have Inox India stocks, 80 quantity at the price of 1135.
Okay.
So shall I hold or buy again?
Okay, what
is
this
for long term?
Long term. Okay, Saurabh, your view on Inox India? He's hardly sitting on a loss of 500 to 600 rupees.
The loss is very minuscule. I would not suggest to buy more. Rather, I would suggest him to wait and wait for the stock to gain.
Wait for the stock to gain on Inox India. And the next stock, that's on our radar today is from Mahesh from Andhra Pradesh. He's holding shares of Sai Kalamandir, bought 100 shares at 165 rupees per share. Now his question largely is that stock's currently trading at 96, so it's way below his buying price. He's asking if it has a longer term outlook that's continuing in terms of the positive side, but what would you recommend, Saurabh? Is it a good time to buy now, average down in terms of a long-term view?
On the valuation front, the stock is trading about 1.2 times to book value and 12 times to its trailing earnings and offering 15-20% kind of a growth. I think it is more of a result of a market meltdown. I think when things will stabilize, the stock will stabilize soon. I would not suggest to buy more, but at the same time, I would recommend to hold.
Okay, all right. So that's the view coming in on Kalamandir. But moving on and taking a look at the F&O space, we have Sharad joining by to give us a perspective on what the F&O space is looking like. Sharad, over to you.
Well, the perspective is still negative and it's a sell on rise. There was a little bit of hope earlier in the morning, but seems like the stability is not there in the markets. There is a sell-off happening. But interestingly, Aditya Birla Group stocks are holding the fort. Ultratech, one of the leading gainers. HDFC Bank is also in the green, but sell-off is there. But it's not as bad as what we had seen last week. But definitely Infosys, M&M, Power Grid, BL, all of them falling between 1 to 2% plus. Also, let's look at how the BankX is shaping up. And remember, HDFC Bank is holding up. So that is something which is positive coming in, but some buy size announcements also coming in from the ICICI Bank as well. Long build up definitely is for Aditya Birla Group of stocks, which you can see, and largely there is some price hikes coming in the paint segment as well. Varun Beverages and Vodafone Idea, they are also up in trade, short covering in these counters, while long unwinding is there for NBCC and ABB India. That's where some sell-off is there, but the short build-up is definitely there for all the OMC stocks, and IOCL makes it to the list here. It's down 5%, and Bandhan Bank, that sell-off has intensified. It's down almost 7% right now, so definitely there is a big sell-off happening when it comes to the Bandhan Bank and basket sell-off in the OMC space.
Thanks so much for that, Sharad. A couple of big brokerage notes also coming in on Varun Beverages this morning. Likely a key positive trigger as well, but the next counter that we're focusing on, it's on Happiest Minds. Stocks tanking in trade today. A couple of days ago was in focus after the company raised its guidance in terms of revenue growth to 12.5% and hence saw that 18 to 20% uptick. Now, our viewer Bharat actually is holding 500 shares but at 545. He's asking if he should continue to hold this counter or sell out. What would you recommend, Saurabh? Is it a good time to average down given that we've seen some confirmation and comments coming in from the management now?
I think some improvement, some guidance improvement in terms of margin has taken a stock a bit higher. But if you see in the last many quarters, the stock has underperformed. And if you like, per se, if you view the whole of the IT sector, they are in serious problems, even the bigger players. So in my opinion, a lot of volatility will be there in companies like Happiest Mind because of their sheer size. I would not recommend to buy more. Rather, I would suggest him to get out if any opportunity comes and shift to the sectors that we have talked about in the show.
Okay, all right. We've got our next caller. Ashwin is calling us from Kerala. Ashwin, a very good morning to you. What's your query about?
Yeah, good morning. Very good morning. Like, I'm trying to create a position on Jindal SAW for the day. So I just wanted to know whether that would be a good pick or not.
For the day, you say. So that's an intraday
For
trade
the
that
day,
you're
yeah.
planning. Okay.
Yeah.
All right. Sachin, I'll come to you on this one. Any view on Jindal SAW just to take an intraday trade?
From an intraday point of view, yeah, he can take a trade with a stop loss of days low basically, but it should cross 197 on the upside. If it is crossing, then he can buy this.
Got that view, Sachin. But time now for the rapid fire round in this edition of Ask Profit. Sachin as well as Saurabh request you to keep your answers only on buy, sell or hold so that we can take as many queries in the next few minutes. The first question that's coming in, it's on IDFC first, bought at 75 rupees from Lalita. Should she continue to hold this counter, Sachin?
Exit.
Apollo Hospitals is the next one. From a 3 months perspective, Siva from Amravati wants to know if he can continue to hold. Sachin, your view on the charts?
Hold.
Right time to accumulate Punjab and Sindh Bank also, Sachin, at this price?
Punjab and Sindh, no.
ITC, 50 shares bought at the levels of 381. Hold or sell from long-term perspective, Saurabh?
Sell.
IRFC held by a viewer currently at 144, Saurabh. Should he invest more now or exit?
Do not invest, hold, keep on holding.
Netweb Technologies, is this the right time to buy from a short-term perspective, Sachin?
Netweb, right now, no.
The next one that's coming in, it's on IHCL. Would you recommend continuing to hold this counter or enter more at this price, Saurabh?
Would recommend to buy more and hold for long term.
Exide Industries bought at the levels of 424. Should I continue to hold? Saurabh, your view?
Avoid.
Venkatramani is holding M&M at 3090, almost 180 shares. Is a good time to average down right now, Sachin?
No, hold.
IndusInd Bank, current levels, planning to add 100 odd shares. Shankar from Bengaluru wants to know if this is the right thing to do. Sachin, your view?
Hold.
Roughly 1400 shares of Swiggy held since IPO by Arun. What should he do with this counter, Saurabh, now?
Take money off the table.
Okay, the next one is on Grow. The viewers, managed to hold it since its listing. Do you think this is also a good counter to continue to hold? Saurabh, your view?
Better to exit.
GE Shipping bought at 1251 rupees per share, Saurabh. Our viewer Angad wants to know what should he do with his 20 shares.
Keep on holding.
Ashok Leyland, is this a good time to buy? Sachin, your view on the charts?
Ashok Leyland, yes.
Would you recommend Saurabh entering Eternal at this price is what Ramesh is asking.
Avoid.
Vikram Solar for the next 2 to 3 quarters. This is a good time to buy. What's the technical view, Sachin?
Avoid.
HAL bought at 4,427, Saurabh, by a viewer holding 150 shares. Would you recommend him to buy more at this price?
Do not buy more, keep on holding.
IRFC, 15,000 shares bought at an average price of 130. What's the short-term view, Sachin?
Exit.
A view on Astral as well. Sachin, at the current price, what should our viewer do?
Astral hold.
Bajaj Housing Finance. Vivek is holding 470 shares at the levels of 160. Hold, sell, average out. Saurabh, your view?
Hold, do not average out.
Indigo bought at 4683 by Suresh Nair. He's holding roughly 14 shares, Saurabh. Should he continue to hold or average down right now?
Exit.
Reliance, is this a good time to continue to hold? At what price should I average? Saurabh, your view?
Keep on adding on every dip of 4-5% and keep holding for next 3 to 5 years.
Tata Communication bought at 1963, Sachin, by a viewer holding 500 shares. What should Suraj do with this counter?
Exit.
State Bank of India. Prakash from Telangana wants to know what's the entry level to enter this counter. Your view on this, Sachin?
He can enter above 1100 basically, or with the support of 963. Right now, do not enter.
Natco Pharma bought at 1052, Saurabh, roughly 250 shares. What's a long-term view or 3 to 5 year view?
Long-term positive.
Well, that's the end of the rapid fire in this edition of Fast Profit. But stay tuned. And Sachin, thanks so much for joining in and giving us your views across queries. But Saurabh, stay with us. A lot more stock-related queries on the other side of this very short break.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी Some moments in life are lifelong. Some memories are lifelong. Just like Tata Power Solar Roof, best quality solutions, lifelong service guarantee and unmatched expertise. ये on the quality lifelong.
हाथ, ये हाथ केवल हल नहीं चलाते, मिट्टी से सोना उगाते हैं। ये हाथ केवल सिलाई नहीं करते, देश को नया रूप देते हैं। ये हाथ लोगों को उनकी मंजिल तक पहुंचाते हैं और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
In a month that moved markets, shifted diplomacy,
the entire world,
and stirred political battlegrounds, India chose its news carefully. NDTV India and NDTV 24/7, #1 on YouTube. NDTV Network, streaming India's trust, leading India's conversations.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
First India tour in your city. Rag on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decision. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the
Welcome back. You're watching Ask Profit right here on NDTV Profit. Before we take a lot more of your stock-related queries, let's quickly pull up the Nifty 50 chart because you are seeing that pressure yet again on the index. We've fallen and broken the 23,000 level and then yet again seen buying. So the volatility in trade continues. We started off the day about 23,100 and have given almost 240 to 250 points on the downtick. So you are seeing that the markets are at day's low. Sensex also fallen by almost 500 points as visible on your screen as well. So you continue to see that pressure, and that pressure is broad based. You're seeing the Nifty Bank also continuing to be under pressure at this point of time. So very early spurt is what we are seeing as you see at the bottom of your screen right now, both for all the indexes. But yet again, the 53,400 level is it's a key support that we are maintaining on the Nifty Bank as well. But we still have Saurabh with us. Let me also welcome in Ajit Mishra, SVP Research at Relicare Broking as well. Ajit, I know it's a very volatile time now, but a very quick question on the indexes, right? For the Nifty Bank, for the Nifty 50, what are some of the key support levels? Is it 22,800 that you continue to monitor for the Nifty 50 at this point of time?
Yeah, good morning, Puneet. So, Puneet, yes, markets are volatile, and in fact, it's falling like 9 pence, and still we are not seeing like any sign of recovery or rebound, sustained rebound rather, considering that the crude is still hovering above $100 mark. As per the index, 23,900, the gap area that we have is the immediate support on the index, the next critical support to watch out for. Banking, unfortunately, has slipped below its critical support at 53,400 mark, the zone where last time, we were seeing base formation followed by a rebound. So on the closing basis, these two key levels is something that you should watch out for, means 22,900 and 53,400. In case Nifty and banking index fail to hold these levels, probably we are set for more pain in days to come.
Okay, all right. So that's the view coming in with regards to where the benchmark goes. 120 odd points of a downtick is what we're seeing right now. But taking our next caller, Ravi is calling us from Hyderabad. Ravi, a very good morning to you. I believe you have a question on G Vernova TND.
Yeah, hi, very good morning, and also to the panel as well. I'm holding 18 shares of GV Vernova TND, bought at 3170.
Okay.
So just want to know, shall I sell? I mean, since the things are getting worse and day by day the stock is moving towards down. So shall I book my profits and also protect my investment as well?
Okay, all right. Got your question, and I believe this is from a long-term perspective, so I'll stick with this. Stick with Saurabh for this one. Saurabh, your view on G Vernova TND?
In case of the right opinion, the stock got re-rated in the last few quarters and trading around 36 times to price to book value and more than 80 times to trailing earnings. In fact, the growth is also stupendous, which is igniting this kind of a valuation. But what is happening in the market can take down the stock price down, and there may be a bout of profit taking. So in my opinion, he is absolutely right. He should take money off the table.
Take some money off the table is what Saurabh would recommend at this point of time. So definitely continue to monitor this counter. But we have been talking about the markets being under pressure. It's also time to have some key profits that our viewers have made as well. And Jashimuddin from Assam actually holds PNB. He's bought the shares at 13.3 rupees per share. Stock's trading over 100 rupees right now. And he's asking what he should do with his 550 shares. So he is on a profit of almost 50,000 rupees. So good on you, Jashim, at this point of time to continue making those profits, right, even at such a volatile time. But Saurabh, let me stick with you. Should he continue holding PNB at this point of time, given his very attractive buy price as well? What would you recommend?
Chin, if you are not in the need of the money, then you can hold for the next 3 to 5 years. See, we have a positive view on the PSU banking space especially, and the PNB book is quite clean now. Over the years, the management has done everything possible to clean out the book. The PCR ratio is good and very much contained NPA levels. This time around, the market is seeing a good amount of selling because of the tension in the Middle East, and the stocks are in pressure. In fact, of late, the banking space also came into the pressure, and this may go along for the next few months also. So if you are in need of the money, you can take money off the table. Otherwise, stay put for the next 3 to 5 years.
Okay, so that's the view on PNB. The next one is on hospital stocks. Soumik from Kolkata is asking if he can go ahead and buy Narayana Hrudayalaya or Apollo Hospitals. And if yes, if one of these stocks, then what should be the kind of entry price that he should be looking at? Ajit, a very good morning to you. What's your view on both of these counters?
So, Mahima, both stocks, they have done exceptionally well in the recent month. In fact, if you see that of late also, we are not seeing major pain in the healthcare space, pharma, select energy counters, they are still holding strong. Today being the exception, because today we are seeing that even the pharma counters are also on the slightly on the back foot. Among the, Apollo and NH, in case if the view is short term, I would prefer Apollo Hospital, considering its relatively higher strength, and the stock was very much close to its record high levels. So it's a marginal bit of a decline. So we can start accumulating even at current levels and add more in case if it slips towards 7,200 mark. For the entire position, his stop should be at 6,800, and positionally, again, once the market stabilizes, 7,800 to 8,000, that should be the area where he can maintain as the targets.
You Ajit, but the next question that's coming in is on Bajaj Finance. Now, this counter has been under pressure since the war has also started, and that's been another key trigger. So stock trading at 857. Our viewer Iswaran has actually bought at 996. Now he's holding 300 shares. Saurabh, he's asking what he should do with this counter now. Should he sell out or hold at the present rate? What would you recommend?
It is a very old NBFC with proven track record, and there is no point. There is no problem with the operational matrices. There has been a selling overall in the market and in the banking and financing space also. So if you are here for long term, I think you should keep on you should keep on holding. Otherwise, you may get out.
Okay, all right. So that's the view on Bajaj Finance. The next one is on BLS International. Our viewer Kurshit from Delhi is holding 200 shares at the levels of 294. Wants to know if we can go ahead and add more at the current level. Ajit, your view on the charts?
So, Mahima, we are still seeing that the previous few lows is something that the stock was trying to defend, but of late we have started witnessing a bit of a pressure again. Still it's not a time to add more. Let this stock stabilize, form some base. So at current close around this area, maybe around 230-35 is something that we might see a breather. But for any sign of reversal, we need a close about 265. So as of now, if the view is short term, then definitely you should avoid. In case if you are looking for an investment also, then wait for some sign of stability, which is not yet. And in case if it manages to cross 260, then only we'll see some momentum.
Got that view, Ajit. But the next question is on ICICI Pro AMC, and our viewer Iswar actually has been holding this counter since the IPO price, of course, to 2,100 to 2,200. Now, Saurabh, he's asking if he should buy more at this current price point. Now, stocks gone till almost 3,200 and then retreated in this market correction. Do you feel, Saurabh, it's a good time to add this counter?
I feel adding this to this counter, because normally what happens in the bull market, stock broking, AMC stocks do perform, and off late the data is suggesting that this even the SIP amounts are moderating, and there are chances that because of these last 18 months people do not have enough, do not get any profits. Maybe there may be some slowdown in their investment strategies. So, in my opinion, I think the valuations are also high even after the correction. My opinion is better to avoid.
So, Saurabh, would you avoid the space in general or just ICICI Pro AMC? So, is it that you have a pick in the smaller names like Aditya Birla AMC or others?
No, I would rather avoid this space for the moment.
Okay, got it. Well, we have another caller now dialing in from Bengaluru, and Rishi has a stock query for us. Rishi, good morning. Welcome to Ask Profit. What's your query?
Hi, good morning. I wanted to ask, given the dip, should we buy now KPIT for long term, say 3 to 5 years?
And Rishi, do you have any other of the IT pack or the ER&D pack in your portfolio, or will this be the first one?
This is the first one.
This will be the first one. Got it. Well, and is this a long-term pick, Rishi?
Yes, 3 to 5 years.
3 to 5 years.
Horizon.
Got it. Saurabh, I think every time I would have asked you KPIT Tech over the last few weeks. I'm sure I'm grateful we're not keeping account, because a lot of investors have asked us this question, right? Would you recommend KPIT Tech at the current valuation?
The valuations have corrected, but still they look expensive in context to the operational performance given by the company. In the last few quarters, you see that the results have been disappointing, and there has been pressure on the margins and the profitability. So, in the sense, till the erosion gets over, or we see good amount of commentary by the management, and that gets converted into the numbers too, we do not expect any, change in the current scenario. So, in my opinion, I think it is best to avoid.
Okay, all right. So that's the view coming in on KPIT Tech. The next one is on PB Fintech. Aditya has bought 120 shares at the levels of 1630. Wants to know from a 6 months perspective, can he add more or exit the counter? Ajit, what's the view on the charts?
So, Mahima, we are seeing a bit of a pause, means the pace of decline has reduced. Off late, the stock made an attempt of recovery also to reclaim its short-term moving average, but couldn't sustain. So, let the stocks cross this 1500, 1520 barrier, then you may consider adding with 1640, 1650 as the target. And in the interim, 1300, the previous swing base, that should act as your stop loss.
Stocks down 35% since the start of 2025, so has been a volatile counter. When you also look at the 1 year and the 5 year chart, that shows you the volatility that this counter has gone through as well. But that's Ajit's view on the stock. The next one, that's coming in, it's in the hotel space, and we've spoken to Saurabh quite a bit about that as well. Ara from Mumbai is asking if it's the right time to enter ITC Hotel or M&T Hotels from the long term. What would you recommend, Saurabh? Yet again, I think you have a positive view on the hotel space. Do either of these make it to the list?
I think the investor fraternity is not actually happy with the amount, with the restructuring which is going to happen in the Lemon Tree. Because of that news, I think the stock has already corrected 30-40%. So I think it is best to avoid Lemon Tree, and I think he should go with the ITC Hotels. The numbers are great, and in fact this year also the demand supply is in the favor of hoteliers only, and we can expect improvement in the average room rate and both in occupancy rate also. So I think it is best to go with the ITC Hotel.
Okay, all right. So that's the view with regards to where the hotel space goes. But it's time to slip into a very, very short break. We'll be right back answering all your queries on the other side. So do stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी Some moments in life are lifelong. Some memories are lifelong. Just like Tata Power Solar Roof, best quality solutions, lifelong service guarantee and unmatched expertise. ये on the quality lifelong.
ये हाथ केवल हल नहीं चलाते, मिट्टी से सोना उगाते हैं। ये हाथ केवल सिलाई नहीं करते, देश को नया रूप देते हैं। ये हाथ लोगों को उनकी मंजिल तक पहुंचाते हैं और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
In a month that moved markets, shifted diplomacy,
The entire world.
and stirred political battlegrounds, India chose its news carefully. NDTV India and NDTV 24/7. Number 1 on YouTube. NDTV Network, streaming India's trust. Leading India's conversations.
India tour in your city. Rag on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
Alright team, our new auto show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
The expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations. And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Welcome back. You're watching Ask Profit. We've got our next caller. Prashant is calling us from Bengaluru. Prashant, a very good morning to you. What's your question about?
Yeah, hi. I wanted to ask about HPL Engineering. Is it a stock that the panel would recommend to buy? I'm currently holding 145 unit at 656 price. If the recommendation, if they recommend, then should I be adding more at dips, or what's the view on the stock?
And what is the time horizon that you're looking at?
About a year.
About a year. Okay, then I'll take this up with Saurabh. Saurabh, any view on HPL Engine?
I would not suggest to buy more, but at the same time, I would suggest him to hold.
Got that view, Saurabh. But the next actually query that's coming is on Central Bank of India, and Mr. Patel is holding shares at 38 rupees per share. Ajit, on this particular counter, what would you recommend?
So, Puneet, the problem is that it didn't participate, much during the recovery phase or the up move that we were seeing in the PSU banking space. But during the decline, definitely it's underperforming. So that shows that even at current levels, market is not very keen about making any investment or giving any kind of uptake or a recovery kind of a scenario in central bank. So basis that, I feel that it's prudent that he should exit his position because he bought it very closer to the current prices and switch to rather HDFC Bank or ICICI Bank at current levels.
Okay, all right. The next question that we have is on LIC. Our viewer wants to know if this is a good time to maybe enter LIC, and if yes, what would be the target and stop loss and entry point as well. Ajit, your view on the charts for LIC?
So, Mahima, for short term, I won't recommend LIC, but for the long term, as a disclosure, we have recommended to our clients also, and we have a positive view. Short term, possibility of retesting the previous swing low close to around 740, 730 is high. So maybe 20-30 points from the current levels, it might witness a decline, and then probably around that area we might see a base formation followed by a rebound. So if let's say your view is 3 to 6 months, you can start accumulating at current levels, add more in case it comes around 740 area. For the entire position, 710 should be a stop loss, and 820, 840 that should be a positional targets.
Got it, Ajit. Well, it's a surprising time to say the least in the markets, because now the Nifty 50 is in the green. Pull up the chart And we just spoke about at exactly 11 o'clock when Ajit joined the show that we slipped below the 23,000 mark, gone down to 22,988. Since then, just see the recovery in the last 20 minutes of the last 20 minutes shows you that it's a very, very volatile time at this time of the day. And when you look at the heat map also, let's quickly pull that up. Let's quickly look at the contributors as well before we start the rapid fire round. It'll show you that, stocks, especially in the banking space, are showing us some of the gains at this point of time. So you've seen Ultratech that was up already at this, up almost 3%, but you're seeing a large breadth of the stocks now coming into the green. So 21 stocks for the Nifty 50 in the green now. L&T, which was down almost a couple of percentage points as we started the show, is now, very, very close to the break-even point essentially at this point of time. But HDFC Bank there is one of the gainers. So is Bajaj Finance, Bajaj Finserv, Adani Ports, M&M also in the green yet again. So the auto pack that was down 8% in the last week is seeing some buying at this point of time. So it's surprising. It's a positive surprise that we'll take at this point of time, but definitely one that we continue to monitor. But almost, like the breadth has largely changed, Mahima, because you're seeing that a lot of those stocks were dragging in the Nifty at one point of time, but now in the gain. So the IT pack still down, but you're seeing the banking ones and a clutch of auto names that are driving the momentum for the positive side.
I'm just wondering if broader end of spectrum has also recovered a tad. Let's try to pull up the mid cap 150 and the small cap 250 and the advanced decline ratio as well to see if there is change there. Yes, there is. The mid cap 150 at the start of the show was almost down 1.6 odd percent. So recovered from that. The small cap 250 has also recovered from its day's low point. And 200 odd stocks, have turned into the green from where we started at 10:30. So at least some positivity coming in regards to where the markets go. So that's, how the markets are shaping up. But it's time for a rapid fire round now. Saurabh, Ajit, you both know the drill. Try to keep your answers as short as possible. The first question is from Ishwar, who's writing us from Kolkata and wants to know a few small cap stocks that you could suggest, Saurabh, from a long-term perspective. Your view?
Small caps that are coming to my mind are maybe NHPC, SJVN, Canara Bank, Indian Bank, and maybe a company like Old Time Transfer.
Thanks for that, Saurabh. But the next question on Hindustan Copper, Ajit, it's the right time to enter this particular counter?
No, avoid.
Okay, the next one is on NTPC and this is coming in from Sunil, who's writing us from Pune, asking about the targets and stop loss on this one. Ajit, your view?
Yeah, hold with 370 stop, 395 target.
Suman's holding on to CDSL at 1475. Saurabh, he's asking if it's a good time to add more right now.
Avoid adding, keep on holding.
Okay, the next one that we have is on NSDL. Is this a good time to buy? Ananda from Bangalore is asking this. So, Saurabh, your view?
Which stock?
NSDL.
Avoid.
Between SBI, HDFC and ICICI, Saurabh, what would you add for the long term?
ICICI and SBI.
Bosch Limited, is this the right time to average? The viewer is holding, Praveen is holding 15 shares at the levels of 33,756. Your view on the charts, Ajit?
Buy around 28,000.
ONGC bought at 290, Ajit. Should Rahul continue to hold this counter?
Rather maintain a stop at 255.
Moschip bought at the levels of 218. What's the long-term outlook on this one? Saurabh, any view?
Very small company with high valuation and lot of volatility. Avoid.
The next one that's coming in, it's on the auto pack yet again. Suprajit Engineering, what would you do with this counter, Saurabh?
Hold.
Sterling and Wilson Solar, is it a buy at this level, Ajit?
Avoid.
Would you buy into this dip in Tata Motors commercial vehicle, Saurabh?
Yes, you can go ahead.
Okay, Bellrise, is this the time to sell? Bought at the levels of 187. Saurabh, your view?
Yes, you can exit.
The next one's, coming in on Dixon Tech. Saurabh, given the current dip, would you buy at this counter?
Still high on valuation, may slide more, exit.
TCS is something that Pranav is holding and sitting on a loss of 20%. Good time to exit. Ajit, your view on the charts?
Hold.
Infosys at the current price, Saurabh, would you add for someone who's already holding these shares?
avoid.
Som Distilleries, is this a good time to buy, sell, hold? Ajit, your view on the charts?
SDBL, I guess that's the symbol.
Yes, SDBL,
Yeah.
correct.
Avoid.
All right, okay, that brings us to the end of this round of rapid fire as well as Ask Profit. Ajit as well as Saurabh, thank you so much for taking out the time and helping us answer all those 68 queries. Probably today, yet again, we'll be able to touch the magical number of 100, but viewers, completely out of time on this edition of Ask Profit. But do stay tuned, KYC up next.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी। Some moments in life are lifelong. Some memories are lifelong. Just like Tata Power Solar Roof, best quality solutions, lifelong service guarantee and unmatched expertise. ये on the quality lifelong.
बिटिया की शादी है हमारी।
बधाइयों बधाइयों।
कुछ पैसे मिल जाते समय पे लौटा दूंगा। जिंदगी में जरूरत के वक्त हम अक्सर अकेले पड़ जाते हैं।
इसीलिए तो केपरी लोन्स आपको गोल्ड लोन देके अपना फर्ज निभाते हैं। केपरी लोन्स फर्ज निभाते हैं।
In a month that moved markets, shifted diplomacy,
the entire world,
and stirred political battlegrounds, India chose its news carefully. NDTV India and NDTV 24/7. Number 1 on YouTube. NDTV Network, streaming India's trust, leading India's conversations.
First India tour in your city. Rock on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
well, I'm sure we'll be having outstanding reviews, solid suggestions,
The expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decision. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations. And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company.
Hello and welcome to KYC. I am Sharad Dubey and you are watching NDTV Profit, a very interesting company I have got. And of course, the theme is on the crisis. Whatever the crisis is happening in the consumer space, there is an interesting company for you in KYC segment. But before that, let me give you some hints. Try to guess which company I'm talking about. The first one is, it's a Pune-based poultry products seller. A lot of important products they are actually going into, and this also includes your ready-to-eat food. The second hint is definitely going to be the company also has other businesses, which includes animal health and even oil seeds. Now you must be understanding the overall universe is small, so you can guess it now. The stock, however, is down 20% in 2026 already. The big sell-off happening in this counter as well, and also most of the mid-cap and the small caps have seen a big round of selling. And the ready-to-eat food segment, that is where my interest comes. The company is actually on focus on that category as well. So you must be wondering which company it is all about, and the company in focus, it's there in a part of our household meals also when you buy these packaged foods which comes on your fridge. And the company's name is Venky's India. This is the company which we'll talk about. But the question remains is, why am I calling this small cap company in KYC? What's the important reason for it? You guessed it right. It's the LPG related crisis which is definitely there. A lot of households are stacking up on packaged foods. That's something to look out for. But remember, company does export of eggs also. The demand for this segment after the LPG issues impacting the households, has that demand gone up? That's the first question to be asked to the company. The second is, of course, the export related items. You know, there's a lot of Gulf related exports which goes on. There is a supply chain issue. So is that impacting the company? And if yes, are they catering that amount or the goods to the domestic markets or not? And how are the broiler and the industry pricing looking like? Remember, the realizations industry is on the lower side, but in Q3, however, there was an earnings surprise. Will that continue in Q4? That's a big question. Also, the company's egg pricing, that has softened in because Gulf exports have declined, and that's what we have seen. The domestic market, the egg prices after the winter season coming over is on the decline. So that is something which we will watch out for. And also the company is focusing on reducing the volatility in their portfolio, especially on the cyclical front. So let's see which products the company is under right now and which will venture into. And to give us an entire perspective, we'll be joined in by Prasanna Pedgaonkar. He's a general manager at Venky's India, where Prasanna will give us all these details and the queries which we have asked him for KYC. But let's give you an entire picture about the company, what Venky's is all about. It is definitely a household name. You have seen that in your fridges, but there's something more. It's of course a Pune-based poultry products seller, but apart from that, there are other businesses also which you should focus on. This of course includes the poultry products, animal health, and of course oil seeds. These are the 4 key business line categories where the company is focusing on. But let me give you another perspective, is that its company is entering into the ready-to-eat cooked spices market. This is a high margin, high growth space, and of course company is already there in the ready-to-cook meals or the pre-packaged meal segments already. But the company is focusing on reducing its volatility by soya processing businesses, SPF eggs, and even processed chicken products. Interesting product profile if they want to, come out. They are supplying to QSR players such as KFC, Pizza Hut, Burger King, and even McDonald's. The list is bigger, but these are the key players I would like to talk about. Also, they have B2B, B2C clients. This includes Walmart, Metro Cash and Carry, Star Bazaar, Future Retail, to name a few. This is where majority of their businesses happen. Remember, it's a B2B also, B2C segment also. Let's just see how the sales breakup happens. And very interesting way the company has given this, the volatile business and the non-volatile business. It's largely even Stevens, but nevertheless it's very much important, especially the seasonality impact also come in this business model. Also, apart from this, let's look at the Q3 key commentary, how it has been. The poultry and products segment has performed better due to improved realization. Last year, of course, there was an overhang on them, and the animal health products and the oil seed segment, these are the largely non-volatile businesses. They have performed on a satisfactory basis. So largely mixed numbers have come in Q3, nothing out of the book, and that's why there might be a big selling pressure in the stock which we have seen. The realizations What are the key concerns for Venky's India? What are the performance issues with the company? The realizations are still remaining low for the poultry products if you look on a long-term basis. The second reason why Venky's is seeing selling pressure is the lack of institutional participation. FISDIs, the coverage is not there, and I'll get you all those details when we get the companies for the KYC ratings as well. The volatility is there in the business segments, and companies definitely trying to come towards the non-volatile segment, but it will take time. As a long-term investor, you should have patience for that. The cyclical nature of the oilseed business, that also comes in. So these are the key factors, you could say, which is ailing the performance of Venky's India. But let me give you the total rating parameters of how Venky's India is actually, going to be judged in KYC. There are 8 rating parameters where we get our company in KYC. The first 3 is the holy grail: income statement, balance sheet, cash flow, which we track. But the return ratios is also very much important. And the company itself, if you look at the shareholding, how the FISDIs have moved, or the promoters, have they moved or not? That's the question. Street cred would be kitna paisa kamaya gaya. It is short term, long term, or even you could say a very, very small time period as well. Valuations, we'll compare the company with their peers. Largely, I have taken the mid cap and the small cap players. So that's where we'll try to understand, is there any value coming in this counter or not? And definitely the outlook, especially on the industry front, that's something which we'll be watching out for. But nevertheless, it's a very interesting sector, and we will explain you bit by bit what's happening here so that you understand the entire picture for Venky's India. The first one is the income statement. Let's pull out the income statement and see where the concern is lying, and the concern is lying everywhere. The revenue numbers, the EBITDA numbers, the PAT numbers, look at that 3-year CAGR numbers, 9% down, 11% down, this is also 11% down. That means there is some kind of an industry pressure, and this is a prolonged industry pressure. This is not a yearly seasonality impact coming in. That's why perhaps the market is not giving the returns or the valuations, or even you could say the perception for this company. But nevertheless, this is a business model to look at, and this is your overall setup, how things are panning out. Q3 numbers, we did talk about it. So it's a thumbs down when it comes to the income statement. But the second parameter is the balance sheet. Let's talk about that. And balance sheet has been pretty much decent. The equity value has been good. And the cash bank balance is stable. It's currently at 201 odd crore rupees. Remember, this is a very high working capital business. There is not a single iota of debt. The long-term debt is literally not there. It's just the short-term debt. It's a very high working capital business, and that's why we are seeing a good cash flows also there in the annual report. So largely we see the balance sheet maintenance for a capital intensive business is sorted here. That is why I'd like to give a strong thumbs up when it comes to the balance sheet. Also, apart from balance sheet, let's talk about the cash flows, how things are moving for the company. Is there any lumpiness involved? And definitely the question rises on the realizations and not on the operational front. So that's why we see largely it's decent, a slight dip coming in from the overall operation cash flow. EBITDA also on the higher side. So this ratio did come down going ahead, but nevertheless, there is a little bit of lumpiness in this kind of a business model. So right now, let's just keep this a neutral rating when it comes to the cash flow segment. Let's talk about the return ratios, and return ratios has been, on the downtick. FY21 was like a watershed year to talk about it. It was around 32 odd %, but it's not sustainable, to be honest. What a sustainable would be something between 12 to 18%. That is what as an investor you should be looking at for a company like this. But there was a downtick coming in. But has this bottomed out in FY24? That's the big question. And yes, it has. Look at that in FY25. It has gone up to 11%. So we'll definitely ask the company, are the ROC numbers going to improve to that 14-15% mark in the next 2 years? That's the main question. But yes, it seems like the worst is over here. So return ratios, I'll be giving this a neutral rating. Let's talk about the shareholding, how things have moved, and actually nothing has moved. Just look at the numbers. Do you see any change? There's not a single change. Whether it's good or bad, that is something we should be watching out for. Promoters have kept their stake almost flattish, a minor increase a little bit in the FIs, but it's still a lack of institutional participation, if I would say so. It's definitely a concern, but nevertheless, it is a neutral rating when it comes to the overall shareholding. Let's talk about street cred, how things are moving out. And street cred is very much important because has the company made actual money for the investors? This is one of the important ratings to track. And largely, the company has not made that money, be it a short-term trader, positional investor, or even this year itself, the stock has taken a big beating. Of course, mid-cap, small caps have taken a beating. There is a seasonality impact of this business. Realizations are not going. I had mentioned you all the negative points on the company, why the drag is coming in. But even if you are a 5-year shareholder, then also you have not made money in this company. It's down 23%. That means all in all, till now, whoever is invested in the company over the time frames I discussed haven't made money yet, and still retail holds 42%. So it's a strong thumbs down when it comes to the street cred. See, when the prices fall down, valuations do turn attractive as well, and that's what even I have looked at. Largely, I've taken 3 of these players, HMA Agro, SKM Eggs, and this is a 12-month forward P, which I'm talking about. SKM Eggs is an interesting egg-related play, but the valuations are on the higher side. Compare that with Venky's India, it's almost, you could say, more than 50% at a discount. And if the peak valuations for Venky's were around 40-50 2 to 3 years ago, that has also come down. But does it make it very attractive to enter now? That's the big question, or you need to wait it out. So largely I feel it's a neutral rating when it comes to the overall valuations of Venky's when we compare that with its peers and also the history which the company has. But let's talk about the outlook. Outlook is where maybe we'll get some more perspective on this, and remember the company just gives us information during its largely earnings season. So there's of course we could say a lot of communication doesn't come from the company as well. Volatility is still persisting in the poultry industry, maybe it's seasonal impact or even if any other regulatory impact is there. The exports are getting impacted in the Gulf. There might be a pricing pressure as the products might be sold at a lower price in the domestic markets. The demand for ready-to-eat food, however, there is a silver lining. This segment is rising, and that is one of the key reasons why we have called this company also, where the management will talk about it. Winter demand for eggs, generally the high prices are higher for the eggs in the winter. That's also coming down because the consumption gets higher in the winter time. So that's something which trend is there which we talk about. And of course the company focusing on the reducing volatility portfolio. That's what the company has been talking about and claiming about it. And they have of course moved in that portfolio. The bird flu still remains a key overhang in this business model. Any area you take, if there is a culling or a bird flu break, the company's reactions become negative. We have seen that historically. So this always remains a overhang. So because of that, there are conflicting views when it comes to the outlook. I'll give this a neutral rating when it comes to the overall outlook. But come over, I'll explain you the total KYC rating for the company, and definitely the company or the industry needs to give something more to the investors. Income statement not happening here. Balance sheet decently capitalized. Cash flow return ratios, I would give it a neutral rating. But let's get into a bit more deeper into the other rating parameters. Lack of institutional participation, no money being made for the investors, 3 months, 6 months, 1 year, 5 year, that's where a little bit of concern comes. But hey, the valuations, they do turn attractive, largely neutral. Outlook, the ready-to-eat segment, that's something which we are watching out for. And of course, the other businesses are exposed to the cyclicality. But what's the total number to look at? That is 3.5 out of 8 for Venky's India. It's largely a shade below the average numbers which we generally give in KYC for this company. It's a small cap company, always remember that. And small caps overall are seeing a big sell-off for the last 3 to 4 months, which we have seen in the markets as well. So it's just not the company's issue, but there is of course the market sentiment also. That's why we are seeing a downtick in that. But on the show, we'll have Prasanna Petgaonkar. He's the general manager at Venky's India. And good afternoon, Prasanna. It's always wonderful to talk with you. And first and foremost would be the issues which are happening right now in the global scenario. I'm sure you export also a lot of products, ready-to-eat products. So I just wanted to ask, first of all, are the exports getting impacted right now because of supply chain issues?
Yeah, good morning, Sharad. First of all, thanks for giving an opportunity to be here and present ourselves in front of your esteemed organization and in front of all viewers. With regard to the question and related to geopolitical and turbulence right now, what is going on? as far as our total sale value and volume is concerned, our majority sales goes for domestic only. I mean, a very small part goes for export. Export definitely is an important aspect. But however, when it comes to Venky's, hardly any export happens as far as listed entity is concerned. As far as poultry industry is concerned, yes, a lot of commercial eggs goes there, lot of hatching eggs goes there. But when it comes to the listed entity, hardly any export is impacted because majority of the supply goes in a domestic market. And with regard to the overall presence of Venky's, we have presence in almost 12 states all over India. And majority of our sale goes for domestic. It includes institution, it includes poultry farmer. But at the same time, when we see the overall profile and portfolio of Venky's, we have three different segments. One is the poultry, other is oil seed, and third is ASP. So with regard to oil seed and ASP is concerned, it's completely dominated by domestic supply and it's unhampered. And it's going smoothly the way in which it is supposed to. Of course, quarter to quarter variation is there and that remains, and that is a part and parcel.
That's an interesting point raised. But Doctor, query is definitely going to be on the ready-to-eat segment because the way LPG issues are happening, there's a big demand coming in for ready-to-eat products and also ready-to-eat spice mixes also, which the company has forayed into, which I just checked in the annual report. So your views on that? Has the demand inquiries picked up? What's the street outlook on that?
Yeah, fortunately, if we see from last couple of years, because of the dominance of young generation in the day-to-day decision making, I mean, definitely the demand for processed food is going up. Whether it's poultry or any other process, the processed food demand is going up. And what we are seeing under Venky is that the processed food demand is steadily going up every year, and the jump in percentage is very high. However, in absolute numbers, though it is not counted, but with regard to the percentage jumps in processed food market overall, market stands very high and it is touching to close to 10,000 plus crore as far as Indian market is concerned. This is regard to the chicken processing industry I am talking, and every year it's growing at the pace of 10 to 15%. And we expect this to touch more than a double in coming 2 years. That's what is news from processing segment, and I'm sure everybody will endorse the processing market because of QSR, because of e-commerce platform, and because of the lifestyle and eating habit. This demand is going up steadily. And fortunately, Venky's has got presence from last 40 years in this processing segment. When processing was not at all a major discussion and work to be discussed in the industry, that time Venky's has entered into the processing, and we have a processing plant under Venky's from 1984. Though the listed entity comes in existence in 1989, but we have our processing plant in existence.
All right, so that's a good clarity to the street that you're already 40 years in the business. The listed entity has a limited history, and that you rightly mentioned also that the export doesn't happen largely from your listed entity. That's a very important clarity coming in. But I just wanted to get in your views over the last 2 to 3 odd weeks. In the dealer level, has the demand for your ready-to-eat products shot up because of these LPG issues?
Yeah, fortunately, unfortunately, whenever such, desperation happens, that time stockpiling happens. And definitely demand is going up. That is maybe a short term, that may be a medium term, we never know. But definitely people go for a desperate stockpiling, and that's what we are seeing in terms of all the food items, and Venky is no exception from them.
All right, so that's a very important point coming in that. But coming back to the pricing, your industry is very dynamic and there is a cyclicality also involved. How are the broiler prices looking like, and the important industry pricing trends which should be impacting your company, how are they looking like in Q4? If you could just give us that flavor.
Sure. If we see the overall poultry economics and poultry profitability with regard to Venky, we have seen that majority of the time, it's ingredient prices which decides the profitability, or it decides the cost, major chunk of cost of production, because more than 65% of contribution in cost of production of broiler comes from feed ingredients, particularly maize and soya. With regard to last financial year, the maize prices and soya prices are comparatively high. However, it's a commodity cycle, and because of commodity cycle, now the maize is trading at less than MSP price. So also is the soya. We see with regard to Venky, we have a soya processing division of ours, oil seed division. For others, oil is a primary product, but for us, I can say that oil is a secondary product and primary product is our soya DOC, which is specially used for formulation of broiler feed. And we use our byproduct of soya industry for production of feed, and it's completely self-sufficient, and we are using it for captive consumption. But commodity cycle with regard to maize and soya, yes, it's easing. From last 2 quarters, we are seeing that prices of maize and soya are comparatively abnormally low.
That means this pricing is low. That means it's definitely going to help you improve the realizations, if I'm not wrong, right?
Yeah, that's what the market is.
All right.
I mean, we can't help. I mean, it's not our credit, but that's what the business is. And because of whenever ingredient prices are easing, definitely it helps in reducing the cost of production. We basically feel that efficiency is a matter to be discussed as far as business management is concerned. So we do believe that our efficiency is the primary goal. So we keep our efficiency level very high because there are certain things which are not in our hand. But that's how the market.
Exactly. तो simplify करे तो efficiency रहेगा, realizations रहेगा, and maybe Q3 good performance was there. So we can see that in Q4 also. That means margins and PAT is something you should be looking at for the fourth quarter. But Doctor, I just want to understand about the animal health product segment. We have discussed a lot about the oilseed segment, the poultry and the poultry product segment. But this animal healthcare product segment, it's a largely stable business. How has the growth been? What are the growth levers for this segment? If you could just spell that out for our audience.
Good question. What I would say that as far as Venky's is concerned, we have 3 divisions under Venky's. As I mentioned, one is poultry, other is oilseed division, and third is AHP. So AHP has got a yardstick of pharma companies because it's completely go as per the rules of pharma companies. So if you see the overall growth in terms of top line and bottom line, it is matching with any other pharma company. And you can see that our overall top line is growing. At the same time, our bottom line is also growing. And it's a very steady business. Though we are supplying majority to the poultry pharma industry of, as far as AHP is concerned, we are supplying to all over India. But the overall turnover is growing at the pace of not less than 8%. And so also the bottom line is growing, and it's a steady business. I mean, there is no volatility as far as the AHP is concerned. And we expect a lot from AHP division. At the same time, we are expecting a lot from oilseed division and poultry division. We have SPF eggs also. That also is a part of our flagship company.
Right. That's a very interesting take on that. But Doctor, apart from this, the key question definitely is going to be, apart from this, is any kind of growth or capex plans you have earmarked for 2026, any kind of capex which you have seen? Because I know that there is a good cash bank balance also. Largely you have, what to say, you could say largely the short-term debt is there. But over here, I just want to ask, any capex investments earmarked?
Yeah, recently we have announced that we are going for a capex under SPF division. I mean, recently, in the last couple of years, our focus was to reduce the debt. And once upon a time, our debt was 700 crore. From 700, we reached to 250 in 2016-17. And now our long-term debt is virtually nil. So we are left with only a short-term, and that is a CC. But we have made a provision for going for SPF capex this financial year, and that is close to 60 crore for this financial year, which will come in existence in coming quarter, next financial first quarter.
And Doctor, apart from this, the shareholders, definitely the stock has been, on the downtake, and we have seen that because of the market as well as some performance related, which issues were there over the years, but now there's a turnaround happening. But the concern remains is, are we looking at any kind of a dividend or a buyback? Like shareholders also want something, right, from the company. So anything there you're planning in the next 6 to 12 months, or is it just going to be focusing back on the business?
Well, that's the decision of board, but definitely if you are asking, I will convey your opinion on behalf of all the investors, and I will convey your message to the board, and definitely will come back to you if some positive news is there on that front.
Okay, so that's the hoping for the investors, some positive news coming in from Venky's, and of course the fourth quarter, that is where we might see a good turnaround happening. You mentioned about realizations, so we'll be watching out for that, and the jump for the ready-to-eat food, that is where the interest lies in the market. Thank you very much, Dr. Prasanna, for giving your time and giving us the entire view and clearing a lot of doubts regarding the company. Thank you very much. It's always a pleasure to have you. So this is the company Venky's. It's a small cap company, plagued with a lot of reasons, but is there any silver lining to it? And those are the reasons which we have found out in our show KYC. So stay tuned to NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी Some moments in life are lifelong. Some memories are lifelong. Just like Tata Power Solar Roof, best quality solutions, lifelong service guarantee and unmatched expertise. Ye on the quality lifelong.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
In a month that moved markets, shifted diplomacy,
The entire world.
and stirred political battlegrounds, India chose its news carefully. NDTV India and NDTV 24/7. Number one on YouTube. NDTV Network, streaming India's trust. Leading India's conversations.
First India tour in your city. Rag on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decision. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet. Present.
Indices on Dalal Street find some relief at noon. Nifty recovers from day's low to trade in the green. Realty, oil and gas were the top sectoral laggards, while metals and auto remained resilient. Sources tell NDTV Profit that the government may have called off its long-awaited strategic sale of IDBI Bank. The sale was halted as the two bids from Fairfax and Emirates were under the reserve price. Rajya Sabha elections in spotlight. Polling is underway for 37 seats across 10 states, with 26 candidates clinching a victory unopposed. Nitish Kumar and BJP chief Nitin Nabin are amongst the key candidates in the fray. Many countries like Germany, France and the UK have responded, signalling they will refrain from military or navy action at this time. This after the US President Donald Trump called upon countries to secure Strait of Hormuz. Iranian Foreign Minister also called on countries to tread cautiously and not widen the conflict. Hello and welcome. You've tuned into Markets at 12. I'm Nisha Podar. Let's quickly take a look at the market. And Nifty 50 has recovered strongly from the lowest point of the trading session and now at least hovering way above the 23,000 level. Remember, it had given up that level in the earlier part of trading session but really pulled back in terms of the recovery. Still in the danger zone in terms of flat line but showing a green tinge. So that could be a consolation. When we take a look at Bank Nifty, which is really trading in tandem with the key indices today. And in terms of the sectoral play, if we take a look at that, well, in terms of the defense as well as real estate, oil and gas, pharma, the sectors which get impacted because of the global tension are the ones which are really down and out. Nifty IT also is having a bad day of trade. Again, remember the volatility really continues when it comes to the tech sector. What's really shining? Of course, metal prices globally have been going up. Auto is recovering from the big fall it saw in the last week, and financial services, consumption, FMCG. Remember, this is a trend from the last week where these particular sectors are doing well. But overall, market sentiment has been weakish with the advanced decline ratio heavily in favor of the declines today. 3:9 is the overall ratio for the markets at the particular moment. In terms of 9 times are the stocks which are on the declining mode and 3 times on the advancing. Mid cap as well as small cap, well, underperforming the key indices. So there is pressure building on the larger group of stocks and the wider market. But 2 stocks which really catch my attention today are Bharti Airtel as well as Indus Tower, and these two are the same group company, and they both in the last 1 month of trade, if you see, they are showing weakish sentiment and 10 to 11% loss when it comes to both Bharti Airtel as well as Indus Tower. So keep an eye out on that. And when we talk about the large conglomerates, some of the counters coming in from especially the Aditya Birla group like Ultratech, Grasim are the ones which are, and Hindalco are the ones which are really trading well in trade and showing good gains. So keep an eye out on some of these trends. But my colleague Varsha is joining with all the stocks on her radar to watch for the trading session today. Varsha, what's on your list today?
Well, 3 stocks which I'm going to talk about is one is of course the IDBI bank, wherein the stock is under pressure. Now the center had called off the disinvestment process for IDBI bank. Now this is after bid did not meet expectations. Now the sale was halted as the 2 bids from Fairfax and Emirates was under reserve price. Previously, NDTV Profit reported about the delays in the sell-off due to the impact of Iran conflict on disinvestment pipeline. Meanwhile, now government is expected to go ahead with the stake sale of IDBI bank with caution. Well, next on the list is OMCs, RIL, MRPL and Chennai Petrol, which are in focus as Singapore GRMs have fallen to negative territory. Singapore GRMs are trading around at $1 per barrel versus $44 per barrel seen on March 9th. Lastly, you have Bazaar projects, which is in focus on the back of order win. They've received an EPC contract worth 700 crore. This order is from Maharashtra State Electricity Transmission Company, and this order needs to be completed in next 23 months. So these are all the 3 stocks which are in focus as of today.
All right, but also, Varsha, these are important stocks, and especially the IDBI stake sale, which was very closely watched out for. But the amount is too large and it will be difficult to get a good buyer for that. But you're also tracking the power stocks, which are in focus on the back of the surge in demand and supply issues. Take us through those impacts and which are the stocks which are really impacted.
Yeah, absolutely. So I'm going to talk about Adani Green Energy, NTPC, and Adani Power, which are in focus. Now, this is on the back of spot prices, which are surging according to Bernstein. Now, if you see, India has 20 gigawatt of gas-based capacity. The plants are running only at 12% of utilization. Talking about the demand-supply mismatch, the power demand bid, if you see, stand at around 35 gigawatt, out of which power supply bid is only 3 gigawatt. So there's a huge demand-supply mismatch, and the unmet demand is almost 32 gigawatt. And this huge, mismatch in demand-supply gap has led to a spike in these power prices, wherein Adani Green, NTPC, Adani Power, Jindal Power is expected to benefit considering the very high spot prices. Talking about the individual stocks, Adani Green Energy, one of the largest sellers in the short-term power market. Majority sales has happened through the power exchange, and they are taking advantage of this higher spot prices. Onto the NTPC emerged as a major seller. Most sales were through power exchanges, benefits when the power demand spikes and price rises. Onto the Adani Power, among the largest sellers, significant power is being sold through bilateral deal and exchanges, and the thermal power can quickly supply power when demand supply gap widens. Lastly, Jindal Power, if you see, active through bilateral contracts and exchange sales, and benefits from tight power supply and higher spot tariffs. So these are all the stocks, few power stocks which are in focus on the back of higher spot power prices, due to which these companies will gain.
All right, Varsha, thank you so much for getting us the entire list of stocks getting impacted. Power as well as energy, security is the key concern amidst the geopolitical tension. But when we take a look at the capital market, well, volatility as well as selling pressure has been huge. But does that really stop us from really taking a look at the IPO momentum, which is building for this year? Well, clearly no. Well, the government has eased the IPO rules in a move aimed at strengthening the capital markets and also making it easier for the larger companies, especially technology and digital firms, to really list on domestic exchanges. What are these changes? My colleague Nimit is here to share all the details. Nimit, tell us.
Absolutely huge change for larger companies in India, which found it really tough to go to public markets so far, because they had to dilute a large chunk of their shares, which were worth a lot more money than the market was willing to give them. Now, the Ministry of Finance has updated that rule to say that large companies can list with as much as 1% rather than the 10% and 25% limits that were earlier imposed. Now, this comes as a pipeline of large IPOs to list this year, with Reliance Jio, the NSE IPO, and also Flipkart in the works, which is looking to flip back into India to do its listing here. Now, this was a long-standing demand from the market. Bankers say that in fact that the Securities Market Code consultation process, a lot of comments actually came in for this purpose. Now, why this was demanded so heavily by the market is both a supply and a demand problem. From the supply side, companies did not want to give up so much of their control so fast. If a 10 lakh crore worth company would have to list 10%, that's 1 lakh crore. They would not find buyers for that, because when you put out so much into the market, automatically your price reduces, right? And from the supply side, the SEBI and other regulators said that, hey, you can't list so many shares on the market, because then if people buy it, there's no liquidity in the market for everyone else. So this solves a problem at both ends, from the buyer and the seller. What's also important to note here is that this will also help other companies that have mandatory listing proceedings. For example, NBFCs that are supposed to list within 3 years, they were finding it very difficult to do so. But now, if they can list at low as 1% or 5% based on the gradation that is available, they'll find it much easier to go to market. The move is largely planned to create a runway, as more money is expected to come into India from the fallout of the volatility in global markets, and with sources saying that Dubai no longer being considered the safe haven for investments that it once was. Money is going to come into India, and this helps that moving forward.
All right, so that's a big change, and some of the big IPOs which are lined up for this particular year or the next financial year are likely to take advantage of the change in the rules. But when we talk about the IPO, remember there is a lock-in period which also lifts and which also leads to selling pressure in the market. Given the current situation in the market where we are already seeing some selling pressure on the overall market, well, some particular counters which have listed recently, their lock-in period really expires. Let's focus on those counters. Urban Company, ICICI Prudential, AMC, iFinance, Fractal Analytics are some of them. First on my list is Park MediWorld, which is going to see the lock-in period ending. The IPO price of 162 rupees per share was there, and stock is currently trading above that stock price. When we talk about Nephrocare Health, that is also likely to come in. The lock-in period ends today, and it's also the stock trading above the IPO price, which was at around 460. Fractal Analytics, that's also coming up, and that will be as of date tomorrow, this particular listing, or today, March 16th, is when this lock-in period ends, and the IPO price was 900 rupees per share. iFinance is another one on our list, which is also seeing a lock-in period getting over today. Some of the other counters for this particular week are Urban Company, which is getting sold tomorrow by the investors which were locked in. ICICI Pru AMC, which was a large IPO, and their lock-in period also ends on March 17th. Remember, the IPO price was around 2,100 odd rupees per share, and that particular counter is doing very well in trade. In fact, it's $700 higher than the IPO price. Rubicon Research is another one to keep on your radar. KSH International is another counter. And Dev Accelerators' lock-in period also ends this week on March 19th. So all these counters from the recent IPOs likely to see some selling pressure from the investors who were locked in as part of the IPO. Moving on then, India needs to source the LPG from alternate countries like Australia, Canada and Russia amid the escalating tensions in the Middle East. That's the word coming in from Gopal Krishna, who's the former shipping secretary. While speaking to NDTV Profit earlier, he gave his comments on this particular situation. Let's listen in.
The freight rates will stay longer also, say, because in case of India, it's all about demand supply. International shipping costs are not dictated by costs. They are morely dictated by demand and supply. So long as demand is higher than the supply, it is not stabilized, the freight rates will remain high. And there is pretty great demand of, LPG carriers and tankers, and therefore they are bound to stay high in the medium term. There's no doubt about it. We have to source our LPG from Australia, from Canada, from America. Also start talking. Russia is a huge supplier of crude oil. We must, and I'm sure, the government diplomatically must be taking up with Russia to also source LPG supply from Russia, because that route is still very, very secure.
All right, so supply chain and those constraints because of the global tension, that's one of the most important topics that we are tracking here. India's defense sector, that could also soon transition from being a major importer to a global exporter, is the word coming in from Munjal Shah, who's the MD of Paras Defense. He spoke to NDTV on the lines of the Defense Conclave 2026. Take a listen.
Our country is really expanding very, very fast on defense manufacturing. Like every year you see our production and our indigenous content is increasing substantially. And I think we are progressing well, and maybe in the coming times we will be very, very high local content and also with very high IP of our own self.
Secondly, how do you keep up with the demand inquiries and client confidence?
So inquiries, yes. So you have to have a very strong BD team, and we are able. And also now you need to respond on time. There is no you can get forever. You have very, very short time, and yes, if you understand the requirement, for sure, you will be able to respond very fast. and also if at all you are given this opportunity, today scaling up also is possible very fast because of today availability of enough capital, and also along with that support from the buyers in the form of advances, and also along with that very fast turning around is what they push for. So it can also be met for.
All right, so that's a word coming in from the defense sector. But remember, take a look at the markets at the current moment. Nifty 50 holding to the comfortable position above 23,000 levels by a margin. But remember, during the trading session, there was enough volatility and it did breach below the 23,000 level as well in the trading session. If you take a look at the 5-day trajectory, it has been a consistent fall of over 1,000 points on Nifty 50. Jyoti Vardhan Jaipuria, founder and MD of Valentis Advisors, joins us now. Jyoti, always a pleasure to welcome you on NDTV Profit. Hi, good to see you. Now, I wanted to understand, what is the sense that you're getting and how much caution at your end with the way the markets have been on a consistent downward movement?
So, Neha, obviously there's the war in which, no one really knows where it is going. This war hurts us probably more than some of the other wars simply because of oil. Like, as you know, if every $10 increase in oil prices, if it hangs around for the year, our current account deficit gets weakened by 0.4%. So, the macro stability which we had like a month ago, that has suddenly come into question, that can India's inflation continue to be low? Is current account reasonable? Can, GDP growth come down? Already we've heard a lot of murmurs from corporates on, lack of availability of gas, which is starting to hurt production. So there is that element there, which is like fundamentally starting to affect things. It will hurt our March, earnings growth. At the same time, if we go back into history of wars and we look at what the markets have done, typically the markets on an average have fallen 8%, which we are more or less done in this phase. And, over the average period of 30 days, so probably, 20, 25 trading sessions, we tend to see markets back at the pre-war levels. So to that extent, a lot of these are opportunities to dip in slowly and buy. And that's what we've done in the last couple of days. We've put in a bit of cash to work, bought a bit of stocks which have become cheaper.
Right. So when you say bought a bit of stocks which have become cheaper, which are the pockets which are now looking mouth-watering and attractive to maybe cautiously approach them, Jyoti?
So, at the moment we are playing things which are more domestic. So one sector which we bought has been the banking space, which has got hurt the most in the last sell-off. We've also bought something which is more international, but probably less immune to the international cycle. Pharmaceutical is one area which we've been nibbling into and buying. We like that space. We think earnings growth will be largely maintained in that sector, and we see earnings growth be quite sharp at over 20%. So I would say these are the two stocks which we'll be looking at.
Right. And Jyoti, there are many sectors which are directly or indirectly getting impacted because of the war situation. Direct impact on the positive side could be on metals, and on oil and gas energy side, there could be a downward trajectory. And there is a lot of impact in terms of feedstock and oil prices going up across the board as well. How would you assess at least the no-go areas which are impacted the most, especially even travel and tourism and airline stocks which are taking a hit?
So, Neha, like what typically happens is, like we know oil prices are up. If the war gets over, oil prices could come down quite sharply. So to that extent, these are things which throw up on our screens that do we buy airlines now? Do we wait for some time and buy it? So it's there on our screen, it's there on our horizon. At the moment, we've not really bought it, but, because the stocks have corrected, they've given us some opportunity. But, we are not chasing, for example, one can think of the oil E&Ps, which will do well if oil prices remain at these levels. But those are things we don't really want to buy, because for us, there's a good chance that, in the next, hopefully, few weeks, the war comes to a close. And then you will find oil prices tumbling down. And so, you don't want to buy things which are really getting helped at the moment by the war prices.
Right. So, many aspects there, Jyoti, but we can only really assume a lot of situations. The war is not showing signs of de-escalation at this point, but it's also an expensive war globally to be fought, even for the US. When we look at this kind of a situation, Jyoti, where we do not have a sense on in how much time this particular situation will reverse, and the impact could be grave on the ground in terms of the impact on particular companies as well as sectors and the overall economy because of the oil bill and rupee depreciation, that adding to oil being more expensive. Putting all this, how much is getting baked into the market, and how much do you think of caution needs to be really observed when really allocating your cash?
Yeah, so they are like some part is baked into the market. And if we go by past history, probably, market has done a lot of the price correction, at least which we've seen, unless this is a different war which prolongs for much longer than what people think. So, it is at the same time, if you have capital, you don't want to deploy it in one day because, things can still get cheaper over a period of 10 days or 15 days. So I think it is like, we'll never time the bottom. We'll never know like the war's over, one day it gets over, and then you'll see a sharp rally. But you have to start dipping in some money, keep buying some, and just presume that at some point probably markets will go lower, and so you have some capital left to do that. Now the other thing is, of course, apart from dipping in the market, is what do you buy? Do you buy things which are gaining because there's a war, or do you buy things which probably will gain when the war got over and oil prices tend to normalize? So for us, we are now thinking of all the stocks which will benefit when the oil goes down because the war has gone down, and what benefits there. Now we are looking at sectors which are largely immune from oil prices. So those are the two pockets which we are really looking at.
Right. So, Jyoti, the larger question also that is now cropping up maybe in 2-3 months down the line. But if inflation goes out of control, mainly because of feedstock oil prices, and that putting impact on various other sectors and even metal prices, and then the scarcity could also push up other prices, all put together, if inflation is impacted, would it also be a concern which market is already baking in terms of RBI's action? Because so far we are in a comfortable, interest rate cycle, and that being reversed is a very bad news for the market. So how is the assessment? How much is getting baked in? And is that caution at all there in the market movement and valuation right now?
So there, it's baked in to some extent, right? That's why the market has fallen like this much. And, if you see the bank stocks, they've taken a beating. At the same time, it is, I guess, if we go by past history, the consumer could be insulated to a large extent from the oil price increase. Because typically what they've done is that the marketing companies have borne a lot of the oil price increase when oil prices go up, and they don't increase prices too much. The reverse also happened when the oil prices fell, right? Government did not pass on a lot of that fall to the consumer. So to that extent, one would expect that now when the oil prices are going up, a lot of it may not be passed on to the consumer. So that helps you to some extent on that inflation worry. At the moment for RBI, of course, it's going to be probably like a wait and watch approach. I think a lot of central banks are meeting over the next few weeks. And I think most of them will have a wait and watch approach, like the Fed meets this week. And probably they'll be on status quo because they want to see how this is going. Ultimately, I think everybody is hoping somewhere that the war is not like a prolonged war, but it's a war which at some point, starts to ease off. Even if it goes on, at least, your oil stops getting impacted. Because if you think of Russia, Ukraine, the war still going on, right? It was, but the bulk of that market impact, the commodity price impact was felt in the first 4 to 6 weeks. And after that, everybody shrugged it off. Same way here, if oil starts flowing from the strait, then, people will say, okay, after that, the key thing is oil, which is flowing and there's not a problem there. There'll be some skirmishes going on there, which market will stop bothering about.
Right, Jyoti, before I let you go, a quick word on how do you see the tech sector? Do you think it's a buy, or would you stay away because of the pivot to AI is misunderstood and misread?
So actually, we've been away from the tech sector for the last 4 years because of this AI. And, we've nibbled a bit into it now, more because we think that the valuations have come down quite a bit. It's underperformed quite a bit. And now it's getting very consensus that AI is a problem. So for us, probably it's like we bought this more because of a bit of value play.
Right.
And because it's not like we think there'll be a great return coming and market is getting it wrong. But just given the quality of the stocks,
right?
The AI trade will play over 3 years, but if you probably have some opportunity over the next 3 quarters to play this.
All right. Thank you so much, Jyoti. Always a pleasure speaking to you and getting your expert take on the markets. Thank you so much. And thank you. And as we wrap on this edition of Markets at 12, let's also talk about lights, camera, and a night that celebrated cinema at its most powerful. At the Oscars 2026, one battle after another emerged as the defining film of the year, taking home Best Picture for its bold storytelling and emotional punch. Michael B. Jordan delivered an Oscar-winning turn, claiming Best Actor for a performance marked by intensity, control, and quiet strength. And Jessie Buckley was crowned Best Actress, her portrayal leaving an incredible mark on audiences and critics alike. Lot of familiar faces, including Priyanka Chopra Jonas, and also lots to add to your really big list here if you have really missed it. But that's a wrap on Markets at 12. With that, I will call it a close on this show, but stay tuned to NDTV Profit. Thanks so much.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी Some moments in life are lifelong. Some memories are lifelong. Just like Tata Power Solar Roof, best quality solutions, lifelong service guarantee and unmatched expertise. Ye on the quality lifelong.
In a month that moved markets, shifted diplomacy,
the entire world,
and stirred political battlegrounds, India chose its news carefully. NDTV India and NDTV 24/7. #1 on YouTube. NDTV Network, streaming India's trust, leading India's conversations.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
First India tour in your city. Rag on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
Alright team, our new water show is ready. Now we need a promo. Something cool, something sharp.
well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decision. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner.
Hello and welcome to NDTV Profit. You're watching Trending Stocks with me, Hiral Dadia, and my colleague Sharad Dubey, who's at the NDTV Profit market pit with all the action in the markets. Interesting day of trade, Sharad, because it's a lot of stock-specific action that you're seeing in terms of the Sensex as well. From the day's lowest levels, a good recovery that's come in, and that's what is pertinent in terms of large cap space. What are you picking up at this hour?
Well, Hiral, largely we see it's a decent recovery coming from the day's low, but remember, largely the indices are flat and Nifty also is just flat from its opening levels. The same story repeats for Nifty Bank. If you can just pull out the Nifty Bank chart also, it's a lot of volatility there, and we are looking out for cues. What's going to happen this week? What Trump is going to announce? What will be the macro adjustments which will be coming in? So largely it's a flat market, and that's where the concern comes, is it's going to be largely stock specific moves coming in. Let's look at the key triggers currently what's happening here, and remember, markets are still volatile on the global cues. That's something which we'll be watching out for. This is the day 17th of the war as well. Options data is interestingly suggested a very narrow range bound moves happening here currently, but yes, a little bit of sentiment is on the negative side. The sell on rise theme is playing out. We saw that earlier in the opening trade also. In last 2-3 instances also, we could say that we are seeing a sell on rise in a lot of large caps, and at times even the indices also. The Nifty key support on the lower level. Today the bounce happened at 23,000, so I've kept that range a bit higher side, 22,500 to 23,000. And Nifty Bank also, if you see, this is a 1,000 point range. Support is there for 52,000 to 53,000 levels. Currently it's at 53,720. Important levels to watch out for going ahead. Another key trigger is the broader indices. They are seeing continuous sell-off happening. That's the big pain, and that's not changed since the last week as well. That's a concern to look at. It's down almost 1%. OMC's reality at seeing a strong sell-off. Sector specific moves if we talk about, and certain banking names are also seeing a big fall like IDBI and even Fino Payment. But largely net if you look at it, the volatilities have come down in the market, and the rupees are still near their record low levels. And this week itself, important macro data announcements should be coming in, so expect volatility, but there might be a range bound move until something big comes up in the next 4 trading sessions. Over to you, Hiral.
Yeah, I think that big announcement, Sharad, is going to be the ceasefire announcement. With God's grace, if that comes in, I think that's the time where you could see some bit of positive momentum in terms of markets. But thanks for that. Let's quickly look at the watch list of the Aditya Group companies, all of them that are trading higher, from a Hindalco to a Ultratech Cement, all of them seeing some strat moves. HSBC has downgraded OMCs, and that's where the pressure is building up on the way crude prices are panning out. Investec has maintained a buy when it comes to our ICICI Bank. That stock has been on the buyer's radar since quite some time, along with the HDFC Bank. IDBI Bank, major pressure there because the government has called off the divestment. And what it would mean from the government's perspective if you have to look at their divestment target for FY26 and the derailment happening in terms of a spillover for FY27 as well. Power stocks are in focus on the back of spot power prices which are rising in trade. Paint sector, the sector has taken a price hike. You have Park MediWorld, where the share lock-in expiry opens up. Nefrocare, Fractal, AE Finance, all of them are in focus. ITI, a strong volume buzzer in trade along with the Ganesh Ecosphere. Bandhan Bank is down for a third consecutive session, and similar is the situation with the Happiest Minds after they went ahead and changed their guidance. Polycab has reported their March business update, and it's below their initial expectations, and hence some bit of pressure there. Max Health, 4 consecutive sessions, where the stock is under pressure, and Fino Payments Bank is also seeing a downtake and they've come out with a clarification on the alleged ED probe, but that pressure continues with that one. In fact, now let me head across to my colleague Sharad, who's with Akshay Bhagwat from JM Financial to do the rapid fire. Sharad, over to you.
Thanks a lot, Hiral. Good afternoon, Akshay. It's always a pleasure to have you. We'll start our rapid fire, buy, sell, hold. But there are some stocks coming out of the share lock-in. This includes Fractal and even, your second stock would be Park Medi Hospitals. Your views on that?
So, good afternoon, Sharad. Yeah, so Fractal and for the first stock, Fractal, I think it's more of a neutral setup at the current market rate. It continues to be a hold.
Right, and the next stock is Park Medi.
For Park Medicare, I think it's MediWorks. It's near a support, so hold with stop loss of 180.
All right, and iFinance and Nephro Healthcare. Out of these two stocks, anything looking attractive right now?
So I think for both the stock, both of them are more neutral, so they're not attractive at the given point.
And looking at the volume buzzers, Ganesha Ecosphere makes it to the list. A good buying for last 5 sessions, and ITI also. Your views on both of the stocks, Akshay?
So Ganesha Ecosphere, I think the way it is positioned, it's more of a recovery rally. Would not advise to buy again. Look for exits at the current market rate. And the second one is, if you can repeat, ITI. ITI, the technical setup is positive for short term. It's a hold with a stop loss of 240.
All right. Apart from Bandhan Bank, let's talk about the other stocks also. This, of course, includes your Happiest Minds. That's what the first stock is. It's important technical levels on that. And Bandhan Bank also. Both of them are seeing a sell-off.
So exit in, first of all, in Happiest Minds. 450 is the resistance. 300 can be the support. And Bandhan Bank also is an exit for short term. Support is 147 and the resistance is at 165.
And actually, technical views for Max Healthcare?
Max Healthcare has more of a neutral setup. The support is 928 and the resistance is 1050, but overall it's an exit.
All right. That's the end of rapid fire. Over to you, Hiral. Which stocks are there on your radar?
Yeah, the Google trending stocks is what we need to pick up at this hour, because that's what also indicates what is our investors' radar. Let's see which are the stocks which are trending on Google as we speak. JSW Energy, NTPC, Green Energy, both of these from the energy pack that are in focus. In fact, the power pack is what you're watching out for, but both seeing a diverse reaction. Tejas has again started to pick up after that surge that we saw on the back of the previous order. LT Foods and Dabur from the FMCG pack. Akshay, let's look at a JSW Energy as well as a NTPC Green. Both of them seeing reverse reactions right now. What are charts indicating? Any strategy there?
It's more of a short-term call, JSW Energy, because 3 trading sessions back, we had a huge positive intraday move in the power space. They're coming back to the levels from where they picked up. So 495, 490 is the support, from where again there might be a short-term pullback rally in JSW Energy. Upside can be again till 525. Maintain strict stop losses of 485. NTPC Green, again positive technical setup for short term. 93 is the support. I'm expecting upsides till 106 to 108.
Okay, so that's an interesting short-term strategy coming in for JSW Energy. But thank you, Akshay, so much for joining in. Always a pleasure to speak to you and get your views for all our investors watching NDTV Profit. But moving on, GSP Crop Science, a 400 crore IPO that is open for subscription today. Let's get in the management to discuss about the IPO offerings. We're joined by Bhavesh Shah, Chairman and Managing Director at GSP Crop Science, and Shail Shah, Chief Financial Officer at GSP Crop Science. Welcome to the show, gentlemen. Always a pleasure to speak to both of you as well. Bhavesh, let me come to you first. My question coming to you is the timing of the IPO. With the way markets are at this hour, didn't you really have a thought saying that, is this the best time to look at an IPO? Or was your thought process of the opinion that there is money on the sidelines and probably this would be the best time?
See, I feel it is the best time for investors also, for medium to long term. It is a good investment, and that's why we are here.
But what happens in terms of the valuation? Because you would have thought of a different valuation when you were thinking of the timing. But with the way markets have crashed right now, I'm sure valuations would have taken a beating, right? So anything that you would want to add on that front?
See, basically, definitely, it is not in our control. Let's hope in very soon it will normalize. But as per the market condition also, we are here and we are giving this share investors to invest and to get benefit for medium to long term.
Let's talk about business as well. Overall, when I look at it, in terms of the usage of funds, Shell, if you could help us understand, how are you looking at, because some portion is going to be used, some portion is going to be an offer for sale as well. So what are the funds going to be used for?
Right, Real. So, good morning. The funds, 240 crores of primary issue that we have, out of which 170 crores are being used for repayment of debt, and remaining is general purposes and less the issue expenses. So that is how the funds are going to be used.
Shell, this is Sharad here. Good afternoon. Just I wanted to ask you the overall margin profile of the company. Do we get this company as an agri-chemical player, what the industry margins are and what your company's margins are, and what will be the outlook for this? If you could just give us the entire picture.
Sure, Sharad. Yes. So, as you are aware, this is an agrochemical company. We are an integrated player. The margin profile is very similar to the agrochemical companies. Like, we have been doing a gross margin in the range of 37 to 39% historically, resulting into an EBITDA of 11 to 13%. So that is how we have been doing. And the industry also pans out to be somewhere around in this range.
All right. And Bhaveshji, I have a question for you also. Is this domestically, the revenue breakup is coming only domestic, or is there a global exposure too? And if there is a global exposure, any kind of impact we are seeing because of the current geopolitical tensions?
See, basically, current our domestic business is almost 78 to 80%, and our export is 20%. Out of these 20%, our major business is Latin America. So it is not impacting because of war.
Okay. So, Bhavesh, you're saying that from the exports that you have, majority of it comes in from Latin America, and the war is not really impacting that aspect. What about any raw material or supply chain disruptions? Are you seeing any impact on that front?
See, basically, our raw material is major import from China.
Okay.
And because of this logistic issue, we are facing some problem. It is delaying our this all cargoes, but we are managing, and we don't see any much problem in our next first quarter of any business.
When you have to look at the revenue mix now, the technical grade manufacturing, which is always a high margin business, versus formulations, which is always a high volume business, right? Between the two, what is that mix looking like? And what's the kind of impact that you're seeing going ahead in terms of the shift in revenue mix and in turn the impact on margins?
See, basically our B2C business is always increasing, and our focus is also more in B2C domestic. And we have a very good range of product, and also almost 12 patented product are in our basket, which is showing very good growth since last 3 years. And in future also, because of this patented product, our business will be steady and sustainable, and also our margin also increase.
Shell, this one question on that. You talked about the domestic business, and right now we are going to see a new season coming up. How the sowing trends looking like, and a demand for your domestic phase. I presume the new sowing season is about to start.
Yes, Shah, you're right. The season is about to start, and we are seeing some indication in a way that, as Bhavesh Bhai just said, because of minor disruption in the supply chain, there is good demand immediate that we are seeing because of the upcoming season. And we are seeing that the sowing pattern also would be online with the weather forecast is, and we don't see a major change in that pattern going forward for this season.
And Shell, what is the pricing strategy looking like? Because your generic contribution, I was just seeing that has been decreasing, but it's still quite high, which exposes the company to intense pricing pressure. With the 102 granted patents that you have and 108 which are pending, what is the target in terms of revenue contribution that you're looking at from patented products versus the generics?
So yes, Hiral, if you could see, historically since last 3 years when we have been launching these patented products, the contribution of these products have been continuously increasing in our total revenue. And we see a similar growth with the introduction of new molecules every year. So we are aspiring to, take this figure to a very reasonable contribution in our revenue. With this increase in contribution of patented products, the margin profile will also considerably improve because patented products have a better margin. And regarding generics, as we have a B2B business also domestic, which is a major portion of our business, there is price elasticity that because of any changes in the price, we are able to pass on that prices to the customers. So that is an advantage for us.
Okay. My last question coming to you, Bhavesh, is with regards to the valuation gap. If you have to look at the upper end of the price band, which is at around 320, the price to earnings multiple works out to be in that range of 9 to 10 times if I have to look at FY25 earnings. And if I have to compare this to peers like, say, a PI Industries, major gap. They're trading at 35 to 40 times in terms of valuations. I'm sure you've had these conversations with your merchant bankers, with your investors. How does the management, I know it's not your job and responsibility to bridge that gap, but how are you looking at it in terms of the valuation gap and to improve that investor perception when it comes to comparing to high multiple peers like, what I mentioned?
Basically, as you say, it is correct. Against PI, it is very, very low, and definitely our this aim is to go with and very near to that. And before for that only, we are focusing on even export B2B. And also in future, export B2C also. Same way, just like we introduced in India domestic B2C, 12 patented product. So in future also, as we have very good basket, 102 patented product, and also 108 of future product will come. And our focus is also more and more in R&D. So definitely we'll, for future, our target is to go near that company.
Okay, so hoping for the best as well. But thank you, Bhavesh and Shell, so much for joining in, and good luck in terms of the IPO, because the timing is something that the street would be watching out for. So an interesting one to watch out for. I mean, the season is starting, lots to look at, but let's also get in Tapan Doshi, CA Tapan Doshi. Tapan, welcome to the show. Always a pleasure to speak to you. Any views when it comes to the IPO that we were discussing? I'm sure you've heard the management. You've seen the valuation gap between them as well as the listed peers. Are you seeing value for an investor to look at this one?
See, as Hiral, as you told me, the timing is an issue. Otherwise, I think this is the season just starting. Again, if I see the PNL also in the last few years, they are improving a lot. Okay, again, in future, they are going to have a good expansion also. But the problem lies is the timing. Again, we know there is always a price cycle here, always. Raw material cost volatility will there. Again, they already told, some cargoes are not coming. So that will also be a good type of risk in future. Also, competition is there in this business. See, this is the phase, like this 3-4 months is the phase where these companies normally do. It's a cyclical business. But company is okay. I don't have a problem with the valuation also. But the timing is an issue. So that's why I give an avoid for now. But yes, one can look at it once this gets settled and you get at a lower level. And the quarter result also you can see for the next quarter. I think then you can enter.
So you need to wait and watch. Maybe you'll get the company at lower levels post-listing. But another company in focus is Fino Payments Bank, and the stock was a massive fall or intraday fall of more than 16% in the day's trade. And after that, a little bit of recovery after clarification coming in. Company has stated that there is regarding the alleged expansion of Prove to PML and ED. Company has stated nothing is happening over there. They are only having investigation under Directorate General of GST Intelligence at Hyderabad. Also, the investigation is not on the GST compliance of the bank, and also media reports which were coming in regarding rejection of bail, that is completely incorrect. That's what the company has mentioned, and there is no involvement in gaming or betting activities as well. So, of course, earlier the Director General of GST Intelligence arrested the CEO of the Fino Payments Bank, Rishi Gupta, and there's an investigation of 3,000 crore worth of GST evasion. Just wanted to get, Tapan, your views on that. Fino Payments Bank stock has taken a beating, but how do you see this development going?
Yes, no, if you see stock is almost more than 60-70% down. But there are a lot of problems also, as you already mentioned. And again, if you see there are a lot of competition in this segment also, and better competitors are available at a better valuation. If you see the technology infrastructure cost is rising. Again, no, the court cases which are going on, that will be a big no restriction on the stock price also for the future. We should get a clarity before one should invest in this stock. More than because of, there are always a management issue for this bank. So my take is because of all these issues, one should avoid it. I think better substitutes are available in the same segment which one can look at it.
Substitutes are there in the banking space, but today itself, be it IDBI Bank and even Bandhan Bank, the stocks are tanking. But nevertheless, let's move on to the OMC space as well. Somit is here with the reason why they are buzzing in trade.
Well, the only reason behind oil marketing companies is the higher crude oil prices. And today HSBC has come out with this note where they have downgraded their rating on all the three oil marketing companies to a hold from a buy rating. Now, what HSBC is saying here is that the higher crude oil prices will lead to a sharp earnings cut for the oil marketing companies, and they're expecting losses when it comes to the marketing segment, even if crude prices come down to $75 per barrel level now. Currently, they are trading at around $100 per barrel. So you can just imagine the kind of losses that oil marketing companies are incurring at this moment. On the flip side, ONGC, they are saying, is a potential beneficiary, but again, there's a policy risk that comes in for the supernormal profit that at this moment ONGC is getting from higher crude oil prices. For IOCL, downgrade rating to hold from buy, cut the target price to 150 from 220. For BPCL and HPCL as well, similar downgrades coming in. BPCL target price cut to 340 from 470, and for HPCL the target price cut is much sharper to around 360 from 620 because they have a higher exposure towards the marketing business. And when it comes to ONGC, they have maintained their reduced rating but have hiked the target price to 40 from 200 rupees.
Thanks a lot, Somit, for this OMC update. Tapan, just wanted to get your view on this also. Is there a little bit of value emerging, or you'll stay away from this sector?
No, sir, totally stay away. No, because earlier also we discussed between $60 to $70 was the best, you can say, oil price band, no, where this OMC will make a good margin. Now it is already crossed 100. So there is a big issue here. Again, no, their margin will collapse. Also, no, we know that once it goes to above 75, 80, no, I think oil exploration companies like ONGC, Reliance will be on a beneficial part. So I think better to stay with the oil exploration company. OMC, I think it's a time for profit booking only. I think unless it goes down below $75, $70, I think there'll be a pain in all these companies. So better to avoid.
Okay, so that's OMCs. You know, Sharad had highlighted today that the Aditya Birla Group companies have been gaining in trade. Hindalco, where Bahrain has begun output cuts at world's biggest aluminium smelter, is what is indicated. That stock is at, seeing gains of nearly 2%. Ultratech Cement, where Jefferies is saying that the company comes out stronger during such industry shocks, and that stock is up nearly 3.5-4% in trade. Paint companies have started taking price hikes. So Grasim is in focus on the back of Birla Opus, which would have taken a price hike as well, 2.5% up move. That's a Nuvama note. And strong volume seen in the ABSL AMC. That stock is up 10% in the last 5 trading sessions. So strong moves coming in there. Tapan, any view on the Aditya Birla group of companies which are all trading in the positive today?
Yeah, if you say from last 1 year, this group is doing quite well, especially two companies. If we talk about the Ultratech Cement and Hindalco, but just because of the metal prices going up, they are on a beneficial part. But I think Ultratech Cement are also doing well. So if anyone wants to go for the any Aditya Birla groups, I think these are the two. Another one I forgot, Aditya Birla Capital, that is also doing well. So recently, if I see, I think lot of management changes and also the way they have guided. I think that is giving lot of hope to the market that these companies will do well in future. So yes, my first take will be Ultratech and second will be Hindalco.
Okay, so these are the picks coming in from the Aditya Birla group from Tapan. But moving on, the power sector is also in news. Of course, some stocks are buzzing in trade also. What are the key reasons for it, Varsha?
A lot of power stocks are in focus. Now, this is on the back of higher spot prices. Now this is according to Bernstein. Now, India, if you see, has only 20 gigawatt of gas-based capacity, and the plants are running only at 12% of capacity utilization. So there's a huge gap when it comes to demand and supply, and hence we have seen the spot prices, the power spot prices rising. And you have Adani Green, you have NTPC, Adani Green Energy, and Adani Power and Jindal Power power, which will be, gaining from this higher spot prices, and hence this is the reason why power stocks are in focus as of today.
Thanks a lot, Varsha, for that analysis. Tapan, a quick view in the power sector, especially the regulated play or even the non-regulated plays. Anything which is looking good for the long term?
Yeah, long term, I think power is in a very good situation currently. I think for next 1 year, I think these stocks may do well, all the power stocks, because hopefully this summer will be a much more hotter one, and this time the early rain should not come. Otherwise, again, there will be a problem. But I think the stocks you mentioned in that time, I'm quite positive on NTPC and Adani Energy Solution. I think both transmission business and NTPC may do well overall from here. Again, the demand is going up slowly and gradually. Again, the AI data center is coming. Lot many things are coming which will help all this company to go up. Plus, we are already oil dependent, so government wants to reduce from that, so that's why renewable energy should come ahead. So yes, looking at that, I'm positive in these stocks which I mentioned, NTPC and Adani Energy Solutions.
So those are power stocks that we're looking at, but completely running out of time. Thank you, Tapan, so much for joining in. Always a pleasure to speak to you. With that, it's a time for a quick break. Thank you from Sharad, the team that put the show together, and myself. Lots more lined up on the other side on Lunchtime Trades with Shreyansi. Please stay tuned.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
In a month that moved markets, shifted diplomacy,
The entire world.
and stirred political battlegrounds, India chose its news carefully. NDTV India and NDTV 24/7. #1 on YouTube. NDTV Network, streaming India's trust, leading India's conversations.
Alright team, our new auto show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decision. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your automate.
New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock, with a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
Benchmarks on Dalal Street find some relief. Nifty recovers from day's low to trade and flip-flop between red and green, realty, oil and gas for the top sectoral laggards, while metals and auto remain resilient. Sources meanwhile tell NDTV Profit that the government may have called off its long-awaited strategic sale of IDBI Bank. The sale was halted as the two bids from Fairfax Emirates were under the reserve price. Fino Payments Bank issues clarifications denying reports about ED and PMLA probe expansion and gaming links. The bank emphasized its regulatory compliance and transparency while cooperating with the authorities. Rajya Sabha elections meanwhile in the spotlight. Polling is underway for 37 seats across 10 states with 26 candidates already clinching a victory unopposed. Good afternoon, you're tuned into Lunchtime Trades with me, Shreyansi Singh, and this is the show that gets you a roundup of everything that is happening in the world of commodities, news and updates as well on the top bazaars at this hour, all while you grab lunch. But before we do that, a very quick look at the market. So the absence of bad news perhaps is some good news as far as the relief that you have in markets is also concerned. Flip-flopping between red and green. That's really the picture as far as Nifty and Sensex are really concerned right now. So right now you do have Sensex that is also back in the green with about a 30-point uptick thereabout. When you talk about Nifty as well, just about a 1-point cut or almost a 2-point cut coming in as far as the Nifty is also concerned. But let's also talk to you about the sectoral picture. That in fact right now is sharply tilted in the favor of red as we speak. So realty, oil and gas, media, energy, India defense, pharma and IT, some of your top sectoral losers. What's faring up quite well right now is something like an auto remaining resilient, FMCG as well, and consumption. So those are the top three sectors that are just about remaining resilient at this point in time. With that in mind, let's quickly take a look at some of these stocks that are buzzing away in trade. So something like an IDBI Bank, in fact, is under pressure. About a 15.5-point cut coming in for that as well on the back of the government possibly calling off the divestment, and Bandhan Bank also trading with a cut as well. So when you talk about Nifty 50 as well, within that pack, something like a BEL, Wipro, Shriram Finance, Coal India and Dr. Reddy, some of your top losers, down anywhere between about 2 to 3.5% right now. When you talk about the Nifty 50 pack as well, you do have something like an Ultratech Cement, Grassing Industries, Hindalco, even HDFC Bank Heavyweight is also up about 2% thereabout, GSW Steel, Bajaj Finance, M&M, as well as Bajaj Auto, some of your top gainers as well. So nobody right now has a clear timeline in terms of the gains, timeline in terms of the war as well, except Kevin Hassett, who suggested that 4 to 6 weeks. In fact, with that in mind, quickly taking a look at oil in terms of what it's doing right now. So extending gains, the timeline is very much in the spotlight, and except Kevin Hassett, nobody's really gone on record on that timeline as well. So 4 to 6 weeks is possibly what you could be looking at right now. But Trump, of course, is turning up the volume when it comes to nations reopening Strait of Hormuz and helping with that as well. Largely the kind of commentary that has come in from other countries, the likes of France, Germany, UK as well, has been that they're going to be steering away from direct implications of this, and they will be watching on the sidelines just a tad bit right now. Prices, of course, have risen over 40% in the last 2 weeks itself. And right now you do have a little bit of a rise coming in. Let's quickly take a look at the levels that we're looking at right now as far as crude is concerned. In fact, you do have Brent managing, as you can see on your screens, to also hover above that $104 a barrel level. And WTI very close to $100 a barrel as well. That's the key level that you're watching out for. With that in mind, quickly taking a look at gold as well, because it's also a volatile day that you're looking at when you talk about gold prices. Right now, it's wavering close to that $5,000 an ounce level, and we'll try and get you a sense of what you should be thinking about prices right now in terms of key insights. In fact, Ajay Kedia, Director of Kedia Advisory, is joining us on the show. Mr. Kedia, thank you so much for taking time out and joining us. It is firstly a very interesting day coming in as far as crude is concerned, because not only do you have a lot of headlines to track right now, you do have a little bit of an interesting picture that you're looking at as far as the Strait of Hormuz is concerned. What is your read right now on oil prices?
So very good afternoon, Chelsea. But I think crude is not, this time for March month, we will continue to hold above 100. Recent report from Goldman Sachs clearly told that this time the concern is not about the supply. We have an ample supply. Even we have seen strategic reserve from G7 has been offloaded. So I think the supply is quite good, but important would be the Strait of Hormuz, where 20% of global crude transit from there. So I think unless and until the talk between Iran and US doesn't start, there will be a concern still going on. So I think crude prices will continue to, particularly Brent, continue to hold above $100 mark, can go to the level of 125, 130 also. That means ultimately crude is going to be in a limelight. No doubt. Now what the other things are going on, the production has to cut down, because again, the situation like 2020 we have seen when no capacity has been left to hold the crude oil. So I think crude prices is going to be on the higher side, maybe around 125, 130 could be the Brent for next 15-20 days, unless and until de-escalation start from Iran and US.
Absolutely, and that's something that we're looking at right now, Mr. Kedia, but I also wanted to try and get a sense of what you think really happens if there is a prolonged escalation, because at this point in time, even some of the most conservative estimates are close to somewhere 4 to 6 weeks, and right now we've entered the third week. You're looking at this conflict really staying here for just a little bit right now, and the Strait of Hormuz is the world's oil artery that is very much in the spotlight right now. So if this conflict really escalates and is prolonged, what do you think?
Yeah, I think there is a three-part we have to be under observation. First of all, we all were expecting that Iran would not retaliate US attack, and maybe maximum 2-3 days or 1 or 2 weeks would be there. But whatever the retaliation has came from Iran, is currently Iran is in a stronger position rather than US. So I think it can be prolonged for next another 15-20 days, and if it is continued to be there for next 15-20 days, definitely the major impact would be on crude oil prices. And if crude prices stay above $100 mark, it will be not good for Indian economy nor for a global economy. So I think prices will, particularly for March month, I am expecting once, if suppose the de-escalation start also, then also the damages that has been seen on the port and refinery, that will take time to reinstate. So I think the prices for crude prices can stay for next couple of months on higher side.
Absolutely, and that's something that you're looking at in terms of what you could possibly be anticipating when it comes to prices. But I also wanted to try and get a sense of what you think about the key commentary also coming in from IEA on the back of them saying that the oil from record stockpile is going to be released. When it comes to Asia, it is not only a record measure, but you also have them also sharpening their focus when it comes to the entire Asian geography as well. So that's something that you're looking at right now. Does that really ring a bell for you?
IEA and even OPEC has come down with the new production lineup, but important concern would be the deliverability. Unless and until the Strait of Hormuz doesn't open, I think the deliverability will be the most issue, because the narrow waterway linking Persian Gulf to the global market is still remain untapped. So I think escalation would be increasing, because already we have seen US has attacked on Karg island, and that is why we have seen the intensify of attack from Iran to Middle East is when increased. So I think supply side is not an issue, is a deliverability issue which can continue to support crude prices.
Absolutely, and I also wanted to get a sense of what you think about gold because it seems to be wavering close to that $5,000 announced level as well. What are you making of the current picture that you have? Because right now, of course, on one side you have safe haven demand, and on the other side, the entire bit when it comes to Fed's commentary.
Yeah, I think, Shaji, whenever there is a war-like situation, generally we see gold, silver prices moves positively. Since 28th of Feb, we have seen gold prices fail to hold above 5,400 level mark, but now it's on the verge to break 5,000 level. First is dollar index, which is above 100 mark, and we expect dollar continue to be hold strong to the level of 103, 104. Secondly, the Fed meet, because previously we were expecting a more than 2 rate cut, but now it's only a 1 single rate cut, and this week the Fed will be meeting where there will be again a pause. So overall, I think concerns would be there for a rate. Third would be the geopolitical tension. Because of geopolitical tension and attack on Dubai, which is a financial hub, we have seen sell-off throughout the all financial instrument, and that is why people are just wait and watch for gold also to take a long position. So I think a breach and hold below 5,000 can trigger more selling in gold temporarily to the level of 4740, 4750. After that, definitely a safe haven buying or a passive buying could be there. But whatever the rally already been achieved in last couple of years, this type of move we don't expect this time for gold and silver both. Even for silver, the industrial demand has to be slightly tamped down. Maybe a level like $72, $73 could be the level we can see a immediate support.
No, absolutely. Thank you so much for pointing out all of those levels as well. But quickly, before we let you go, I wanted to try and get a sense of what you think is going to happen if there is a pause when it comes to interest rates. And if that really does happen, do you see further, downtick coming in as far as gold prices are concerned? Do you see that 5,000 level also being lost?
Yeah, I think we will be losing 5,000. Even I am expecting 4150 should be the next level for 2026. We won't be getting a positive return for gold and silver this year because all the factor up till now we have seen that has been achieved, and with the rate pause or downtrend in the rate cut will definitely create a more pressure on gold price. Only thing is the central bank buying. Other than everything has been now sorted out.
All right, and thank you so much, Mr. Kedia, for taking time out and joining us. So there you go. That's the word coming in as far as gold prices are also concerned. So it's only central bank buying that could really help gold markets right now. And despite all of the safe haven demand, you could be penciling in a negative return for not just gold, but also silver. But with that, it's time for a very quick break right here on Lunchtime Trades. More news and updates on the other side.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
In a month that moved markets, shifted diplomacy,
The entire world.
and stirred political battlegrounds, India chose its news carefully. NDTV India and NDTV 24/7. Number 1 on YouTube. NDTV Network, streaming India's trust, leading India's conversations.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right order decision. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your automate.
first India tour in your city. Rag on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
Alright team, our new water show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches.
Welcome back. Thank you so much for staying tuned in. Well, let's keep it going with the world of commodities. In fact, my colleague Rishabh also got a chance to speak to Gem and Jewelry Export Promotion Council's Executive Director Sabyasachi Ray on the impact on the sector when it comes to the current trade situation as well. Let's go across and listen in because they're talking about a $2 billion impact on India if the war lingers on for the next 3 months.
Firstly, I would like for you to sort of describe the impact that you're seeing. I'm sure you've made some assessments around the impact that you'll see if this war goes on. Talk to us about those numbers.
See, we all know that Dubai is a big hub for gems and jewelry, both for diamond sourcing and for exports also jewelry exports also. And the type of jewelry what we export to Dubai, like for the South Asians or the Arabs, the type of heavy chunky jewelry that cannot be exported to other places. So based on that, our first cut calculation, what we have done, if the war continues for the next 3 months, the next 3 months will be hit in and around $2 billion, where we can, divert the markets for around $800 million of goods, not more than that. This is what is our assessment is telling right at this moment.
Sir, also talk to us about moving aside from diamonds. Gold is the primary sort of material that goes to the Middle East. Dubai is a massive hub for Indian gold as well. Talk to us about how flight disruptions, trade route disruptions have impacted Indian exporters' export sentiment to Dubai and the Middle East, because it is a big distribution hub for Indian exporters.
See, one of the things what we have all seen that nobody has flown out of Dubai or something like that. All the traders, all the big jewelers who are there, they are still importing whatever the orders they have given, though some cancellation were there, some 20-30%, but generally they have hold on to those orders and people have transshipped those orders, and as all our goods move through airlines, so we have not seen that huge disruption what the other sectors have seen because of the shipping lines and etc. However, what is happening there is the sentiment. Not tourists are not going there. The buyers who used to come, because Dubai is a hub, the buyers who used to come there, they are not coming there. So that is one of the issues. And another issue is that Dubai acted as a distribution center for the entire GCC countries. So the flights which were going to GCC countries, we are facing serious disruptions. Because of that also, we are facing serious challenges. The prices have gone up. Not only that, the insurance costs have gone up. So that way, I think 5 to 10% of the goods cost after this huge gold cost, which has, from the last year to this year, we have seen 100% growth in price. It's affecting, and it will have a huge effect. That much I can tell you.
Alright, then there you go. That's a word coming in from GJEPC as well, where they're expecting about a $2 billion hit if the war lingers on for another 3 months as well. And right now also they're seeing the impact increase as things go. But let's also shift focus onto a key brokerage call that we have right now, because HSBC in fact has downgraded IOCL, BPCL and HPCL to a hold coming in from a buy. When you talk about all of these counters, you're looking at losses of about 5.5% across the board. Sharad, in fact, is joining in with some more details when it comes to HSBC's rationale.
They have stated that there is a crude squeeze. Of course, their higher prices are pressuring the margins. There's a downgrade for all the 3 OMC companies, and it's the hold rating is something which is coming on your screen. The higher crude oil prices has led to sharp cut in the earnings for these companies, and they're expecting marketing losses. The number, even at $75 per barrel, is something which we are seeing it's still negative for these companies. Now, ONGC is of course a beneficiary of this higher crude prices, but nevertheless, all the 3 companies in the OMC stocks are seeing a downgrade coming in from HSBC.
No, absolutely, and it's quite the drag also when you talk about the stock performance across the board. But let's also move on and get you the word coming in as far as IPO rules are concerned, because the government has eased IPO rules in a move aimed at strengthening capital markets and making it easier for large companies, especially technology and digital firms, to list on domestic exchanges. What are these changes? Nimit is standing by with just that answer. Nimit.
Absolutely huge change for larger companies in India, which found it really tough to go to public markets so far, because they had to dilute a large chunk of their shares, which were worth a lot more money than the market was willing to give them. Now, the Ministry of Finance has updated that rule to say that large companies can list with as much as 1% rather than the 10% and 25% limits that were earlier imposed. Now, this comes as a pipeline of large IPOs looks to list this year, with Reliance Jio, the NSE IPO, and also Flipkart in the works, which is looking to flip back into India to do its listing here. Now, this was a long-standing demand from the market. Bankers say that in fact that the Securities Market Code consultation process, a lot of comments actually came in for this purpose. Now, why this was demanded so heavily by the market is both a supply and a demand problem. From the supply side, companies did not want to give up so much of their control so fast. If a 10 lakh crore worth company would have to list 10%, that's 1 lakh crore. They would not find buyers for that, because when you put out so much into the market, automatically your price reduces, right? And from the supply side, the SEBI and other regulators said that, hey, you can't list so many shares on the market, because then if people buy it, there's no liquidity in the market for everyone else. So this solves a problem at both ends, from the buyer and the seller. What's also important to note here is that this will also help other companies that have mandatory listing proceedings. For example, NBFCs that are supposed to list within 3 years, they were finding it very difficult to do so. But now, if they can list at low as 1% or 5% based on the gradation that is available, they'll find it much easier to go to market. The move is largely planned to create a runway, as more money is expected to come into India from the fallout of the volatility in global markets, and with sources saying that Dubai no longer being considered the safe haven for investments that it once was. Money is going to come into India, and this helps that moving forward.
Absolutely. Thanks, Nimit, for that take coming in. So there you go. That's the entire update as far as the IPO rules are concerned. But let's quickly take a look at the sectoral picture right now. So it's Nifty, Realty, Oil and Gas, Media, Energy, as well as India Defence. Exactly in that order. Those are your top sectoral laggards. But what's also not faring well, even as of now, is Nifty Bank, that has logged its worst weekly fall since May 2020, pressured by sharp sell-offs across both private and PSU lenders. In fact, adding to investor nerves, you do have Citi warning that the ongoing Middle East conflict is introducing a fresh layer of macro-financial risk when it comes to global markets. Sharad is joining in with some more details when it comes to Nifty Bank.
Well, interestingly, Nifty Bank has suffered its worst weekly loss since May 2020. And if you look at the important numbers, larger players also have given a big gains, given actually big losses. The Nifty Bank fell 7% last week, and Axis Bank, IDFC First Bank and IndusInd Bank, all of them falling between 9 to 11%. That's a big fall. And ICICI and HDFC Bank, they're having a good constituents support. That also fell between 4 to 5%, but nevertheless holding as compared to Nifty Bank, that fell 7%. But let's see the weekly performance, how Nifty Bank has performed. Last week was 7%. Before that, the March 1st week, it was down 5% and 1%. That means you can say cumulatively, you could say roughly 12 to 13% of downtick coming in the last 3 weeks itself. Since the war began, the biggest losers have been IndusInd Bank, IDFC First Bank, and also some PSU banks making it to the list, which includes Canara Bank, Union Bank, and PNB as well. Now, there was an interesting report by Citi also on the view on the bank, and they've stated that a new layer of a micro financial risk has come in, and this sustained conflict could actually trigger some of the pressure across multiple transmission channels. However, they've stated that they're entering into a juncture where there is a decade low GNPAs which are already there, and a robust capital ratio is something CET1 which we call, that's there, but impact is likely to be uneven with sector specific stress rather than a system wide issue coming in. Now, what's the preference from Citi? That's important. Private banks are demonstrating a superior defense characteristics, followed by PSUs and NBFCs, and these are the important picks which is coming in from Citi. But there was an interesting analysis also where we have taken the exposure to the sectors which are sensitive to the energy prices and the trade disruption. This is what we are seeing. This is fund based and non-fund based differences happening. Of course, SBI is having on the higher side 17.7%, and also Bank of Baroda makes it to the list. ICICI Bank, 21% of this exposure is coming in. But if you get into more details, HDFC Bank is roughly 5.1% for the fund based, and RBL Bank is also on the higher side, almost 16.1%, and Yes Bank also 14.1%. So this is the sensitivity analysis of the banks which are exposed to the energy related exposures, and that's where some kind of stress might come in.
Alright, then thank you so much, Sharad, for that analysis also coming in. But with that, it's a wrap on this edition of Lunchtime Trades. As we do that, let's go across and listen into the word coming in from Atim Kabra, Executive Director at Astra Microwave Products, as he talks about innovation in India.
No reason why we cannot create products for the global markets which compete with the best and probably offer an advantage. So it's not necessarily that you buy the latest iPhones, right? You can have different versions, right? Ranging from the topmost tech to something which can offer the same solution in a slightly different format.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो पतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
In a month that moved markets, shifted diplomacy,
the entire world,
and stirred political battlegrounds, India chose its news carefully. NDTV India and NDTV 24/7, #1 on YouTube. NDTV Network, streaming India's trust, leading India's conversations.
First India tour in your city. Rock on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Niraj Shah. Watch me on NDTV Profit for the most
Good afternoon. You're watching Small Cap Bazaars on NDTV Profit with me, Somit Sarkar, and my co-anchor Mahima. In the next half an hour, we'll take you through the most important small cap stocks that have been buzzing in trade either on the back of price or volume action. Firstly, let's see what's on the show today. Firstly, we'll be speaking with the management of Genesis International. Now, the stock is down nearly 52% in the last 6 months. Recently, the company had introduced advanced underground utility mapping tech. So how will this benefit the company and what's the way forward is something that we'll get to know from the management on the show today, that is Genesis International. Apart from that, we'll be also speaking about Bazaar projects. Now, the company has won orders worth more than 700 crore rupees. The stock at one point of time was up as much as 14% in trade, and this was the biggest move that we have seen for Bazaar projects in at least the last 1 year. Apart from that, we also have Ganesha Ecosphere. Now, that stock has also been buzzing. It has been gaining for the last 5th trading session, and if you look at the volumes today, it's nearly 50 times its 2-day average. So what could be the potential reason behind this move is also something that we'll discuss on the show. And then there are a host of recently listed companies like Park Medi, Nefrocare and iFinance. Now, all these 3 counters were down in trade, recently listed, and the lock-in has opened for all the 3 counters. So that is one of the potential reason. But how have these companies performed since listing till now is something that we'll see on the show, and we'll also try to get a recommendation on these companies from our fundamental guests on the show. Now, if you look at the market, the Nifty, for the first 2 hours, we had seen quite a bit of volatility from 23,250, we slid to around 22,950, and then we again managed to come back in the positive territory. But for the last 2 hours, there's not much of a movement. The market has been swinging between gains and losses, but largely flat in trade. Not much of a movement that at least we are seeing when it comes to the benchmark. And if you look at the sector indices, Nifty Auto, which was one of the worst sectoral index last week, is one of the top gainers. Today is up just 0.5%. And on the losing side, we have Nifty Real Estate and the Nifty Oil and Gas Index, which are down anywhere between 2.3 to 2.8% in trade. But Mahima, when it comes to the Nifty Small Cap Index, what's been buzzing there?
So, similar trend with regards to the broad end of spectrum as well. Volatility for sure is there. Did go to its day's low point and has bounced back from there, but still trading with cuts of about 1.4% for the mid cap 150 and the small cap 250 with cuts of about 1.4 as well. So both clearly under pressure. But with regards to some specific names that are clearly under pressure, Somit spoke about Fino Payments. There is HOAC, which is also down by about 14%. You have counters like Confidence Petroleum, which is also down 13%. Something like an HPL Electric also down 14%. You have Go Fashion, which is seeing significant amount of pressure, down 8.7%. Ellen Berry for second day in a row is down by about 7%. You have counters like Aztec Life Sciences, which is also down by about 7%. Vascon Engineering clearly under pressure. SEPC as well as Joint Irrigation also seeing losses of around 6% each. But on the flip side, you have counters like Bazaar Projects, as Samit mentioned, up 12%. You have Ganesha Ecosphere, which is also up 5%. You've counters like Bansal Wire, which is doing fairly well, up 4%. And MK Global, Dishman Carbogen are some other names which are doing fairly well when it comes to the overall space of broader end of spectrum. So that's with regards to where the markets go. But as I mentioned earlier, we're going to speak to the management of Genesis International. We have Sajid Malik, the CMD of the company, joining us now. Mr. Malik, thank you so much for taking out the time. Mahima, this time, my first question to you is that you've recently, announced kind of the introduction of advanced underground utility mapping tech to India. Give us more sense as to what this product means for you, and when and how will this go live, and what does this mean for your financials as well in terms of adding to your top line?
Right. So as you may be aware that we've taken a kind of leadership role in introducing 3D digital mapping technologies in the country. And we've been focused on basically over-the-ground technologies, but one of the most important layers which are required for the infrastructure build-out in our country is on the underground utilities. As you may understand that there's a huge amount of running into, tens of thousands of crores of assets which are put, below the surface. You're talking about from telecom cables to water pipelines to sewerage and so on and so forth. So there's an urgent need across India for a more scientific manner, and on the basis of which you can get an idea about what the underground utilities are. So we were being now pioneers in introducing the first technology which will use three-dimensional even for subsurface mapping. We are going to find a huge requirement. That is, the requirement always existed, but the technology was not optimal. But we believe that what we are introducing will have a large need and adoption within the country.
Mr. Malik, what is the kind of total market, addressable market that you're looking at for this particular product? Have you already started getting inquiries, and what are the clients that you will be aiming at to get on board?
So the addressable market is fairly large. I mean, if you were to look at just about, if you would know about what the quantum of investments which are going in infrastructure projects across the country. So the need for more accurate subsurface data exists in almost every such project. And we are, as a matter of fact, one of the drivers for us to introduce this technology had got to do with some of the requirements that we are having from urban bodies as well as from utility companies.
Okay. Any large order that you have won from any OEMs in the past 6 months that could benefit the company?
So on the subsurface side, we have started working with Adani's on the Adani Airport side along with Bureau Veritas. So we are expecting now several cities who are going to require this.
Okay. Also just wanted to ask this question from the investor perspective here. For the last 6 months, the share prices are down 50-odd%. As per your analysis, as per your internal talks with your investment relation team, with your CFO, what could be the potential reason behind this? And can this change, say, over the next 6 months or in the next 1 year?
I cannot comment on the stock market performance, but I can tell you that the technologies that we are working on and the need for the kind of work that we do in our country is very large. India remains one of the most undermapped continents in the world. The new geospatial policy is actually allowing for most of these technologies to be imparted for the first time in this country. So we have taken a pioneering role in that. We have set up the largest sensor network in the country. We have our own aircrafts. We have our own mobile mapping systems. And over the last 2-3 years, we've been able to get some marquee clients to adopt this technology. So in that sense, we believe that the need of the kind of work that this company does, the country requires immensely. So we see that there's a bright future for the kind of work that we do.
Mr. Malik, in your Q3, you did mention that you are kind of expecting fast-paced adoption driven by AI. Give us a perspective as to how you're putting that to use. And does this mean that for you, costs will go down? Because you have been on a trajectory where your operating margins have improved. Do you think there's further scope of improvement there because of AI?
No, that's a very good question, because we are actually... AI is helping us and our industry in a very large manner. And we are hoping that over the next few weeks, we will be showcasing some of the advancements in AI that our company has been using, which can benefit both our customers in a big way, as well as have a kind of positive impact on our financials.
Also, sir, just
AI is indeed one thing that you need to remember is that spatial data remains one of the big frontiers for in terms of LLMs and SLMs that we can make for AI. So we are indeed we are right now on the side where AI seems, is going to make a big impact in the work that we do.
also, sir, if you could just give us some guidance on what do we expect or what should investors expect, say, for the next financial year, FY27, in terms of growth, top line, EBITDA, or the bottom line number?
We remain fairly positive. The initial part of once we began deploying this new technologies, our large customers have been government. Government has always had some level of uncertainty in terms of closures, etc. But the pipeline remains fairly large. But importantly, last year, in the last few months, we began our non-government kind of focus. So as you can see that we have actually launched, which not a lot of people are aware, is the All India navigation maps that we have, which we believe are one of the most advanced, automotive navigation maps that we have in the country. And so much so that Tata Motors has been the first large OEM which has adopted us for the same. And we remain extremely bullish on the ADAS or the HD mapping, the same principles that we have built in on the urban side that we are using on the automotive side. So we expect a lot of disruption to happen on adoption in terms of the automotive navigation space.
Got it. Mr. Malik, what is the deal-win breakup right now between government and non-government, and what is the planning?
We are still predominantly government.
And how does that change over a period of time, let's say 3 years down the line, because that will have an impact on your margins? I believe non-government will have better margins.
Not necessarily the case. You see, the other problem we have, I won't call it a problem, sometimes it's a happy problem, is that the size of requirement in the government is extremely large. Some estimates are that the requirement of the kind of work that we do, and this is by the government itself, would be in the region of 20 to 30,000 crores a year. And that is not a very ambitious number given the size of our country and given the need of this kind of data, considering the amount of investments which are going to go in infrastructure development in this country. So government will remain a large market, needless to say. But private sector adoption is also something that we have began from the current financial year onwards, and we expect that to grow.
Right. Thank you, sir. Thank you for joining us and giving us the way forward for Genesis International. Let's also welcome in our fundamental guest, Narendra Solanki, Head Fundamental Research, Investment Services, Anand Rathi Shares and Stock Brokers. Narendra, you heard the management. They are quite confident for the path going forward. Based on what you just heard and what guidance the management has given, how are you looking at this counter at the current valuations?
Yeah, good afternoon. First of all, we do not have any coverage or recommendation on the stock, but yeah, having heard the management, I think if you see the business model, so the runway for the growth is very huge because urbanization is the theme which should be running for next 20 to 25 years, and there should be huge capex coming from a lot of municipalities, tier 2 cities hoping to become tier 1, and then infrastructure planning, be it roads, railways, be it city planning. So the runway for growth is huge, and the long-term perspectives are looks positive for the sector. Now, coming to the nature of the business, I think it is more dependent on government kind of orders. So there should be some level of cyclicity plus lumpiness in the execution as well as working capital strain, which could be there. So I think one has to look at the kind of diversification which the company may took, like increasing the share of private orders should help tide over the cyclicity, which generally the government orders proves. But yeah, definitely the runway for growth is very huge for the sector.
Okay, thank you so much for that view, Narendra. But time to take a look at the F&O space. And we have Shah joining by to give us a perspective. Shah, it's volatile to say the least, but what are you picking up?
Well, largely, Mahima, it's a stock-specific move. Some sectors are also moving in bunches, but definitely no clear direction in the markets. But it's still better than what we had at 10:45. A little bit of moves coming up, especially Ultratech, M&M, Bajaj Finance. They are coming in the green as well. But what's not working is some profit booking in Power Grid counter as well as Bharti Airtel, NTPC as well. We are seeing, but Reliance, it was earlier in the positive, that has turned into the red. That's a little bit of concern, and that's why Sensex is slightly seeing a drag. It was largely flattish last time we checked. BankX, also we are seeing some mixed trends coming here in this phase as well. Let's look at the long build up where the action is lying right now, and Grasim and HDFC Bank make it to the list. Interesting volumes pick up in HDFC Bank, I would say. Also, let's look at the short covering candidates. This includes Ultratech Cement and Bombay Stock Exchange, BSE as well. That's up almost 1.7% as well. Long unwinding for Biocon and SAIL, and that's where a little bit of sell-off is happening in Biocon. Remember, a lot of your pharma companies would be in focus as semaglutide takes focus this week. Also, short build-up. This includes Bandhan Bank, that's down almost 9% in the trade, and IOCL, the OMC basket selling happening here, that's down 6% as well.
Shah, thank you so much for getting us those details. So those were the FNAQs. But moving on to our next small cap stock, Bazaar Projects is in focus, and this is on the back of a huge order win that the company has received and has seen one of the strongest moves today since at least a year now. We have Puneet joining by to give us more details. Puneet.
For that, it's a big order win coming in for the company, almost 700 crores, and they categorize this as the ultra mega order wins. So at 700 crores, it's a big order win for the company. They've received this from the Maharashtra State Electricity Transmission Company Limited, and of course, this is an EPC contract for power transmission line. As well as substation works as well. Now it comes at a very interesting time for the company because last 1 year has been very volatile in that sense. From a high of almost 240 rupees per share, it has seen a corrections in the last 1 year. Earnings have also been disappointing, but Q3 showed the first sign essentially of profits having a big beat compared to the YOY basis. So definitely it's coming at a very interesting time in terms of this order win. Now this particular order will have an execution timeline of 23 months, and also recently in the month of February, on February 17 specifically, they had announced the JV actually with a Saudi Arabian Al Sharif company as well. Now while at that time the company had mentioned that they will want to partner with the company and get some orders in the region, post that we of course seen this war. So you could see some key aspects of this project win being largely delayed in terms of this joint venture, but this order win in India gives us the confidence of some revenue visibility as well. In terms of order momentum, the order book was almost 2,900 crores at the end of Q3 of FY26, and largely had been in a similar range as well. So when you see the trajectory from Q4 FY25 to Q3 FY26, it's largely remained as 2,900. So whatever orders have been won have largely been consumed in this quarter. So this order win definitely gives a lot more trajectory to the revenue momentum over the next few months, as well as the book-to-bill ratio. But a big order win, a lot more will be in focus on Q4 earnings.
So much, Puneet, for getting us those details. The stock is up 11% as we speak. Narendra, your view on this particular counter?
Yeah, again, we do not have any active coverage or recommendation, but yeah, we are very positive on the power T&D sector. And looking at the capex, I think 6 to 7% of growth is given in the T&D sector. Plus the upcoming demand from the data center, etc. So there is a huge opportunity even for evacuation purposes of renewable energy. The T&D sector is right now underinvested, and we are going to see a huge, very big capex coming down the line from the governments in order to provide infrastructure arrangements for both the data center as well as evacuation of the renewables, etc., for catering to the power demand of the country. So I think the runway for the growth is there for the sector, and we are positive on T&D sector.
Right. Yet another counter which has been buzzing is Ganesha Ecosphere. In fact, for the last 5 trading sessions, the stock has been continuously on an uptrend. Today also it's up nearly 5%. And if you look at the volumes, they are nearly 50 times its 20-day average. What could be the potential reason behind this up move? Is it because of the higher crude prices that could benefit the company going forward? Let's get in Varsha to understand more.
Yeah, one of the reasons is, of course, the higher crude prices will actually will benefit the company. But the other strategy which company is opting and which will help to grow margin, I would say, is shifting to or increasing the revenue contribution from high margin products. Now, if you see currently 40% of revenue comes from the higher margin product, which they want to take to 65%, and they're also scaling their capture bottle grade demand, and 40 plus brand are in approvals, and which will strengthen their exports, and they're going to leverage their B2B capacity also. Talking about the capacity expansion and capex, their Warangal brownfield project is expected to commission in March or April, which corresponds to 22,000 tons of incremental PET capacity, and 450 crore of capex is planned over the next 2 years. Onto the Q4, that is next quarter, Q4 FY26 numbers, they are expected to be better than Q3, of course, and as subsidiary utilization is also improving at 70 to 80%, and they're expecting FY27 performance to reflect what was originally expected in FY26. So overall, a lot of things are actually playing out for this company, but yes, one of the reasons is also the shifting to the high margin products and of course the crude oil prices.
Narendra, any view on Ganesha Ecosphere? Higher crude oil prices will definitely increase the PET prices, which could benefit them. How are you looking at this counter?
Yeah, definitely. From a short-term perspective, the higher crude prices plus because of disruption in supply chain, so there has been an increase in demand and increase in prices as well. Plus, if you look at the recent EPR guidelines, so there has been a 30% mandatory recycling of the plastic products, especially PET bottles. So I think overall, the recycling as a sector is looking good, both from the overall pricing perspective, because the raw material cost increases, hence the recycling content of recycling as a percentage increases, which is positive for the companies operating into it. So the short term as well as medium term, I think the focus should be on a positive aspects for the sector, and it looks good.
Okay, Narendra, thank you so much for taking out the time and helping us with your views on all those small cap stocks that we discussed today on the show. But with that, we're completely out of time on small cap buzzers. But, before we wrap up the show, here's a small slice from our conversation with the management of Central Mine Planning and Design Institute, from IPO discussions to the company's roadmap lying ahead. Listen in.
The basic question first, Mr. Singh, to you is, if you could explain the business model, what your company does for the benefit of viewers in a quick and in an easy way.
So first of all, thank you. As you rightly said, that we are a subsidiary company of Coal India Limited, formed along with Coal India in 1975. So we have 50 years of legacy in exploration and mine consultancy. So CMPDI does the exploration of the coal sector as well as entering into non-coal also, and along with that downstream services, that is mine planning and design, infrastructure, mine operation, geometric services, environmental services, starting from the environmental impact assessment, environmental management plan to compliance parameters and mine closure. All this mining value chain we cover from our consultancy, starting with the exploration. And if we see the revenue streams, we get revenue out of all these services that we provide in integrated way, right from exploration to mine closing and repurposing. We capture this revenue under 4 major heads. That is exploration, which constitutes about 46%, and mine planning and design, which includes infrastructure planning, about 21%. 17% from the environmental services and 16% from geometric services, which are basically survey and measurement services that we provide. As far as growth prospects are concerned, there is a lot of push from the government for the increasing exploration in coal sector, and now as coal is again coming back with the strength, the exploration that is required in coal sector is 1.5 times in next 5 years. There is complete visibility of next 5 years from the government funding as well as the long-term plan of Coal India Limited for next 10 years. Another area of great momentum is environment and geomatics, where not only the environmental parameters for compliance and ESG reporting, there is a scope of mine closure. About 150 mines are to be closed in next 2 years. So right from mine closure planning then implementation monitoring, and then auditing of the mine closure. That is part of the work that we do. So we, as you have seen that there is great momentum in past 3 years in top line and bottom line as well. We expect to continue with this.
Right. So, sir, you have also started building expertise when it comes to solar and renewable energy consulting as well. Could this become a meaningful revenue driver going ahead? Maybe in next 3 years.
Yes, definitely. We have about 600 megawatt PMC with us at present, and another 500 we are adding to it. And Coal India in next 2 years has planned for 9.5 gigawatt. So we are working with them. So that will definitely become a major stream in our portfolio that is outside the mining. So we are into coal sector, other than coal, into critical minerals and REs, and into non-mining, that is renewable energy as well.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
In a month that moved markets, shifted diplomacy,
the entire world,
and stirred political battlegrounds, India chose its news carefully. NDTV India and NDTV 24/7. Number 1 on YouTube. NDTV Network, streaming India's trust, leading India's conversations.
First India tour in your city. Rag on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go, grab your tickets.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
Hello and welcome back to NDTV Profit. You're watching Ask Profit, a show that solves all your stock-related queries. My name is Puneet Zaveri. With me, as always, is Mahima Vachrajani. And over the next half an hour or so, we'll try and solve all your stock-related queries. So if you haven't already, do start sending them on the numbers that will be flashing on the top of your screen. You can also call us, talk to us on your stock-related queries as well. But before we do all of that, a very, very quick check of how the markets are doing, because we have been talking about the recovery and the dip that you saw in the morning edition of Fast Profit around 11 a.m. Since then, very, very steady, very, very calm around the 23,100 odd levels. So it almost seems like something's waiting to happen at this point of time, but we'll hope for only a bounce from these levels, or at least sustenance at this point of time. But continuing to monitor all of those trends. When you look at the heat map, stocks like Ultratech have continued to power the index today on the upside, and that momentum has continued, with the stock being the top gainer for the Nifty. Aditya Birla's group stocks are doing well, so you're seeing Grasim in the Nifty 50, ABFRL in the broader markets also doing well. Mahindra & Mahindra has finally seen some respite from the consistent correction down from 3,300 odd levels to the 2,900 rupee per share level, and in the top three gainers as well. In terms of the losers though, IT continues to be down today. Coal India, NTPC, Power Grid are the other companies that are down, and so is BL today, a stock that's under pressure today as well. While we are seeing Shriram Finance, Sun Pharma as the other stocks that are under pressure. When you look at the advance decline ratio, that has been the other key aspect that we've been monitoring, because almost around 500 stocks were in the advances and largely around there. So we've dipped from that level yet again, but largely a day that has been dominated by declines, Mahima. But in terms of the broader markets, we've been speaking about the momentum in the morning being quite similar to the benchmarks, and that has been the case, right?
Yeah, it is, and slight recovery is seen, of course, from its day's low point, but still the mid cap 150 right now is trading with cuts of about 1.3%. The small cap 250 also with cuts of about 1.4%. So no relief when it comes to the broader end of spectrum right now. If you take a look at the overall market, and if we can try to pull up the BSE 500, that will give you a picture of how stock specific the market is right now. You have something like an MRPL which is up 12%, or by ITI, or something like a City Union Bank, which is seeing gains of about 5 to 12% each. You have CSB Bank also doing fairly well. Tejas Networks is in green today after a really long time of pressure that it did see. But on the flip side, you have IDBI Bank, Bandhan Bank, down in that range of 9 to 15 odd percent. TTK Prestige now seeing that profit booking after the rally it saw in the past couple of days. Happiest Mind also down by about 6%. So that's with regards to where the markets go. But with that, let me welcome in Vinay Rajani, CMT Senior Technical and Derivative Analyst at HDFC Security, and Lancelot Dicona, CIO at ValueX Wealth Connect, joining us now. Before I start taking the question, Vinay, quickly, your view, your take on the markets right now with regards to where the Nifty and the Bank Nifty go, and what is the kind of support and resistance that you're seeing?
Yeah, so Nifty has witnessed a correction of almost 13% from the all-time high, which was registered in the month of January 2026. So definitely momentum has gone in completely in favor of bears in recent past, and right now we can say that it is into a continuation of a downtrend. I can see some sort of support around 22,900 where there is a gap support. So in the month of April, we saw a huge gap between 22,900 to 23,200. So there was an unfilled gap. Now that gap has partially been filled, and the lower end of that gap is around 22,900, and today's low is around 22,950 odd. So I feel that there is a semblance of support around this level. So today's low becomes the very strong support for the short-term traders. But yes, positionally market remains weak. On the upside, I see a resistance at 23,500 to 23,700 that can act as a resistance. So primary trend is bearish, but yes, one cannot rule out the possibility of a short-term pullback.
Got that view, Vinay. But let's go across and start and take across the first query for today in Ask Profit, the afternoon edition. Now, this one's yet again very topical to what we're seeing in the global markets on GAIL. Our viewer is holding 1,000 shares bought at 165. Now, asking if she should continue to hold this counter or sell out. Lancelot, good afternoon and welcome to the show. Largely, actually, GAIL seems to be less impacted, right? Because only 16 to 18% of its volume coming from the Strait of Hormuz, and compared to Petronet LNG, whose almost 70% comes from there. Is it a good time to continue to hold the stock at this point of time, or should our viewers sell out at this point?
So, Puneet, at this point in time, GAIL is trading at about, 10 times its earnings. But we have to see whether this earnings will sustain or whether it will get impacted negatively by what is happening, overseas in the Middle East. And if you look at its business model, yes, they have 6 LPG gas processing units. They have a petrochemical facility. They also have a JV with Petronet LNG, and they also are looking at various other sources of LNG apart from the Middle East as well. So yes, the price has corrected and it's probably close to its 52-week lows. But there may be some more downside, so it may be better to see how this situation in the Middle East, pans out, and if at all it gets resolved, at least allowing the ships to pass through the Strait of Hormuz. I think that would be a very positive sign for GAIL. And maybe at times, if one is already holding, then you can look at maybe adding a little bit more at this level, and then if it does correct further, you can always add some additional stock at the lower levels as well.
Okay, so that's the view with regards to where GAIL goes. But the next question is from Siju, who's writing us from Qatar. He's holding 30 odd shares of HCL Tech at a buying price of 1382. He wants to know if he can average the stock at current levels and plans to hold this for the next 3 to 5 years. Lancelot, your view on HCL Tech?
So HCL Tech, like all the other IT companies, has seen a big decline in its price from almost 1,700 or 1,800 close to the current 1,300 levels. And I think the key question is to watch out for how the technology companies are able to adapt to the changing scenario with artificial intelligence, and how they can tie up with various people and use that opportunity to grow their business into a new technology, a new model, rather than the old model of, basically giving manpower at a particular price. So given that background, one should be a little cautious in terms of buying HCL Tech at this point in time. Maybe if it corrects further, there's an opportunity to sort of accumulate some of these stocks over the next, 6 months to 1 year, because the situation is not going to change immediately. And as we see the induction of artificial intelligence more and more faster with various corporates, that will drive the future business model. And that would give you a better sense at that point in time that this should be an investment which one should get in at times.
Got it. Got that view, Lancelot. But the next question that's coming in, now it's from Venkat Raman, who is a regular viewer of the show. He wants to buy into a few names, and Vinay, he has 1.5 lakhs to invest across Escorts, Tata Motors PV, GAIL and Concor. Now he is looking for some appreciation from the current market price, around 15-20%. But your view of which of these stocks would you recommend that has a momentum continuing on the charts for the next few months?
Yeah, so all the stocks are blue chip stocks, but the technically trend of all the stocks are currently on the weak side. So on all technical parameters, they are looking weak. So it is a problem. Not only it is not limited to the stock related or company related, but it is the overall sentiment of the market is not that good. So though the stocks have been good, all the stocks like Concor, Tata Motor Passenger Vehicle, GAIL, all these stocks are good quality stocks, but somehow technically they are not giving any signal of bullish reversal from here. So better to stay away from the long positions right now, though they are good stocks, but better to wait for some stabilization, some consolidation. If we get some confirmation buying after meaningful pullback, then we can consider. But yes, one can wait, or one can if somebody is an investor, can think of accumulating the stocks rather than timing the exact bottom. So better not to anticipate bottom. Stocks are good, but wait for some proper technical setup on the chart. So I would rather wait for some time.
Okay, so that's the view on Tata Motors PV, but we've got our next caller. Mohan is calling us from Bengaluru. Mohan, very good afternoon to you. What's your query about?
So I have just bought this Akita Chemicals for 10 shares at the rate of 1,712. I just want to know long-term perspective. Can I add some more shares on this?
Okay, got your question. Mohan, I'll take this up with Lancelot. Lancelot, your view on Akita's Chemicals? He's sitting on slight profits.
Yeah, so Equitas is actually trading at about 60 times its earnings, and it's one of the leading players in terms of manufacturing specialty chemicals, basically APIs for new chemical entities. So that is that business is bound to grow as more and more pharma companies keep developing new chemical entities, and we should see the demand sort of strengthen over a period of time. However, the valuation being very high, although the business prospects look good over 3 to 5 years, there could be short-term corrections in this journey, and you might see if there is a negative quarter or there's negative surprises coming up in the performance, that could lead to a reduction in the price. And that could be an opportunity to buy. So at this point of time, it's better to wait till if there's a price correction. At that time, the risk reward would be more favorable in terms of purchasing.
Got that view, Lancelot. But the next query that's coming in, it's on Rajesh Exports. Now, Sanjay from Bangalore is actually asking us this question, and he's asking if it's the right time to enter this stock now. Now, stocks down today in that sense, but his question makes sense, right, Lancelot, because stocks down almost 44% from February 11th levels as well. In terms of what might have led to the correction, if it's a good time, what would your view be?
So if you look at it, the correction is probably required at some point in time because the stock had run up significantly. Now it's still trading. It's trading at about 18-19 times earning, and it is a gold refiner and manufacturer and exporter of gold products. So one needs to see how this business is growing, especially given that the prices of gold have risen significantly. So the demand may peter out, and that could create an issue as far as the profitability is concerned. So it may be better to wait for the next 2 quarters, understand how the demand and the margins are, and then decide whether one should add to the stock or not.
All right, so that's the view coming in on Rajesh Exports. The next one is from Sriram Raghuraman, who's writing us from Chennai, holding 85 shares of Varun Beverages at an average price of 234. He wants a view on this one and wants to know whether this is the right time to maybe add more, and he wants a fundamental view on this one. He's sitting on good profits. Lancelot, what is your view overall on Varun Beverages, considering summers are going to be something that will bring positivity to the counter?
So I think last year, there was an extended period of monsoon and cold weather, because of which Varun Beverages, sales as well as profitability took an impact. There was also the new entry of, the Campa Cola and that campaign trying to build and take out some market share, and that did put some pressure. But going forward, I think the competitive intensity has eased up. So you will see Varun Beverages on its domestic business begin to do a lot better. In the meanwhile, they had also acquired franchises in South Africa, East Africa, and some parts of North Africa, which will start to generate profits, over this year or so. So I think in terms of valuation, since the stock has corrected quite significantly, it's a good opportunity to buy the stock, but one needs to be patient for at least 2 to 3 years till these businesses begin to generate higher profits, and then you would get the benefits.
Well, got the view, Lancelot, but the next caller who's calling us from Bengaluru, and Mr. Rao actually has a stock query for us. Mr. Rao, good afternoon. Thanks so much for joining in. What's your query?
Good afternoon, and thanks for allowing me time. I wanted to check out on CG Power. I have quite a large number of shares. I bought at about 75 rupees. Do I hold or sell? Because I find the P valuation pretty high. So I'm just wondering the long-term prospects.
And Mr. Rao, I guess you bought this very early on, maybe in 2020, 2021, because I can see that you've done very well in terms of the profits. What was the rationale at that time? Because I know it went through a corporate restructuring bought by the Murugappa Group.
It was a turnaround story, and they had just been taken over by the group.
Murugappa Group, correct.
PI Group. Right. Murugappa Group, which was a professional group. So that was the driver, really.
Well, Mr. Rao, that was a fantastic pick, a fantastic price, and definitely profits of over a crore and a half on one particular script. So many congratulations to you, and thanks so much for calling in as well. Lancelot, Mr. Rao is sitting on really handsome profits at this point of time. Would you recommend selling out a little bit, continuing to hold the rest at this point of time to him, because he's bought it at 75? What would be your view?
So I think it's important to book profits, especially when valuations are high. It's trading almost 90 times its forward earnings. And while you may see over the longer term, because of the government's focus on distribution, and also there is this big move about setting up the various data centers in India. They would need power backup and power transmission, as well as distribution infrastructure to be put up in place. So there is a good market. There is a growing business opportunity for this company, but definitely considering the high valuations, whenever there is a little bit of setback in terms of earnings, you could see very sharp downgrades. So it's better to book profits and keep that money aside and maybe wait for correction, and then you can leave the remaining portion to appreciate again.
Okay, so that's the view, of course, on CG Power, and 9 times is what Mr. Rao has made on this particular counter. But also keep in mind that if you book your profits, there's going to be huge capital gains also coming your way. So, but there are ways to kind of, at least reduce those capital gains. So keep that in mind. But I think it's time for a rapid fire round now. Vinay as well as Lancelot, you both know the drill. Try to keep your answers as short as possible. The first question is on IndusInd Bank. Shankar wants to know if this is the current prices, if this is the right time to buy. Vinay, your view on the charts?
Yeah, it has turned weak on the chart, so better not to buy right now. Wait for some dip to come and then you can consider. As of now, ignore.
On Eternal, Vinay as well, Ramesh wants to know if it's the right time to buy. What would be your view?
Yeah, Eternal also looking weak and market trend is also weak. There is a support around 198, so better to wait for that support to come.
Soam Distillery is bought at the levels of 97. Our viewer is a long-term investor. Lancelot, would you recommend him to continue to hold?
Yes, he can hold.
A technical view also, Vinay, on Varun Beverages. We took Lancelot's view, but what would be yours as well on the stock?
Yeah, so currently stock has breached a crucial support of 425. So better to wait for some dip and then you can consider. So 4-5% further correction can be there.
Okay, Paradeep Phosphates, is this the right time to buy? Mohit is asking this question. Vinay, your view on the charts?
Pardon me, the stock name please?
Paradeep Phosphates.
Paradeep Phosphate.
Yes.
Yeah, so that is remained relatively stronger in last few days. So one can keep a stop loss at 103 and can go for it. Otherwise, one can ignore.
Paras Defense is the other counter. Tulsi from Hyderabad holds shares at 690. What would you recommend, Lancelot?
I would recommend at this point in time, this even after the correction is heavy, so one should exit.
Okay, the next one is on Cupid. If this is the right time to maybe enter the counter, it's seen some volatility. Vinay, your view on the charts?
No, I would recommend to ignore.
Indrapras Medical Corporation, Lancelot, I don't know if you track this counter, but Ramesh from Chennai has this question, a view on the stock?
Well, one can continue to hold the stock. I think it should do.
Lancelot, any two pharma stocks that are on your list or radar right now? Our viewer wants to know.
So Narayana Hrudayalaya seems to be one which can be looked at accumulation, and it's in the healthcare space, and the other could be Dr. Reddy Laboratories.
Bombay Burma bought in 1900 by Jay Krishnan. Lancelot, should he continue to hold this company?
I think one should look at exiting the company.
Nestle, from a 2-year perspective, Nihal Mohandas wants to know if this is a good time to buy. Lancelot, your view?
Yes.
Sai Life Sciences bought at 1038. Vinay, what should Anil do?
Pardon me, the stock name?
Sai Life Sciences.
Sai Life Sciences. So 1 minute. So Sai Life has relatively done very well, and technically it is still looking strong. So one can consider it. It is one of the strong stocks. There is a strong support around 900 odd levels.
Raymond Limited is the next one. Ashwin wants to know if he can continue to hold the 500 shares that is bought at the levels of 400. Lancelot, your view?
I would book profits or exit.
Vinay, is it worth dabbling into Tejas Networks is what Senthil is asking.
Tejas Network is quite volatile stock. Better to trade with a stop loss, and 415 should be stop loss.
Got it. Well, that's the end of the rapid fire as well as this edition of Ask Profit. So thanks so much for that, Lancelot, as well as Vinay, for helping us solve those queries. But 95 Mahima is what we managed to do on a day like this. There's been some interesting queries today, but definitely given the volatile day that we've seen, it's a decent number to track, right? But that's all the time on this show. India Market Close comes up next. Thanks so much for watching.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
In a month that moved markets, shifted diplomacy,
the entire world,
and stirred political battlegrounds, India chose its news carefully. NDTV India and NDTV 24/7. Number 1 on YouTube. NDTV Network, streaming India's trust. Leading India's conversations.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
First India tour in your city. Rag on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go, grab your tickets.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. Presenting the all-knowing, all-powerful Tech Guru.
Whoa, Guru?
So should your tech show.
First India tour.
Very good afternoon. You're watching India Market Close and may just be a pretty good afternoon with a sharp spike in the last few minutes in the Nifty 50, well back above 23,300, nearly 0.75% up, coming off its highs. But this is an afternoon surprise, Alex, in a otherwise very range-bound and choppy market. Could be some positions getting squared off. This usually happens at afternoon times. But let's just pull up the heat map very quickly, give you a sense of maybe what is moving and what is not. This afternoon, Ultratech Cement continuing its massive gains, 4% up. Look at the spike in M&M. Mahindra has been, in a not a great place for the last few sessions, and back there on top. Grasim has been doing well since morning. It is entirely the financials which have been picking up. Look at the HDFC banks of the world, Bajaj Autos, Eternal. The contributors will give you a clearer picture where those spikes are coming in from. The VIX also reversing sharply. So some news flow possibly has come in which has changed things. HDFC Bank, RIL, M&M, ICICI Bank. Alex, if I were to look at this morning's Nifty contributors, it's just flipped.
It's flipped. And good afternoon, Tamanna, and good afternoon to everybody joining in. Pull up the broader markets as well, because you'll see, and the intraday chart of the broader markets. Yeah, there you go. So you see a similar spike, of course.
Not as much.
Not as much. We're still in the red. A similar spike though for both. Not as much as you're absolutely right. Not as much for the broader markets, but we're off the low point of the day, and significantly so. But a similar trajectory is witnessed for the broader markets as well. Pull up the sectoral heat map and see whether there's more green on the screen. I would hazard a guess to say that yes, there is indeed a more green on the screen. Autos doing well. The financial services are up in about 1.2%. The private banks up as much as 1%, and that's because HDFC Bank is doing particularly well. Reliance Industries is up and about as well, close to 1% or so. That's lending quite a bit of help, quite a bit of heft to the benchmark Nifty 50 at this point. The Nifty Bank up as much as 0.8%. Realty continues to languish. The oil and gas, and this is very interesting, despite Reliance Industries, it's the OMCs, the downstream oil companies, that are not doing particularly well in trade today.
Yeah, because the sense that the government is not really going to pass on rates right now, that industry cannot really pass on rates right now to the pump. 103, 104 on crude is always going to be painful, and we'll pull up the latest crude. I want to pull up intraday charts of two stocks, M&M and HDFC Bank. Just want to take a look at what's happening there. Okay, there's the crude picture, 105. I mean, I'm trying to understand the market moves, and it seems limited to banks right now. HDFC Bank intraday chart, M&M intraday chart. Let's just take a look at what's happening there.
There you go.
Look at M&M. And this is very interesting because the entire auto pack has been downgraded left, right and center. Something's going on with Mahindra and Mahindra's stock. Sharp zoom up there, about 3% up. HDFC Bank. Let's just look at HDFC Bank's intraday, and that's also showing a similar trajectory. After spending a lot of time languishing, heavyweights are now pulling back, which is why this seems like a more nifty story than a broader market story.
Particularly because we are off, at least as of Friday's close, about 12% from the all-time highs, and the kind of cracks that you've seen in some of these very large stocks is, a lot of people have argued, overdone. And so you have opportunities. I wonder what Larsen and Toubro is doing. Can you pull that up as well? Because I didn't really pay too much attention to where it was located. There you go. So a lot of these names have gotten really, really punished, and some might argue a little too much.
So maybe some institutional money coming in. Let's look at what Europe is doing right now. I want to see if this is just an India Nifty story or a broader based story that we're seeing. And no, this looks like an India Nifty story because Europe is pretty dull and mixed right now. US futures also unlikely to show too much happening right now. It's okay. It's been in this range for a while. So that's where the story seems to be. Himain Kapadia joining us this afternoon of DR Choksi FinServ. Himain, very good afternoon to you. What do you reckon is going on with the Nifty? Is it time to change tack?
A very good afternoon to you, Tamanna. Thank you for having me on the show. It's always a pleasure. I think so. Everything that you said, the wicks coming down, okay, yeah, it's India specific, Nifty specific, bank specific. We are at strong supports, we are deeply oversold. A bounce was around the corner. I believe that's what is unfolding. Yes, I know there's a weekly expiry tomorrow, but nevertheless, a recovery was due. I'm not still contemplating or arguing in the favor of how much the sustainability is going to be. The bounce was supposedly around the corner on technical parameters. That's what is happening. I believe we have some more upside left, Tamanna.
Okay. Any calls this afternoon? Any stock calls this afternoon, Himain?
Yeah, firstly, a buy call on HDFC MC, Tamanna. Deeply oversold, strong supports, positive divergence. Okay, right now the mechanical indicators are positives only on from an intraday point of view. But a buy on HDFC AMC at 2360, stop loss 2310, and a target of 2460. Secondly, almost similar logic, oversold, strong supports, intraday very strong positives. A buy call on Bajaj FinServ at 1760, stop loss 1710, target of 1860.
Going to go across to, stay on with us, Himain. Going to go across to Siddharth Khemka, Head of Research Wealth Management, Motilal Oswal. Siddharth, very good afternoon to you. What do you reckon is responsible for the change of mood in the last few minutes? Is there smart money coming in and looking at appetizing valuations right now in some of the heavyweights?
Hi, good afternoon. I think definitely there is some value buying that is emerging. I would not be sure because the data is yet to come, but definitely I think last few days the sharp fall that we have seen in the market, that makes some of the names very interesting. Now the only question that remains is every day things are changing, things are very dynamic, and for an analyst to come out and say the exact impact on the numbers, I think that would still take some more time because things are very dynamic, as I said. But nonetheless, as you rightly highlighted, some smart money, some value buying that is emerging in the market, and that is helping the market to see that kind of recovery.
Siddharth, hi, good afternoon to you and to Heyman as well. Siddharth, specifically on the large cap counters that are seeing a bounce, and we're seeing names like HDFC Bank specifically, as of Friday's close was 20% off the 52-week high. You had ICICI Bank that was losing considerable amount of ground, Larsen & Toubro. In some of these cases, there is a very clear rationale and reason why these counters had come off. But for the banks, and specifically the private sector banks, it seemed like basket selling. It seemed like risk-off sentiment for your foreign institutional investors that was leading to this. And so would you say that even at this juncture, they're at attractive valuations?
So yeah, Alex, I think last time also we discussed banking is a space where there has a very heavy FI holding, and when they are selling, they would find it convenient to sell from that space where they have over a large part of their holding. I think the biggest concern out of the crude oil stock was that inflation could be higher, monetary policy easing could be, the policy could change, and hence the benefit that the banks would have finally got out of the lower interest rate environment of the credit growth, that would have gone away, and hence I think there was a negative sentiment. That still is a risk as of now, but valuations has come down and is looking comfortable. I think some of the kind of selling that we have seen in the last 15 days, I think in 15 days itself, they have sold more than 40,000 odd crores. Friday, we saw record selling in a single day in last, I think, many years. So it's definitely a lot of panic rather than fundamentals that is there in the market, especially from the large foreign institutional investors. Having said that, some of these banks, I think the core investment thesis remains not much of that risk directly from the global geopolitical, or you can say crude shocks. And I would say that valuation, yes, comfortable. And the only concern that remains is in the near term, sentiments can be negative for some more time. Hence, when there is fear in the street, it becomes difficult to justify valuations or fundamentals. But having said that, again, I think if you look at when you invest in these times, at least may not be for the near term, but 2 years, 3 years hence, definitely you would have a much more better probability of making money.
Quick, so very well put, but then the bottom line, top picks based on fundamentals and based on valuations right now. And if you were to highlight maybe 4 or 5 names that are absolute table thumping buys at this moment.
Well, I think if you look at in terms of top investment ideas, what we like within the banking space, SBI is something that we like a lot. Valuations still comfortable compared to the private players, HDFC, ICICI, both of which also figure among our top picks. But if I were to pick one bank, it would be SBI. Very strong commentary from the management. Valuations still comfortable, trading at about 1.6 times on FY27 compared to an ICICI of 2.5 times, HDFC 2.1 times. So that's one stock that is on top of my pick. The few others, as you rightly asked, I would say because of specifically if I were to look at the correction, Larsen figures out quite meaningfully. It's a play not only on the infrastructure but also on the defense and the opportunities that may arise once this war-like situation eases in the West Asia. I think a lot of opportunities would emerge for L&T. So that's another stock which has seen a good correction and opportunity from this adversity for Larsen. Some other stocks, I think power is another stock where, for example, Coal India, because of the shortages that we are seeing in gas, in oil, Brent crude, I think Coal India will be a biggest beneficiary in the near term. The spot prices also already going up. We are seeing a lot of households, a lot of restaurants switching out from LPG or natural gas to the electric stove. So power consumption will be another beneficiary where Coal India is another stock that should benefit from this environment.
Okay. It's fast and furious this Monday evening. The Nifty is moving quickly. Auto stocks are in flavor, so are banking stocks. And talking about banking stocks, some news coming in. Shimi Chaudhary joining in on the phone line, our Chief of Bureau, talking about latest developments on Fino. Shimi, what are you picking up?
Yeah, so as we've been reporting that DGCI, who is the investigative agency under GST, has been probing the Fino Bank, Fino Payments Bank, especially linked to the online gaming transactions routed through the accounts associated with this bank. And now the finding could potentially attract the scrutiny from Enforcement Directorate and the PMA, is what source is indicating. Officials are saying that the DGCI, which is a GST arm, has detected multiple instances of suspicious fund flow connected to the online betting and gaming platform, and there where the role of ED might come. Sources tells NDTV Profit that DGCI is yet to share the details of probe to the agency. However, they've been informally informed that this is what is happening, and investigators are examining the cases where funds were allegedly routed through multiple accounts or entities, and that is where raising concern about the possible attempt to obscure the origin of the transaction. Now, the investigation is, of course, a part of the broader probe, where the estimated, tax evasion is around 1 lakh crores, is what based on the preliminary finding of DGCI, and now Enforcement Directorate is expected to take up the matter and file ECIR, which is FIR for under the ED, which could trigger a formal investigation. Authorities also confirming at this point of time that they are examining whether shell entities and dummy program managers were used to onboard merchants facilitating gaming services, and they also kind of suspect that a large volume of funds may have been processed through accounts without adequate compliance checks.
Okay, thank you for that, Shimi. So there might be more trouble for Fino. It's also a stock of the day. They have, of course, issued clarifications denying reports about Enforcement Directorate and PMLA probes expansion into alleged gaming links. The bank is saying that regulatory compliance and transparency has been maintained while cooperating with authorities. Nevertheless, the stock is down 15%. Sharad is joining in with more details. Sharad, we heard Shimi report about what the news is around it, but Fino's problems have been going on for a while, isn't it?
Well, that's right, Tamanna. There are some overhangs in the stock, and today we are seeing as well. But before that, I'll just give you the clarification of how things are panning out for the bank. The bank has currently stated that it's not subject to any investigation by any other authority other than the Directorate General of GST Intelligence from Hyderabad. Also, the ongoing investigation is pertaining to certain program managers and the merchants associated with multiple banks, including the bank itself, but the investigation is not on the GST compliance of the bank itself. Also, they have stated the reports of rejection of bail by the court is completely incorrect, and there is no involvement in gaming or betting activities. Of course, the media reports earlier had suggested that Telangana High Court has reserved its order on a plea by the MD of Fino Payments Bank, and the online gaming transactions worth rupees 10,000 crore might be under the investigation. Now, earlier, to give in the entire perspective, what has happened 2 weeks ago is that the Director General of GST Intelligence arrested the CEO of Fino Payments Bank, Rishi Gupta, and the government agency is investigating the GST evasion of roughly 3,000 crore rupees. That's what has been stated. And remember, sources earlier had stated that CBIC, which is the Central Board of Indirect Taxes and Customs, are likely evaluating this matter as well. So these are the key developments happening for Fino Payments Bank. And even after the clarification, the stock hasn't recovered yet, and it's still near the day's low level of around 15 to 16%.
Okay, Siddharth, would you stay away from this stock till there is clarity on what's happening?
Someone, I think better to stay away. We have seen such similar cases in a lot of other corporates as well. So A, we don't have coverage. B, with so much of negative news flows coming in, I think there are a lot of other better managed fintech companies in India, be it a Paytm, be it some of these small finance banks, I think where the recovery could be much faster, much better. So better to stay away, yes.
Okay, let me ask Hemen specifically about the financials, because Hemen, in the last half an hour, the buying seems to be concentrated. Of course, there is a smattering across the board, and even the broader markets are significantly off the low point of the day. But specifically on the financials, there's quite a bit of strength. Would you agree?
A very good afternoon, Alex. Yes, I think I would agree with you because there has been, like you mentioned, HDFC Bank, you look at Bajaj, Twins. I mean, yes, there is specifically the bank Nifty has done relatively well. Okay, it was dormant for some time. So yes, makes total sense. Somehow there is buying in all of the financials, Alex.
Okay, all right. Out of the list that Siddharth just spoke about, and he spoke about State Bank of India, he spoke about a few other financials as well, but Larsen and Toubro is one that he mentioned. Hemant, specifically, let me ask you about this counter because it's seen that very similar chartical move today, intraday, when you compare it to the benchmark in the way that it has moved. It's at the high point of the day, but considerably off the 52-week high. Would you buy into this right now for the long term?
Long term, little bit. Short term, yes. If you see the swing low of 3405 posted during the weekend at 1st August 2025, Alex, and today we posted a low of 3396.60. So we've almost come there. We've fallen off a cliff, deeply oversold, great order book at very strong support. So frankly speaking, yes, I would buy more from a shorter term point of view. And yes, if I were buying from a medium term point of view, or slightly longer term point of view, I wouldn't go the whole hog. I would buy in parts because I believe we are seeing a recovery in the market. 700-800 points Nifty very much possible, but the undercurrent and the whole picture still seems wobbly and shaky. So maybe there's a recovery yet, not a rally. So I wouldn't quantify this at the bottom, but yeah, main question, I'd buy bit on the longer term, buy more on the shorter term. Today's lowest stop loss, Alex.
Okay, so there was buzz that the OMCs would buy crude output or rather crude products at lower than market value from the individual refiners, and MRPL and Chennai Petro initially, at least Chennai Petro is a little bit under the pump, but the MRPL and Chennai Petro now at this juncture having rebounded very sharply off the low point of the day, trading very near the high point. In fact, for MRPL, it's one of the top gainers, if not the top gainer on the 500 right now, close to 14% higher. Hemant, a very quick view on this. MRPL specifically, with this kind of gain, erasing quite a bit of lost ground, would you buy into this?
Slightly late in the day, but yeah, I believe 230 is around the corner. But I'd be more comfortable buying it around the 190-92 level because there's no other market where you would chase anything, Alex.
You might have missed the bus on MRPL at this moment, but watch out for those 230 levels. All right, let's go to a regular feature heard on the street, and I wonder what the buzz is about what is causing this kind of interest and buying. It could well be institutional interest at this point. Let's find out from Somit. Somit, what are your dealer checks telling you?
Well, it's difficult to ascertain or pinpoint one of the reasons why this sudden up move of around 300 points is something that we are seeing in the last half an hour of trade. But yes, some clarity on the US trade deal could be one of the trigger point, but one should be careful given the fact that this 23,400, 23,500 is seen as a resistance level, and selling pressure could come in at these levels, at least as per technical analysts. So one should just be careful buying into these such up moves that we are seeing currently in the benchmark is what dealers have indicated. Apart from that, if you look at stock specific action, BAC is one counter where there are buy flows on HNI desk. There are some buzz of some new contracts that could be launched from BAC side, and hence this 3% up move in the share prices. Also, dealers are indicating that the Q4 is expected to be quite strong, and NSE IPO is also one of the catalysts for the up move in the BAC share prices. Steel names, JSW Steel and Tata Steel, both are buzzing in trade. There are buy flows on institutional desk, and dealers are indicating that there's a potential of a price hike of anywhere between 700 to 1500 rupees per ton, depending on different products that could come in, and that is one of the reasons why both the steel names are up in trade. And lastly, when it comes to GAIL, multiple technical analysts are indicating buy calls on GAIL based on charts. So one should keep an eye out for that counter as well. And in the last half an hour of trade, what dealers are indicating is that 3 stocks that have seen a significant move and significant buying action on the institutional, on the DI front. It's Eternal, Jubilant Food and Swiggy. All these 3 counters have seen strong buying action in the last half an hour of trade. So keep an eye out for these counters as well.
Okay. Thank you for that, Sumit. One of the reasons maybe why we're seeing this change in mood, we don't know, but we're just putting all the news out for you, is the Commerce Secretary's statements on the US trade deal. Remember a few days ago, this Reuters report claiming that the deal is getting postponed between India and the US. Now some clarifications coming in from the Commerce Secretary saying that the US deal was anyway to be signed in March. IEPA tariffs don't exist per se due to US court rulings now. So that was, IEPA was the initial act under which and the aegis of which the trade deal was first inked. He goes on to explain, under Article 122, tariffs of 10% exist globally now, and any deal that India signs will be signed against a tariff structure. US is trying to recreate a tariff architecture globally. Once US creates that, it will be better to sign then. Actual signing will be done when new architecture of tariffs globally will be done by the US. Deal is ready, not like there's any standoff or it has been called off. This is an important clarification coming in. He's saying that negotiators are working on the deal. Since India did not sign a deal with the US yet, we'll wait for tariff clarity first. They're examining the legal impact of US notices around trade and tariff investigations in Section 301. He goes on to say when trade deal is signed in the future, it will take care of any trade investigations by the US. So I think it's an important clarification simply from the point of view where there was some concern about what is happening next on the trade deal. The very day that story came in, there was a clarification from the government saying that aisa kuch nahi hai, there's no deal that has been called off, and it just makes sense logically, doesn't it, that you are not going to go ahead with a deal which was agreed upon under very different circumstances where the whole thing changed.
Absolutely. You know, at the start of the conflict, Tamanna, the conversations that we were having, and I think we've kind of forgotten some of that because of the nature of the geopolitical crisis. But certain underlying tensions remain from the perspective of India. You have this artificial intelligence story that goes back, you have the tariff situation, and so any clarity on one or other of those issues is going to be looked at as a positive. Let's talk about the stock of the day, and or rather not the stock of the day, but one of the stocks of the day. We've already spoken about Fino Payments Bank, but another stock that is losing a considerable amount of ground is IDBI Bank. And this is on account of the curtailing or the shelving of some of those plans. But before we talk about that, let's in fact talk about JK Paper. It is facing a new set of hurdles as the Middle East crisis ripples through the Indian paper industry. We're going to speak about this in a lot more detail, but before we do, let's go across to Parth, who is joining in to set up the conversation that we have with the management. Parth.
Yeah, thanks Alex. So JK Paper, as we know, is India's leading paper and packaging manufacturer, and the reason why the stock is in focus in the recent times is because they are facing disruptions due to the crisis in West Asia. The geopolitical tensions in the region are impacting energy supplies of the company and are increasing their production costs. Now this is a big reason because over 30% of India's paper exports come from that region, and there is also this risk of dumping by the Chinese players. So the key triggers to watch going forward will be how the company manages its energy costs and how much will they do any price hikes across their key segments. Apart from that, how will the company fix their supply chain issues and also how they handle the disruptions that they're facing?
Sure. Those are some of the points we'll talk about, Parth. A.S. Mehta, president of JK Paper, joining in now on the show. Mr. Mehta, thank you so much for speaking with us. First, want to understand what is the quantum and extent of disruption to your industry because of the war right now in the Middle East?
See, there are few disruptions when we talk about the crisis and the war crisis in the Middle East. One is that the export to the Gulf countries has been hit. But when we talk about the paper industry from India, the Gulf does not account for too much of the size of the export as far as the Indian paper companies are concerned. So I won't say that it is going to have a major impact on the Indian paper industry, but certainly the cost increases because of the crisis. The input cost increases and also the commodity prices increases is certainly going to make an impact, whether it is the lime cost, whether it is the other chemical cost, and also to some extent the energy. But again, the energy also is a very small impact if you ask me for the paper sector, because we are more into the thermal energy and the coal. So it has nothing to do with the Gulf crisis. But the major impact as far as the paper industry is concerned, and that is the raw material cost increases and also the dumping from the Chinese and Indonesian players. So these are the two predominant factors which is impacting the paper industry.
The dumping from China and Indonesia is an ongoing issue. I'm talking about in the context of right now. What is the quantum of exports you have to Gulf nations?
So it's not more than 2% or 1%. So that's not a major impact.
Okay. And in terms of raw material cost spikes, what are you seeing there?
And raw material cost also, it is not a sizable impact because the raw material cost is the wood for the integrated player. And when you talk about the wood, again, it's a local, it's not imported.
So essentially the bottom line, Mr. Mehta, is that the expectation that there is going to be a disruption to business or there's going to be an impact on financials is exaggerated and there's no impact. That's what you're saying essentially.
No, I'm not saying that no impact. There's some impact, and that too it's for the commodity prices.
Okay, so if you were to, and you've already adequately explained that a large part of this is paper, it's domestic, and so therefore, what I'm trying to understand, Mr. Mehta, is what is the extent of the impact? If you look at your entire raw material basket, and if you were to describe it, for example, as a percentage, to say that this percentage of my input costs are getting affected, how much would that be?
See, I would say that on a cost basis, if you think, I won't say that it is going to be more than 5%.
Understood. Okay, so and also then while we're speaking to you, Mr. Mehta, can you give us a sense of the landscape right now? What is the kind of demand that you're seeing? Will you be able to pass through this increase in costs that may be to the extent of 5%? Is that possible? Do you have that pricing ability right now?
See, right now when you talk about this, the printing market, it is passing through a tough time. So it's not that easy to pass it on in the market. The packaging board, again, there is a huge dumping from Indonesia and China. So again, that is becoming a difficulty. And also the anti-dumping duty has not yet been levied against China. And the MIP, which is up to 31st of March, we have already requested for the extension of the MIP. That also government is yet to notify. So these are some of the factors which will, enable us whether we will be able to pass it on beyond 31st March or not.
Okay. Thank you so much, Mr. Mehta, for speaking with us today of JK Paper there. Big pain points continue which are beyond what's happening in the Middle East right now. More to do really with dumping from China and from Indonesia coming in. Himen Kapadia and Siddharth Khemka with us. We must focus on the markets because something astonishing is happening and I don't quite know what. Himen, what is your read? What do you think is changing the mood right now?
Excuse me. I can lay out multiple technical reasons, Tamanna. Most of them won't make sense, but yeah, technically, like I said, supports, oversold, positive divergences.
Won't make sense. Is that do you think our viewers won't understand or you think you will not explain it nicely?
No, if I'm going to give you 5 technical reasons, which, a normal investor would not be very well conversant with the technicals. But yeah, at the beginning of the show, I told you a bounce is coming and I gave a buy call very easily because I wasn't very happy about giving buy calls in our earlier shows, Tamanna, last week. So yeah, I feel, and I told you also there is more headroom left.
The headroom for the Nifty right now after we've gone past 23,400 also fairly easily. It's been a pretty, I would say, dramatic upswing in the last few minutes. And this is a Nifty story largely. Hemant, that question to you?
Yes, I believe
Nifty targets.
Even after this 300-point move, I believe 23,600 is coming, and with some struggle, 23,850. I believe that is coming this week itself.
Okay. All right. So that's the view on the benchmark Nifty 50. Let's talk about IDBI Bank. And sources have told NDTV Profit that the government may have called off its long-awaited strategic sale of IDBI Bank. Now, we'll speak about the implications of this in more detail. The stock clearly has seen an impact, but there's more than IDBI Bank that is getting affected. And we'll talk about that in just a bit. Before we go to Aditya Shah of Hercules Advisor Services, let's go to Sharad to get some context on this. Sharad, the impact on IDBI is very clearly seen, but there are a couple of other stocks as well. LIC I'll throw into the list, as well as CSB Bank. Can you tell us what is happening here?
Well, Alex, you're right. There are some more details and second order impact happening. And if you just would show the CSB Bank chart, that's where you'll see a good up move is happening. Now, what's the reason for it? The first one is definitely, you can see the stock is up almost 7%. Days high level earlier, it was up 5%. Now, the merger with IDBI Bank, that is off the cards right now. And because the reason was the lower bid coming in from Fairfax for IDBI Bank's disinvestment. And government has called off this disinvestment as the bids from Fairfax and Emirates is below the reserve price. That's what the reports have been suggesting. What are the key details about it? It's very much important. Fairfax already owns 40% stake in CSB Bank, and if the deal had gone through, then Fairfax would have control over both the banks. Now, as per the definition, RBI generally permits only one promoter per bank, and the street would have factored in a proposed merger between IDBI Bank and CSB Bank. And now that's not happening. And because of that, we are seeing a kind of a technical reversal happening, because when it was announced that Fairfax was in the runner, then we saw that the stock itself was under selling pressure. Now, what are the key triggers for CSB Bank? Q3 numbers were weak, but remember, higher gold prices augur well for the gold loan numbers in the fourth quarter. The stock is down 37% from 2026 highs, and still the analysts are bullish on the stock. 8 out of 9 analysts have a buy rating and a 12-month target price of 479. That means from current price, more than 35% upside is something which the street is expecting.
It has dropped that much as well from the high point.
True, and we're focusing on CSB, but we should look at IDBI as well. There has been clarification coming in from the management of IDBI Bank, 16% down on that stock, saying we still don't know if anything has been called off. This is the DPUM secretary who decides this. Our sources are telling us that this has definitely been pushed. Aditya Shah, founder of Hercules Advisor, joining in right now. Aditya, of course, I want a view on IDBI and CSB and their stock views as well, but just trying to understand why this whole process seems to have gone south. Is it a matter of mistiming of actually the government cutting stake in IDBI Bank?
Hi, good afternoon. So IDBI is a great asset. The liability franchise of IDBI is really good for any acquiring bank. Of course, the loan assets are not that great, but the liability franchise is something that any bank would have. Now, the government has set a reserve price which is not acceptable to any of the other acquiring banks. That is why the deal has really tanked. So from my perspective, this is absolutely negative, not only for IDBI, but also for all candidates who were prime candidates for divestment from the government. Companies like BPCL, they also, it's really very negative, because the government has been trying to divest IDBI since far too long. Even though having a great asset, it is not able to do so for various factors.
But would it be fair, Aditya, and good afternoon to you, would it be fair to conflate that? Because we're talking about IDBI Bank, which at this juncture is significantly better off than it was at the low point, where you had double-digit NPAs, etc. So quite a bit of that is cleaned up. But there's also the fact that their name did get tarnished. And so therefore, when you compare it with a BPCL, it may not necessarily be accurate.
So today, IDBI Bank is a very good asset to have. Their books are absolutely very clean. And when you acquire that bank, you get 2 lakh crores of liability. A liability for a bank is like oxygen to the bank per se. So let's say if a CSB would acquire it, CSB would have had a huge expansion over a short period of time. I don't think this is positive for CSB. I think this is not great for CSB that they are not able to get IDBI Bank. Also on BPCL, BPCL is another story in itself. It's also a great asset, but the government has not been able to divest for the last 2 to 3 years because of the conditions that the government really set. So, in my opinion, if the government was to get on board somebody like a Uday Kotak or a Deepak Parekh, the divestment of all of these assets would be faster and would be very clean.
Point. Aditya, thanks so much for joining in and for taking the time and for speaking to us about IDBI Bank. But let's cut across immediately to the inter-ministerial press conference on the latest developments in the Middle East. Listen in.
क्रूड अवेलेबल है, सभी रिफाइनरीज हाईएस्ट कैपेसिटी पर ऑपरेट कर रही हैं. हमारे पेट्रोल पंप्स नॉर्मल ऑपरेट कर रहे हैं, कहीं कोई ड्राई आउट रिपोर्टेड नहीं है. नेचुरल गैस 100% supplied to CNG and PNG customers is made. CNG for vehicles is made. Other important thing that we have been discussing over the past few days is request to the LPG commercial consumers wherever they can shift to PNG connections. So, next please. Yeah. So, जो भी लोग LPG से कमर्शियल PNG पर शिफ्ट होना चाहते हैं, इसके लिए वो CGD कंपनी से कांटेक्ट कर सकते हैं ईमेल के द्वारा, कस्टमर पोर्टल के द्वारा, लेटर या कॉल सेंटर के द्वारा भी. और इन सभी कंपनियों के डिटेल PNGRB वेबसाइट पर भी अवेलेबल है. इस प्रेजेंटेशन में आप देख सकते हैं PNGRB का URL भी है. इसके द्वारा दे कैन कॉन्टैक्ट देयर CGD एंटिटी. And wherever the network is already existing, the connection can be given in shortest possible time. इसके अलावा certain to promote the PNG connections, certain incentives have also been announced by some of the companies. For example, Indraprasth Gas Limited. कोई भी कंज्यूमर, डोमेस्टिक कंज्यूमर अगर 31 मार्च से पहले कनेक्शन लेता है और गैस लेना शुरू करता है तो उसको 500 रुपये का फ्री गैस देने की उन्होंने बात की है. इसी तरह महानगर गैस ने भी कुछ इंसेंटिव्स दिए हैं और सिक्योरिटी डिपॉजिट को भी वेव ऑफ करने का बात कहा है. गेल अथॉरिटी इज ऑल्सो गिविंग सम इंसेंटिव, सो इज द BPCL. इस बारे में ये सारे प्रयास इसीलिए हैं कि ताकि ज़्यादा से ज़्यादा लोग क्लीन फ्यूल पर और PNG पर शिफ्ट हो पाए. इसके अलावा PNGRB जो एक रेगुलेटर है